एवरीवन, गुड इवनिंग टू ऑल ऑफ यू। आज है 15th ऑफ जनवरी 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। एक बार देख लेते हैं मार्केट को फटाफट से। क्रूड ऑयल कल सेलिंग में था। कल का जो परसों का लो बना था वहाँ पर थोड़ा बहुत मार्केट रुक रहा था। अभी भी वहीं पर रुका हुआ है। कैंडल ओपन इक्वल टू लो है। लेट्स सी अगर ये रेजिस्टेंस लेता है तो यहाँ से एक वापस सेलिंग का प्लान करेंगे। कैंडल ओपन इक्वल टू लो है तो थोड़ा सा वेट करना। ये कैंडल लेवल के नीचे क्लोज होती है तो यहाँ पर एक सेलिंग का प्लान रहेगा, नहीं तो फिर थोड़ा कोई नया लेवल बनेगा, वी विल सी दैट। नीचे फिर मेजर सपोर्ट आपका नीचे वही 6,600 के अराउंड ही है। वी विल सी अगर वहाँ पर प्राइस अगर होल्ड करता है तो। बाकी बाकी देखोगे तो मॉर्निंग से इंट्राडे में तो बिल्कुल साइडवेज ही है, एक रेंज बना रखी है 100 पॉइंट की। कोई न्यूज आती है तो शायद उसका इम्पैक्ट होगा, अदरवाइज ज़्यादा कुछ खास नहीं है। इंपॉर्टेंट डेटा है आज, ध्यान रखना। सीपीआई का इन्फ्लेशन का डेटा है यूएस का, और क्रूड ऑयल की इन्वेंट्री शाम को 9 बजे। बोथ आर वेरी इंपॉर्टेंट। इंपॉर्टेंट रहेगा शाम को यूएस मार्केट की ओपनिंग भी। इन्फ्लेशन के डेटा 7 PM पे है तो उसका इम्पैक्ट भी पड़ेगा 8 PM पे जब यूएस मार्केट ओपन होगा। नेचुरल गैस को देखोगे, नेचुरल गैस कल रेजिस्टेंस एरिया पे पहुंच गया था एक फाइनल। वहां से फॉरेक्स में सेलिंग आ गई, एमसीएक्स में गैप डाउन ही ओपन हुआ था, नीचे सपोर्ट था, एग्जैक्टली आया नहीं। एक्सपेक्टेड था फिर से आएगा तो वापस बाइंग करेंगे, बट एग्जैक्टली नहीं हिट किया। बाकी एक नीचे सपोर्ट कल वाला ये 318-19 और 330-32। ओपन इक्वल टू लो, ओपन इक्वल टू हाई बने तो मत सेल करना ऊपर। देखो ये सारे के सारे रेजिस्टेंस जोन है, बट ये सारे के सारे ऑक्यूपाइड हैं अब। ऊपर 358-60 के अराउंड, और ये 348-47। बाकी मैं एक्सपेक्ट कर रहा हूँ कि या तो दो चीज़ पॉसिबिलिटी अगर मैं एक्सपेक्ट करूँ, ये ऊपर जाए और यहाँ से रेजिस्टेंस ले, या फिर थोड़ा नीचे आ जाए डायरेक्टली यहाँ सपोर्ट ले। क्योंकि ये कल ऑलरेडी ना इसका एक बार फेक ब्रेकआउट करके नीचे आया हुआ है, तो आई डोंट नो कितना स्ट्रांग है अब। बट या इट इज़ अ वीक रेजिस्टेंस नाउ इन नेचुरल गैस। बाकी अगर ब्रेकआउट हो गए तो ऑब्वियसली सपोर्ट की तरह काम कर जाएंगे। तो आई एम एक्सपेक्टिंग कि ये कुछ इस तरह से चला जाए, और यहाँ से सेलिंग, फिर या तो ये सपोर्ट या फिर नीचे वाला सपोर्ट, या फिर डायरेक्टली नीचे आके कुछ इस तरह से मूव करे। these two scenario is very good for natural gas in 15-minute time frame. पर डायरेक्टली सेल मत करना, अभी कैंडल ओपन इक्वल टू लो बनी है, ध्यान रखना।
News when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Stephen Carroll.
UK inflation unexpectedly slipped back for the first time in 3 months in December. According to figures released this morning from the Office for National Statistics, consumer prices rose 2.5% from a year earlier, down from a 2.6% pace in November. RBC Blue Bay fixed income CIO Mark Dowding, however, says coming tax hikes may mean this is a high point.
If you look forward from here, I'd say that this could be as good as it gets in terms of UK inflation. We just think that you're going to be stuck in this situation with inflation in the UK 3.5% to 4%. This is obviously a world where inflation is well above the Bank of England's target, and I just think it's going to be difficult for the Bank of England to cut interest rates with that being the case.
Blue Bay fixed income CIO Mark Dowding speaking there. The pound fell on the news, but is currently trading at $1.22, weaker 0.1% on cable. The surprise slowdown may calm investors after a week of turmoil on financial markets that pushed the government benchmark bond yield to a 17-year high.
US consumer prices, meanwhile, expected to show a fifth straight month of increases as the market bets on inflation concerns. Analysts expect the Bureau of Labour Statistics to report a 0.3% rise in core inflation today.
कैंडल ओपन इक्वल टू लो इन क्रूड ऑयल, ओपन इक्वल टू लो पे डायरेक्टली सेल मत करना, फिर रिपीट कर रहा हूँ। या तो ये अपना लो ब्रेक करे या फिर नीचे लेवल के नीचे क्लोज हो तभी सेल करना। अगर ये लेवल के ऊपर चली गई देन अवॉइड, क्योंकि फिर कोई लेवल नहीं बनेगा यहाँ पे। That case market is range bound. ये पूरा ही रेंज बाउंड हो जाएगा इस केस में। ट्रेंडिंग होना है तो ये रेजिस्टेंस जरूरी है, यहाँ से ले मार्केट। या श्योर। कंटिन्यूसली ओपन इक्वल टू लो बनाइए लास्ट 3 कैंडल, करंट, प्रीवियस एंड 315 की कैंडल। लंदन सेशन अभी ओपन है तो वॉल्यूम थोड़ा बहुत लंदन सेशन से आ रहा है। ठीक है, कैंडल अगर ओपन इक्वल टू लो अपना ब्रेक कर दे या फिर लेवल के नीचे आ जाए वापस क्लोजिंग बेसिस पे क्रूड ऑयल में, तो एक सेलिंग ट्रेड बन जाएगा। अगर नहीं होता है तो मत करना, अगर ये लेवल के ऊपर चले जाती है क्लोजिंग बेसिस पे। हाँ, नहीं, ठीक है। आंसर वाली जी साउंड नहीं आ रही, साउंड आ रही होगी, आई होप सो। यस और नो में बता दो, साउंड आ रही है या फिर नहीं आ रही है। अभी आ रही है, पहले नहीं आ रही थी। रिपीट कर देता हूँ फिर से एक बार। क्रूड ऑयल देखो रेजिस्टेंस पर ही है, कैंडल ओपन इक्वल टू लो बनी है, अपना लो ब्रेक कर दे या फिर लेवल के नीचे आ जाए तो सेलिंग बन जाएगी। ओपन इक्वल टू लो पे अगर लेवल के ऊपर निकल जाए तो एट सेल मत करना। नेचुरल गैस नीचे सपोर्ट है, एग्जैक्टली आया नहीं वहाँ, फिर आता है। और ये एक नीचे दोनों ही सपोर्ट जोन है, यहाँ बाइंग कर सकते हैं। सेलिंग के लिए ऊपर लेवल एक कल वाला ही है 360 के अराउंड, और एक ये लेवल कल वाला 347-48 वाला। ये थोड़ा सा वीक अब मान के चलना, क्योंकि कल इसका एक ऑलरेडी मार्केट फेक ब्रेकआउट करके जा चुका है। तो मैं जो एक्सपेक्ट कर रहा हूँ दो चीज़ें, कि ये प्राइस या तो डायरेक्टली यहाँ जाए, यहाँ से सेलिंग आए और फिर इस तरह से, ये एक सबसे अच्छा सिनेरियो रहेगा, या फिर डायरेक्टली आ जाए नीचे और यहाँ सपोर्ट लेके ऐसे जाए। इस लेवल पे थोड़ी सी सेलिंग रिस्की मान के चलिए। अब कर रखी है तो ऐसा स्ट्रिक रखना, क्योंकि 2-3 बार रेजिस्टेंस ले चुका है। कल फॉरेक्स में थोड़ा बहुत नीचे आया तो है, बट ऑलरेडी यहाँ पर देखोगे 2-3 बार रेजिस्टेंस ले चुका है ये, फोर्थ टाइम है रेजिस्टेंस इसका। तो थोड़ा सा क्वांटिटी का ध्यान रखना। बाकी न्यूयॉर्क सेशन ओपन 6:30, 8 PM यूएस मार्केट ओपन, एंड देन आपका 7 PM पे और 9 PM पे क्रूड ऑयल की इन्वेंट्री और सीपीआई का डेटा गोल्ड और सिल्वर को इम्पैक्ट करेगा। एक्सपेक्ट करेंगे वॉल्यूम आएगा वही 5:30-6:30 के बाद।
If correct, the
ज़्यादा बोल नहीं पा रहा हूँ, इसलिए कमेंट बॉक्स में रिप्लाई ज़्यादा करने की कोशिश करूँगा, ठीक है। गाजा की जो न्यूज़ है वो भी कभी भी आ सकती है, तो उस न्यूज़ का इम्पैक्ट देखने के लिए मिल सकता है। सडनली कोई बड़ी कैंडल बन सकती है, इसका ध्यान जरूर रखें, ठीक है। गाजा में अगर सीज फायर के लिए हमास रेडी हो जाता है तो रिमेंबर दिस, एक सडनली कहीं बड़ी कैंडल ना बन जाए। दोनों साइड बन सकती है, वो डिपेंड करता है हमास क्या करता है, सीज फायर करता है या फिर नहीं करता है। और इजराइल का भी ध्यान रखना, इजराइल भी सीज फायर के लिए रेडी होता है नहीं होता, क्योंकि वहाँ के बहुत सारे मिनिस्टर हैं जो अभी करंट गवर्नमेंट में, उन्होंने कहा है अगर सीज फायर किया तो हम रिजाइन कर देंगे। तो बड़ा ही कॉम्प्लेक्स है। अगर सीज फायर नहीं होता है तो इसका पॉजिटिव इम्पैक्ट पड़ेगा, मार्केट मूव कर सकता है अपसाइड। सीज फायर हो जाता है तो कल की तरह वापस एक सेलिंग की कैंडल दिख सकती है। ओके, रिमेंबर दिस थिंग इन क्रूड ऑयल स्पेशली बोल रहा हूँ।
It's going to be a volatile year, and there's going to be a lot of uncertainty there.
All of that policy change is out there for us to sort of take and accept, but I do think it's out there and it is positive in terms of where it's heading.
We don't see inflation accelerating from here like other people. Inflation is going to be demand-driven. I just don't see enough demand.
More towards the cautious side, not the optimistic side.
There are a lot of things out there that I think are going to be adding to volatility, but I don't think that we're headed for a deep correction or a new bear market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now as we come into Tuesday, looking for just a little bit more relief in the equity market and to build on yesterday's turnaround. Equity futures positive by, let's call it 0.5% on the S&P, up by close to 0.7 on the Nasdaq 100. The bigger gains are actually coming from abroad, in Europe, in China. On the Euro Stoxx 50, we advanced by about 1 full percentage point. Overnight in China, up by 2.6%. The why? Bit of dollar weakness in the mix. The why again? This story right here from Bloomberg. According to people familiar with the matter, key members of President-elect Donald Trump's incoming economic team discussing slowly ramping up tariffs month by month.
And Anne-Marie will tell you, we have been talking about this for so long, and she will talk about how we've talked directly about this with individuals that are coming into the Trump administration, and that this is actually just a proposal. It hasn't necessarily even been presented to Donald Trump, which raises the question, are we adequately pricing in just how much volatility there is going to be around the hearings this week, let alone the week after, and all of these different policies that are potentially going to whip around global markets?
I was in Palm Beach this weekend, and one thing that stood out to me is the foreign policy and potentially the trade approach of Donald Trump is going to be summed up in one word: unpredictable. On purpose. There's an element that Donald Trump wants in terms of keeping adversaries and maybe sometimes some of their allies on their toes. But what this story says to me is that Scott Bessent and his wing of the cabinet is winning out at this moment. It's the sausage making in real time.
So we've had 3 different versions of this story over the last 2 weeks or so. We had one from the Washington Post, another from CNN, and another from the team here at Bloomberg. And they all acknowledge that they haven't actually crossed the desk of the President-elect Donald Trump just yet. But I think this one is important. Scott Bessent said this on this program back in the summer. When he was in the running to become the Treasury Secretary, he talked about taking an approach which really lent towards negotiating with a partner. I think that is really important. Another important factor of this is the objective. To put a lid on the prospect of inflation increasing. That tells you they're sensitive about that as they're coming into power.
At a time where even J.D. Vance is talking about bond yields, I would add another element to this, and I think that that is very well said, and that is I wonder how much markets are actually going to be a check on the president. Is this not only a rehearsal for Scott Bessent and what he's going to be presenting to the president, but also a rehearsal of the market's reaction to competing proposals and how it will be taken in markets?
When Scott Bessent was an advisor, before he got tapped to become the incoming Treasury Secretary, he was a little bit more loose with his words, obviously, because he could be. And he talked about Trump. When we pushed him on this idea of a tariff ring around the United States, he said that is an opening gambit. That is the maximalist approach. His idea was 2 to 5% every month. Xi Jinping, call us when it starts to bite.
Got a new question as well. Does Elon Musk get TikTok? Check this out from the team here at Bloomberg. Chinese officials evaluating a potential option that involves Elon Musk acquiring the US operations of TikTok if the company fails to fend off the controversial ban of the short video app. You're raising your eyebrows to this one. What did you make of that report?
Number one, does that mean that they're going to lower the price and basically sell it to Elon Musk as a fire sale is basically a token of their goodwill because they also have a good relationship with Elon Musk, with Tesla in China? Is this essentially becoming a state negotiating tool, or is this actually about ownership of TikTok? And number two, is this a sort of concession that China is willing to sell it at all, which is sort of interesting ahead of where all teenagers are freaking out because TikTok is going to get banned on January 19th?
I think we can learn a lot from this story, and you brought up a good point. Is now this a point of leverage for the Chinese government to use with the Trump administration? And clearly they would choose someone like Elon Musk, who is the self-proclaimed first buddy, but also someone they know because of his work and dealings with China and Tesla. Can he do this deal alone? I talked to a source yesterday, and what I'm hearing is that there's lots of other people that are also interested in this. Does he team up with someone like Meta? And what kind of antitrust rules could potentially come into play, given the fact that they already own social media apps?
More on that story a little bit later. Equity futures right now on the S&P positive by 0.5%, bouncing back. We'll see if this move sticks. Joining us through the next 60 minutes, Stuart Kaiser of Citi, seeing rising bond yields as a positive for equities. Terry Haynes of Pangea Policy as Trump's team considers a gradual approach to tariffs. And Matt Lazzetti of Deutsche Bank calling for no rate cuts this year. We begin this hour with stocks rising and the dollar weakening following a Bloomberg report that President-elect Donald Trump's team is considering a gradual ramp-up in tariffs aimed at boosting negotiating leverage and avoiding a spike in inflation. Joining us now, Stuart Kaiser of Citi. Stu, good morning to you, sir.
Good morning.
It's good to see you. What did you make of that report? How are you thinking about the trade approach from the incoming administration?
I mean, I don't want to call it best case, but that's what the market's hoping for, right? Is kind of a more rational, kind of gradual approach to this. I think one of the reasons markets have been a little weak to start the year is I think people are a little concerned about what next week's going to look like. What kind of headline risk do we face? And if you're getting things that seem a little bit more measured and balanced, I think that's probably a net positive for risk sentiment.
The source of the weakness has come from the bond market. You've been focusing on the why. You've said a million times that higher yields, I'll take that, so long as it means it's underpinned by stronger growth. Is inflation a factor in this boost in yields that we've seen?
it's hard to kind of tease out, but if you look at the move in 10 years, let's say the 10 years up 40 basis points or so in the last month, real yields are 30 basis points of that, break even's about 10. So that quick and dirty would say about a quarter of the move has come from the inflation side of the ledger. But I think if you were weighing the risks, more of the risk aspect, I think, has come from the inflation side of things. But yeah, I think from our perspective, as you know, I think a 5 handle on 10 years is better than a 3 handle on 10 years if you're an equity investor, because to get back down to that 3 level, you really need weak growth. So, definitely don't want to completely dismiss the risks of the speed of the move we've seen in the 10-year yield, but we do think it's coming from a more positive place than maybe the markets are giving it credit for.
Which raises a question: which are the areas that are most sensitive to higher rates? In other words, the other way to say this is, which are the least sensitive to it and can still continue to lead performance at a time when there are worries about longer-term borrowing costs and what this does to, say, small caps and mid caps and the like?
Look, I think there's a couple beneficiaries. One's banks, and people already love banks, so that's been rather convenient. I think other areas, people are probably a little more comfortable in a safer credit risk kind of equity. So your kind of larger cap stocks have benefited a little bit. Last week was really interesting because what you kind of saw is everything sold off, but like the equal weighted S&P outperformed the cap weighted S&P. So people kind of wanted to still be in large cap, but they also moved a little bit down the cap structure. I think what you're seeing there is a trade-off between I want to be in some more value stocks because value benefits from higher yields, but I don't want to go all the way down to that small cap stock quite yet. So people kind of moved a little bit down, they hit a fence and they stopped. And that fence seems to be around the top 500 U.S. stocks. So what's benefiting its banks and its value mainly. And then I think that move has been limited by the fact that people are still a little bit concerned about what's going on in the background, and they kind of want to still stay a little bit higher in the quality spectrum if they can.
Some of the main drivers of growth have been big tech, right, for a number of years. And yesterday we saw an interesting development, an ongoing development over the past week, which is Nvidia and Apple really selling off pretty significantly. There's some conflation here that it's tied to yields. There's some conflation that it's maybe tied to policy. What's sort of the main driver? How do you view this at a time where a lot of people view that as the ongoing ballast of market performance?
And we would agree with that. I mean, I think if you look at earnings growth this year, S&P's at 15%, Mag 7's forecast to earnings more than 20%. So that's still kind of the core driver of your earnings growth story in the U.S. I think what you're seeing there and what you've seen for the last few quarters is going into the quarter, there tends to be, even within the Mag 7, a couple favorites and a couple kind of less favorites. And it could be that, the product cycle on the Apple side maybe is not convincing people. Nvidia, I mean, their leadership was basically in a headline war with the Biden administration last week. So, there's clearly some policy risks that are going on there. So this is probably, in my view, those things have performed so well. You're going into an earnings season. You do have some policy risks on the sides, and that kind of maybe gives people a little bit of a trim up on risk ahead of earnings and the inauguration.
Stuart, you sound very constructive about growth, but the fact of the matter is, if we're in this moment of so much unpredictability and whipsawing sometimes of headlines that are pushing markets around, that in itself, can that hurt growth? Could it mean paralysis for some businesses?
I think it definitely could. And the flip side of that argument, if you want to come up with one, is if I'm worried about tariffs, I'm going to front load my inventory cycle and I'm going to get some stuff done now. But yes, I mean, obviously the policy uncertainty can kind of play into what CEOs are feeling and thinking, because if you believe the Trump positive growth impulse, a lot of that is just somewhat blind faith that he's going to be positive for the business community, right? He's going to deregulate. He's going to give us more clarity. He's going to allow businesses to kind of invest for the medium to long term. But I agree with you. I mean, a lot of PMs have told us, I'm going to run long the dollar. I'm going to run long risk up until about the inauguration, because I'm not exactly sure what next week is going to look like. And for that reason, I need to be a little bit careful on how I manage risk. So, yeah, I think it can be.
So what do people do next week after January 20th?
I think a lot of it's going to have to do with the headlines. I think if you get a more gradualist approach on some of this stuff, going into earnings, people are going to be more comfortable having risk on. I think if you get a full bore, hardcore on the tariff side and very disruptive, then people are going to pull back on risk. And it's interesting next week, there's not a lot of specific event risk priced in for the inauguration. That's also a holiday, obviously. But the rest of the week is at a modest premium to the rest of the month, if that makes sense. So people are not sure when the news is going to come and what it's going to look like. But they're basically saying, okay, fine. From Tuesday to Friday, I need to add 8 or 10 basis points of implied move into the vol market because I'm just not sure how this is going to come out. And I agree with you. I mean, the uncertainty aspect and the effect on on business is real. And I think actually we saw that during the Biden administration as well.
I think we all know we're going to get a string of executive orders at some point in the next week or so. We just don't know on what and how much of it we're going to get. Lisa, it's been a fascinating change, though. In early November, we all talked about this positive growth shock for financial markets that we needed to digest. Bond yields were higher. Equities were up alongside them. That correlation has just totally broken down coming into the new year. And if you looked at equities at one point yesterday, we completely wiped out the post-election Trump bump, just like that.
This is also, though, coming when the rise in yields isn't just completely, indisputably a positive thing coming on the heels of growth. Real yields, which is basically the yield term premium, have increased dramatically, particularly at the long end, which raises a question about deficit concerns and how much supply is as much of a part of that yield rise as growth is.
And unlike the Washington Post story that talked about tariffs, we have yet to see a truth or a tweet that this one is wrong. And I wonder if that is because Trump is recognizing that the markets don't like the tough talk on tariffs right now.
Give him a chance. And those tweets and those posts carry a little bit more weight from next week. Stuart, it's good to see you.
Thank you.
Stuart Kaiser of Citi there. Equities at the moment, as I say, positive by 0.5%. Busy week kicks off a little bit later this morning. We will get PPI, then tomorrow morning we will get CPI, and then the bank earnings tomorrow morning. Tons of them on Wednesday, a few more on Thursday. With an update on stories elsewhere this morning, let's get to your Bloomberg brief and cross over to Danny Berger. Hey, Danny.
Hey, John. Southern California faces another round of dangerous fire weather. The U.S. Storm Prediction Center warned of wind gusts exceeding 50 miles per hour through tomorrow. The winds may limit opportunities for firefighters to make progress against the Palisades and Eaton fires from the ground and the air. The blazes have scorched nearly 40,000 acres and leveled entire neighborhoods from the Pacific Palisades on the coast to Altadena at the feet of the San Gabriel Mountains. Joe Biden and Donald Trump both say that they are optimistic about a ceasefire between Israel and Hamas. The leader said a deal could be agreed to within days, pausing the more than 15-month-old war in Gaza. Israeli officials said that they presented a detailed outline to Hamas during indirect talks in Doha. Sources say the first phase would involve a 42-day ceasefire and the release of 33 Israeli hostages in exchange for Palestinian prisoners. Starbucks rolling out a new code of conduct across its cafes across North America. The coffee chain is reversing a policy that allowed anyone to use its cafes, patios, and restrooms, regardless of whether they made a purchase. The company is also reintroducing ceramic mugs and expanding its free refill policy for non-rewards members. And that's your brief. John.
Danny, thank you. Appreciate it. More from Danny in 30 minutes' time. Up next on the program, the tariff agenda taking shape.
Tariffs cause a stronger dollar, so a weaker dollar with tariffs is it's an economic abnormality.
There would be income from the tariffs, right? So that's a big number.
That conversation up next, live from New York this morning. Good morning.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
Stocks positive here by 0.5% on the S&P 500. Bond yields contained for now. We'll see if this sticks. Your 10-year 478, your next stop later this morning. PPI data in America, the appetizer for the big one tomorrow morning. CPI just around the corner. And the surveillance this morning, the tariff agenda is very much taking shape. Here's the latest this morning. President-elect Donald Trump's economic team weighing a gradual approach to its tariff policy, ramping up the levies month by month to boost negotiating leverage and avoid a spike in inflation. Terry Haynes of Pangea Policy writing, markets likely are hit with downside reality as it becomes even clearer that tariffs won't be all one or the the other. Neither all blustery overkill nor all gradualist bark with little bite, but a mix of the tactical and overblown focused and not. Terry joins us now for more after that very helpful quote. Terry, welcome to the programme, sir. How much weight then do you put on our reporting this morning? The Trump team is putting this together. The president-elect himself hasn't looked over it. What do you think he'll actually decide on?
I think you've judged it, and your reporting has judged it appropriately. This is in the early stages. Trump hasn't signed off, et cetera, et cetera. As the quote you put up indicates, I've been on more on Team Gradual for quite some time. But I think what will end up happening is that the blustery rhetoric will ramp up to, frankly, to obscure the relative gradualness of, there's another one, right? Relative gradualness coming in. And also I note that in your reporting that the word emergency is used, an economic emergency. And I've been telling markets for, I think, since before the election, but certainly in the last 2 months, to look for Trump using more aggressively emergency powers. And I think that'll discomfort markets some. They've been soft-pedaled by the previous administration. And Trump, for good or ill, is going to be much blunter about where we are geopolitically and economically.
Terry, when you look at our reporting, and you really coined the term the cabinet of rivals, would you say that Scott Bessent and Kevin Hassett are the ones that are winning out?
I certainly think they're doing everything they can to win out, including putting things in the press. The thing I would caution, though, is markets tend to make the same mistake over and over about Washington. The same mistake here is assuming the Treasury Secretary will go tackle the president and make sure that he doesn't do anything crazy. That's exactly where markets were 4 years ago with Janet Yellen. They thought that Yellen was going to be the centrist that took the progressive edges off what Biden had made deals with his progressive wing on, and that turned out very much not to be the case. But
Terry, if I could just interrupt you for a second, Janet Yellen is not Scott Bessent. Janet Yellen did not come in with a relationship that Scott Bessent has had for years with President-elect Trump. And at the end of the day, what we saw from Trump 1.0 is that he was regulated by the stock market. You would see some reports leaked, but then quickly changed because of the reaction of that leaked report to the stock market. Do you still think potentially Trump 2.0 is going to be regulated by where the Dow Jones Industrial Average is trading at any day?
Oh, I think Trump will be very influenced by what the markets think about what he's trying to do. At the same time, I think what's going to end up happening is, markets always think that means they have the whip hand over Trump. I don't think that's the case, particularly as it goes to the geopolitics. And geopolitical concerns are going to play a much bigger role in this, in the economic views of this administration than they did the first time out.
In the meantime, people are looking to January 20th as the real event risk. That's what we were just hearing from Stuart Risk. And when I say people, I'm talking about people in markets. What kind of risk or sort of illumination do you think we're going to get this week with some of the hearings down in Washington, D.C. to confirm some of the potential nominees?
Well, I think people have been sitting in the markets, have been sitting around for over 2 months now, wondering what it is that Trump's going to do, and they will certainly get some illumination over the next few days. I expect the Senate to question Secretary-designate Bessent very closely on exactly what the administration policy is going to be on day one and going forward, and talk about a lot of the linkages that you brought up in the Bessent clips coming into this segment, how he feels about strong versus weak dollar, how tariffs are going to play into that, and frankly, what his relationship with the president is going to be.
Do you think that that's really going to be the most seminal hearing, or do you think that potentially there are others, whether it's Pam Bondi or whether it's even OMB nominee Russell Voigt, who has some pretty radical proposals for how to adjust the budget in the United States?
I think Bessent by far is the most immediate impact on the markets, but I think that the OMB hearing will have a lot of impact as well, frankly, because one of the things, the big thing I see lurking out there for markets in the negative is what the Trump administration is going to do about fiscal debt and deficit and whether it can do anything. We're in a world right now where debt service is the biggest expenditure, where nobody's got the political will to do anything about fiscal debt and deficit. And you've got a lot of counter pressure building, not only ramping up defense spending, but the LA wildfires alone and the estimates of how much money that's going to take, will play a major role in what tax cuts look like and what the fiscal policy looks like.
Terry, do any of Trump's picks not get through?
Yes.
Who?
I think I don't have one that is absolutely doesn't make it, but I think Hegseth has a very tough time. I think Gabbard has a very tough time. I think Bob Kennedy still has a tough time.
But wouldn't we know at this point, especially for someone like Pete Hegseth? I mean, his hearing is just in a few hours. Why go through with it if they didn't think that they have the votes?
Well, they don't know whether they do or not, frankly, so it's a little bit of a dice roll. But, the thing with Hegseth is that this will be an interesting test, Hegseth, of the seriousness of Trump defense policy. You put somebody in there who, as Hegseth says in his opening statement, apparently is a change agent more than anything else. That's fine. But the concern that comes from the Senate fundamentally is, change agents can't run bureaucracies, can't run the department, can't direct things in a particular way efficiently and effectively. So that's a lot of the problem with Hegseth, frankly, and what we're going to see with Hegseth really is a commitment to Trump defense policy and exactly what that is, frankly.
Hey, Terry, appreciate your time. Terry Haynes of Pangea Policy there on the latest down in Washington. There are going to be a couple of contentious hearings in the next several weeks, and that one in a few hours' time is going to be one of them.
It absolutely is going to be contentious when it comes to Pete Hegseth, and Axios has his statement in full, and he's talking about this idea of warrior and this idea of coming back into the Pentagon. When he speaks today, Pete Hegseth, I think you need to remember this was an individual who was on combat tours. So he'll be speaking to those men and women that are on the front lines.
It's also going to be interesting to see how much pushback Donald Trump gets from fellow Republicans. You talk about how everyone is a Joe Manchin, or at least the role that Joe Manchin played to Joe Biden. Everyone will be that, basically, to President-elect Donald Trump. It just raises this question. Is this market adequately pricing in the potential risks when you have the dual threats of basically upside surprise to inflation with some potential proposals and an expansion of the budget, or downside surprise with a more stringent use of tariffs and some other potential trade protocol? This is the reason why there's this jumpiness on any headline, and we've seen that this week.
I saw a ton of notes yesterday from fixed income strategists saying, don't try and fade this move in the bond market, don't touch it. I've heard a lot of people on this programme talk about the prospect of high yields because of trade worries. Then Deutsche Bank came out yesterday and said break-evens are still not pricing tariff risk appropriately. So there are some people who believe that this run-up in yield so far has nothing to do with the risk around trade, because the risk around trade is not clear at all.
Yeah, the head of the IMF, Kristalina Georgieva, is talking about how this is even the threat of tariffs is causing this backup in yields. However, if you take a look at real yields, basically inflation stripped out, the idea of some term premium baked in, 30-year Treasury real yields have risen to the highest since 2008. This is something else that's driving that, and I think that has to be recognized.
Looking ahead to some very interesting hearings through the next couple of weeks. Watch out for Hegseth, fantastic broadcaster. The presentation's going to be very, very good here. The back and forth, that guy's sharp. It's going to be fast.
He's a professional
very much so
at presenting. So it's going to be, I think it's going to be contentious, but he will come prepared.
One to watch a little bit later. One to watch up next on the programme, Dan Ives of Wedbush on the chances that TikTok US could be sold to Elon Musk with China's blessing. We'll get into that in just a moment. Equity futures this morning, positive by 0.4% on the S&P. The dollar, just a little bit weaker. The euro, a little bit stronger. Euro dollar, 102.57. big turnaround in the stock market yesterday. Let's see if we get some positive follow-through. So far, so good. Equities up by 0.4 on the S&P, up by 0.5 on the Nasdaq 100. In the bond market, 2-year, 10-year, 30-year, shaping up as follows. Check out a 10-year maturity. Yields just about unchanged. 478.21. I mentioned some commentary coming from the South Side. Fixed income strategists yesterday saying don't touch this. Barclays, we believe it's a bit early to fade the long end sell-off. BMO, we won't attempt, Lisa, to fight the move.
At a certain point, how much are they conditioned by the past couple of weeks? Basically, anyone who's tried to fade this has gotten their face ripped off. It's been a very difficult one. I will say there is this difficulty of what's driving it, right? You pointed to this idea that Deutsche Bank pointed to, which was that basically it's not on rising inflation expectations necessarily, putting aside the University of Michigan sentiment survey. But if it's coming from growth, that's a positive. U.S. small business optimism just came out at the highest level going back to 2018. There are a lot of facets to this, some good, some bad.
Self-correcting, self-limiting, afraid we've heard on repeat over the past week or so. Goldman had this to say in the past week. We don't think the yield move has yet reached the point of becoming self-correcting. To your point on the economic data, where is it going to be self-limiting? In the markets? Have you seen enough damage to risk yet? In the economy, the data still looks pretty decent, soft and hard.
So it goes to this ultimate question, which is, are rates restrictive? And Matt Lazzetti, Bank of America, coming out and basically saying no. They're going to take a sabbatical this year because essentially this is not showing restrictiveness anywhere. And it goes to the idea of, are these rates sustainable? So don't buy this dip because this is the new reality and companies are doing just fine.
Matt Lazzetti of Deutsche Bank coming up a little bit later this morning. Look out for that. Just want to finish on foreign exchange. The dollar a bit weaker today. Euro stronger. Euro dollar was totally unchanged in yesterday's session. Euro dollar this morning, 102.59, positive by close to 0.1%. Under surveillance this morning, Southern California bracing for another round of dangerous winds as firefighters struggle to contain fires across the region. Winds exceeding 50 miles per hour are possible across Los Angeles and Ventura counties today into tomorrow.
It's really tragic, and people are looking at this. There is some insight into what potentially caused it, including some fireworks during the new year that never were fully put out, which is one of the potential consequences of very dry weather. Now the question is, how do you pay for it? How do you recover? And then the politics, which have gone back and forth and gotten pretty aggressive.
The politics will be one thing, but putting that aside, how much this is going to cost? A report last night coming out, new estimates from Wells Fargo and Goldman says that a significantly exceeding the prediction that already we had last week. I mean, we are talking about now as much as $30 billion. And this is before potentially these fresh winds and fresh fires. This can be a lot more expensive than even that.
The rebuild effort and the cost of it is going to be absolutely massive. This is not the only issue that we have to face. We've also got the hurricanes and the recovery in several states across the southeast that we were talking about only several months ago. They're still in a mess down there too.
So this goes to the point that Terry Haynes was talking about. At a time where you have additional costs that are going to be incurred with different natural disasters that are coming with increasing frequency, how do you do that? What kind of fiscal space do you have to do that if you're already contending with a deficit and higher benchmark yields?
Well, this is why Speaker McCarthy last week said to me, you have to come out of the gate and say, declare a disaster for California, put money towards there and also the border, and then do one reconciliation package. And he thinks that gives them a little bit more wiggle room and fiscal space to do so.
We'll focus on the rebuild effort a little bit later this morning. Want to bring you an update on the latest story moving markets. Bloomberg reporting that President-elect Donald Trump's team is considering a gradual ramp-up in tariffs aimed at boosting negotiating leverage and avoiding a spike in inflation. Sources saying one idea involves tariffs increasing by about 2 to 5% each month.
Not really surprised about this because Scott Bessent on this program, when he was an advisor to President-elect Trump months before the election, said this is how he using tariffs. This idea that you call Xi Jinping up and you say, we're going to put on tariffs every single month. It's going to add another 2, 3, 4, 5%. Let us know when they start to hurt and you're willing to come to the table and do a deal. What I think a lot of members of the incoming Trump administration will say to you is that Trump is not against trade, but he wants a realignment to make sure that the trade is fair. And right now, they do not think that China is playing by the rules.
How much is this basically different advisors petitioning the markets and figuring out, look, I'm going to do an audition, see how this reads through into the market. And Trump, this is the response. So which do you want? And I wonder how much that's sort of an element here as well.
I don't know which advisors were behind the Washington Post story or the CNN story for that matter. I do think it's important that these are key economic advisors. This is Hassett. This is Bessent. They're going to be the key players in this administration. Whether the president listens to them or not is going to be the key factor in all of this. And that's why you're all sort of in this new world right now, the old world of Trump Volume 1. You have to wait to hear what the incoming president has to say on the issue himself.
Absolutely. He's going to be the final decision maker, but he will convene all of these people, as Terry Haynes have called them, a cabinet arrivals. You're going to have those that are a little bit more outspoken about tariffs. I'm thinking of Howard Lutnick.
Sure.
You're going to have those like Jameson Greer that thinks we need an absolute full decoupling from China. And then you're going to have others that want to take a little bit more of a nuanced approach, like Scott Bessent and Kevin Hassett.
Lots to get through this morning, including this story as well. Chinese officials evaluating the potential sale of TikTok's US operations to Elon Musk. Sources telling Bloomberg that under one scenario being discussed, Musk's X would take control of TikTok US and run the businesses together. TikTok denied the report, calling it pure fiction.
Well, TikTok still wants to remain autonomous in the United States. They do not want to divest. What is so interesting is ByteDance even aware that Chinese officials are having this conversation and basically handpicking who they deem respectable in their minds to take on this company? Based off what I'm hearing, there are other people who are also interested in potentially buying TikTok. I would look to the likes of individuals like, well, Kevin O'Leary posted it on Twitter, but even other people like Peter Thiel. Where is he in all of this? Where is Mark Zuckerberg, who's made now a few trips to have dinner with the president-elect, and then went on Rogan and said, we need to make sure that U.S. data, U.S. tech stays in outside hands of governments, especially our adversaries. What I find so interesting is, one, why is the Chinese government handpicking who they want to control this company? And two, if it is sold, do they get the algorithm or do they need to develop their own?
We're a private company. There's no national security risk here. There's some separation between us and the Chinese government. Chinese officials turn around and say, this is who you could be sold to. What does that tell you about the situation?
That this is being used as a carrot in negotiations. And I think that that is a change in terms of what's national security, what end up as being a negotiating tool. That's one thing that people are going to be looking at.
Let's stick with TikTok. Dan Ives of Wedbush weighing in on the looming ban, writing the following. There is much more at stake here than just TikTok's fate, as the US-China high-tension relationship are clearly at play, heading into a very important tariff discussion and negotiations for the Trump administration in the months ahead. Dan joins us now for more. Dan, welcome to the programme, sir. Just want to start with your reaction to our reporting overnight. What do you think?
I think it makes a lot of sense. I mean, ultimately, it comes down to this 19th that's coming around in terms of January 19th. The Supreme Court ultimately upholds that ban. Behind the scenes, Trump administration working to sort of look at fixes. And I think when you look where Musk is in terms of just how close to Trump, they also trusted within China. This looks like what could be a strategic road for ByteDance, that they'd sell this without the algorithm.
So what does this mean about either national security or potential tit for tat? What's being used, the sort of conflation of public and private in a new way that, frankly, the business community has to reckon with?
Yeah, I mean, look, I think, Lisa, the issue here is the last thing that Trump administration wants is this to come out day before inauguration. Because it does sort of set this off to a bad start in terms of negotiations with China on tariffs. That's why I think they're looking for ways, instead of just basically telling the DOJ not to enforce these actions when it comes to Google, Apple, and others. It would be a lot easier if the Supreme Court ultimately upholds the ban, that Musk, just given the ownership of X, given obviously the strong understanding of China and the relationship, within Beijing, this could be a first step. But it's going to be something we've talked about on the program. This strong alliance, the bromance between Trump and Musk, is going to have a lot of sort of twists and turns. This could be the first start.
It raises a lot of questions here also about antitrust and what's acceptable among social media tie-ups and what's not. Is this just a matter of who gets closest to Donald Trump is sort of okay to be able to make these types of tie-ups, and those who are not are basically on the outside and won't have access to any potential acquisitions?
Yeah, and look, you're seeing that there's sort of red carpet in Mar-a-Lago, right, from Zuckerberg to others. And I also think the important thing is Khan's done at the FTC. So I'm not necessarily saying it's going to be an M&A party here, but with her done at the FTC, that changes everything. And I think it just shows that they know ultimately they're going to need to make some deals. Everyone's trying to jockey for position. When it comes to TikTok, I mean, this would be a golden asset. It would be sold without the algorithm. If it was sold without the algorithm and the hands are forced, 40 to 50 billion would be the price tag. Musk would probably get outside money. You talk about Thiel, where's Larry Ellison involved? Obviously a close friend of Musk, and obviously the relationship with Oracle. There's a lot of areas that this could take.
Dan, though, if TikTok is a national security concern, and we've heard that even from incoming officials that are going to be surrounding President Trump, like Congressman Mike Waltz, like soon-to-be Secretary of State Marco Rubio, then why would they bless a deal that the Chinese Communist Party is basically hand-picking?
Yeah, look, I mean, that's going to be some of the questions. The one thing I would say is, Trump, who obviously was for the ban, against the ban here, if it was under what you say, like an Oracle database and under some sort of, Musk ownership with oversight, it would have to be blessed, obviously within DC and the Beltway. But look, this is tricky. It's all a game of high stakes poker, but it all starts with TikTok. Supreme Court upholds that ban. They're going to look for ways behind the scenes. And I think that's why, Trump looks right to the right of him. It's Musk. And this could be a potentially viable option, even if it's a partnership.
Dan, we also see a number of TikTok users already going to some similar social media apps like TikTok. What's in it for Elon Musk to buy it, especially if the algorithm is not included?
Well, for Musk, if he got TikTok, it would be a game changer. The value of X would probably double off the, just off the start. So I think Musk recognizes this is something that would be just a rare, unique opportunity to get not just 170 million in terms of consumers, but what that could ultimately do from a content perspective if their hands forced in terms of ByteDance. And it comes down to, that's why they're going to say what they're going to say publicly. Behind the scenes, I think it's a totally different situation in terms of where this is all playing out.
Dan, can they afford it?
Well, they could afford it when they get outside investments. Musk would not do this solely, and that's why there'll be some consortium that would have to be approved. If we kind of took this step forward, that would have to be approved by DC, by I think those that need to sort of check the box on a deal like this. And that's where when you look at Thiel, Ellison, others within that circle of Musk, clearly could be involved.
Where do you think it would leave Meta?
On the outside looking in, right? Zuckerberg, obviously he's already gone after jobs. He's gone after Cook, and now you sort of look at Musk as sort of the next step here, right? So Musk and Zuckerberg are at the opposite sides. The problem is that Zuckerberg wants to get in on that inside, but Musk is really the one that has that, unique platform, but also he's the whisperer for Trump. And that's why there's only one person that would be approved by China. It would be Musk, given his strong relationship within Beijing. That's the important thing here. You guys all talked about it. This would be handpicked by Beijing. There's only one individual that they would handpick. It's Musk.
Dan, appreciate your time, sir. As always, enjoy Milan. Atalanta Juventus, I think, is tonight. Reach out to Steve Pagliuca, owns the club. I'm sure he can get you some tickets. Appreciate it, Dan. It's good to see you. Dan Ice, thank you.
Living vicariously through him?
I wanted to do that,
100%.
sure. Yeah, why not? Yeah. Why not? It's a few hours away from the city centre.
Yeah, I know. You've already looked into it. And
get the car over. Anyway.
He's jealous of you. It could have been a nice pre-Davos trip.
Can he afford it?
Well, what I find so concerning about this is that how is this going to acquiesce the concerns of individuals in Washington who are concerned about national security when China is saying this is the only guy we're willing to sell it with? That in itself should raise a tremendous amount of questions. And I know their FTC is going to be handing over the reins to Andrew Ferguson. Maybe a deregulatory approach, but not when it comes to big tech. That's not in the cards. And I think Lisa raised a very good point when it comes to antitrust issues.
A big story for us this morning and some fresh Bloomberg reporting on the subject driving things along. Equity futures this morning, positive as well by a few tenths of 1% with an update on stories elsewhere. Here's your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, good morning, John. Nvidia CEO Jensen Huang is visiting China this week. It follows the U.S.'s new limits on AI chip sales, which Nvidia has criticized. China is also currently investigating the company's domestic presence. Huang's visit may involve meeting with Chinese officials, but his plans are unclear and Nvidia has declined to comment. Nvidia CEO is expected to arrive around January 15th. Elon Musk will continue to have major access to Donald Trump when he takes office next week. The New York Times reporting that Musk is expected to use the office in the Eisenhower Executive Office building, which is adjacent to the White House. Musk is launching the Department of Government Efficiency, a task force which aims to slash government spending in the Trump administration. It's not clear whether Vivek Ramaswamy, Musk's partner in leading the project, would also have office space in the Eisenhower building. Greenland's prime minister reportedly says that he wants closer ties with the U.S., highlighting the Arctic island's push for independence. President-elect Donald Trump has been repeating his ambition to take control of the self-ruling territory of Denmark, which is home to 57,000 people. House Republicans have introduced a bill to begin negotiations called the Make Greenland Great Again Act. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next, paring back rate cut bets.
The Fed has got to get more strategic in its approach and has got to stop being excessively data dependent. When you're data dependent and you're just looking at the future through the lens of the past, you will get more and more confused as we go through these changes.
That conversation up next, live from New York City. You're watching Bloomberg TV.
This is going to sound crazy, but I know these attack vectors. Oh, had a little upgrade, have we? Okay, so that's how you want to play.
Equities this morning, and good morning to you. Positive by a third of 1% on the S&P 500. The bond market settling down. Yields a little bit higher, but not even by a basis point. 478.42. And the Savannah's this morning, paring back rate cut bets.
The Fed has got to get more strategic in its approach and has got to stop being excessively data dependent. When you're data dependent and you're just looking at the future through the lens of the past, you will get more and more confused as we go through these changes. They've got to either take the approach of this is what we think the baseline is, alternatively, we're not incorporating any new policies. The muddled middle causes all sorts of spillover effects.
So here's the latest this morning. Investors waiting for PPI out at 8:30 Eastern Time and CPI out tomorrow after recalibrating bets on the Fed's rate cut path. Matt Lazzetti of Deutsche Bank writing, the data supports our view that with growth sturdy, the labour market resilient and inflation sticky, there may be limited scope for the Fed to cut rates this year. Our baseline remains that the Fed will keep rates on hold into 2026. Matt joins us now for more. Matt, good morning. It's good to see you.
Good morning.
This is not a new call.
It is not.
This call a number of months ago, so I want to give you credit for that. What did you see at the time, and how are things playing out now?
Yeah, so we adopted that call back in November. It was after the election, and so I think expected policy changes were part of that. But I think if you looked at the economy in the back half of last year, and certainly what we've seen so far, growth has been strong. We're running growth at 2.5% to 3%, a consumer growing at 3%. We thought that the labor market was showing signs of stabilizing and bouncing back, and I think we certainly got further confirmation of that on Friday. And you had evidence that inflation was sticky. If you look at core PC inflation, it decelerated only very modestly by a tenth or two last year. Super core inflation was actually higher last year than it was the previous year. And so with inflation sticky, growth strong, labor market resilient, and policy changes that could be adding fiscal stimulus, tariff effects, immigration policy that could all be inflationary, we just didn't see scope for the Fed to be cutting rates this year.
Does that mean that you don't think that rates are restrictive where they are?
I think there's not much evidence that they are restrictive enough. So our baseline view is, the nominal neutral rate's around 3.75%. That's well above what the Fed has kind of benchmarked it at, though it's very close to what the market's pricing at the moment. And with that, I think the Fed needs to maintain some level of restriction. And so we have seen the labor market slow. I think that's been a good development from the Fed's perspective in terms of inflation. Governor Waller was really emphasizing that part of it. But when we look at other elements, consumer spending has not slowed at all. I think we'll get further evidence of that for retail sales this week. So I think it's restrictive. Is it restrictive enough to get inflation all the way down to 2%? That's still an open question.
Which is the reason why you have an increasing number of people not only taking a rate cut off the table, but also talking about the prospect of some sort of rate hike by the end of this year. Do you think that's feasible, or is that a step too far?
It's definitely not part of our baseline at the moment. We still expect that the next move is a rate cut, although we don't expect it until out into 2026. Is it possible? I think absolutely. What would you need to get there? I think you need that the concerns around the labor market fully dissipate for the Fed. So they can't be worried about upside risks to the unemployment rate. Could we get there in a few months with the unemployment rate coming down to 4%, job gains bouncing back? Certainly that looks a lot more plausible after Friday's jobs report. I think you also need to see inflation picking up to 3% or above. So accelerating, not just remaining sticky at these levels. The third thing would be inflation expectations. We have seen recent evidence of that picking up. University of Michigan showed this big uptick last Friday. The New York Fed's gauge actually picked up a little bit yesterday. So it's something to keep a watch on. But for the Fed, they first, I think, would use forward guidance, take out the rate cuts that they have in their dot plot, see what that did for financial conditions. We are seeing higher rates now tightening financial conditions a little bit. So the first thing for the Fed would be to guide towards rate being on hold before they contemplate rate hikes.
In your note about Trump 2.0, you talk about growth too fast, inflation too furious. What part of Trump's policies do you think are going to be the most inflationary, given the fact that the sausage making we're all witnessing in real time, and it's whipsawing based off report after another report?
Yeah, no, absolutely. I think it's important in thinking about the outlook. One is, what do we know about the economy prior to the policies? And there, it's kind of everything that I just outlined. Growth was stronger, labor market resilient, inflation stickier. There's still lots of uncertainty about what tariff policies. We got some news or information overnight that it could be a more gradualist approach. When we think about our forecast, we did bake in tariffs. We have a 20 percentage point increase in tariffs on China. We have some increase in tariffs on European auto imports this year. And then we have a universal baseline tariff at a small amount next year. That is the most inflationary part of our forecast, but it only adds about 0.2 to inflation. Is there scope for that to be more, depending on if they come in more aggressively? I think absolutely.
What about Trump's immigration policies?
Absolutely has a chance to be inflationary as well. We do not have anything baked into our forecasts. From an immigration perspective, we essentially have immigration flows returning to where they were from a pre-COVID perspective. But when you look back at 2023, the biggest shock or surprise to the economy was this big influx of immigration flows and what that did to the labor force. We think that subtracted 25 to 50 basis points from core PCE inflation. So it was a meaningful disinflationary force. It was an important factor that brought the labor market into better balance without the unemployment rate moving higher. If you unwind that, it would be inflationary.
Do you think that supply side story distorted the Fed's view of how tight they actually were?
I think absolutely. I mean, we weren't building it in. We were not anticipating it. So we were not expecting that you'd see growth closer to 3%, but that happening importantly with disinflation in the background. That came as a big surprise, was the biggest surprise for the economy in 2023 and then into 2024.
That discussion is politically charged, Lisa, for obvious reasons, but ultimately it bailed out the Federal Reserve in a big way. In a big way.
And maybe it was one reason why, especially because some of that was undercounted, why the Federal Reserve underestimated the power. Maybe that the blip that we saw, the weakness late last year in the labor market, maybe was the anomaly, not necessarily the beginning of a new trend.
Just quickly, I've got 20 seconds on the clock. Are you mentally adjusting that payrolls figure from Friday lower? Do you think that was the real deal?
So I think that there's definitely some seasonality on some of these things. Retail trade was very weak in November, stronger in December. I don't think that we're running at 250,000 jobs on month on average. But the key question for markets and the Fed is, are labor market trends strong enough that they're stable to potentially tightening a little bit here? And I think the answer is yes. Not that we're printing 250,000, but that we don't have to be as worried about the downside risks.
Matt, appreciate your time. Always good to see you. Matt Lazzetti of Deutsche Bank. That call made back in November is looking better and better. Data point to data point. We get another data point a little bit later this morning. PPI at 8:30 Eastern Time. At a second hour of Bloomberg Surveillance, your lineup looks like this. Emily Rowland of John Hancock, Libby Cantrell of PIMCO. We'll catch up with the Rheinmetall CEO, Armin Papaga, and the Villa Home CEO, Sean Roberts. From New York, this is Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
How high-frequency data matters a lot, and it will be noisy in the coming months.
It just looks like a very precarious stability, and we see that in survey data, anecdotes in the Fed's beige book, and so I don't really see that picture changing.
One way or the other, the Fed will get this under control. It just may take a little bit of tightening in between.
The rates market, the tightening of financial conditions is feeding back into equities, and it's causing risk off.
If the economy's strong, shouldn't that be good for earnings? And if so, maybe earnings start to, help stabilize things.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now with equity futures looking better than they have looked over the past few days, up 1/3% on the S&P 500, on the Nasdaq 100, up around about 0.5%. The gains are bigger in Europe. They were bigger in China overnight. The Euro Stoxx 50 right now up by 1 full percentage point as we take out a little bit of heat from this dollar rally. Euro dollar positive on the session. We're up to about 102.54. The headline from the team here at Bloomberg: according to people familiar with the matter, key members of President-elect Donald Trump's incoming team discussing slowly ramping up tariffs, a gradual approach month by month.
Which, again, just points to how much, uncertainty there is about policy going forward, that this headline that hasn't necessarily been solidified, that is still a proposal, although from key advisors to President-elect Donald Trump, would have such a big impact on markets. But also, there's a larger question here, which is, again, what is the bigger risk? Is it downside risk to growth, or is it upside risk to growth? And is that what we're really seeing play into the bond market?
I think one key part of this report, though, is that it has not been presented yet to President-elect Donald Trump. It's just from one faction of his economic team. And it's those that we already knew their views well ahead of the election. Someone like Scott Bessent, who joined this program and talked about a gradual approach. Talked about when Trump talks about 60% tariffs on China or 10% tariff war around the United States, it's a maximalist approach for negotiating tactic. So this could be one way they go. But what we are seeing right now, and let's remember, he is a president-elect at the moment. What we are seeing right now is the sausage making in real time.
There is one key consistent theme, though, in all of this, the conversation Lisa's having and Anne-Marie's having: inflation risk. If you go through the body of the story and the reporting from the team here at Bloomberg, the objective here of taking a gradual approach is to avoid an inflationary spike. That's what this is about. The worry on Friday when you see a big payrolls report is about a re-acceleration in inflation. It's not about a re-acceleration in growth. It's about a re-acceleration in inflation alongside that and where it leaves this Federal Reserve.
And it highlights the difference between 2016, the last time Donald Trump was elected, and now. And basically the idea that inflation is at a much higher place just structurally than it was back then, at a time where there still is strength in the economy, which is going to tie the hands of a president who is a real estate owner. He wants rates lower, and yet will that be possible given the inflationary dynamics?
And raises questions about how constrained this administration will be by the bond market. We mentioned it a little bit earlier in the last hour or so. To hear the Vice President-elect, J.D. Vance, on American Broadcast News over the weekend, bringing up the bond market, not once, not twice, repeatedly, and doing so without even being prompted. That's where the focus is as they come into power.
Well, that's what I thought was so interesting about it. He wasn't prompted on the bond market at all. This was Shannon Bream on Fox News Sunday. She wasn't asking about the nuance of the bond market. He was talking about how bond yields are just too high. And then he talked about the fact that the net interest payments were more than our national defense, and they're on track to be that as well in 2025. And then Speaker McCarthy said to me, well, the market will decide. Well, if that's the case, then this reconciliation package, these tariffs, they need to make sure they have a handle on how much spending this is going to be.
How long before we coin MBAGA? Make bond auctions great again.
Wow, okay.
I think it's going to be a while for that one.
I'm going to stick my neck out and just say that's not going to catch on. All right?
MBAGA.
I don't think
I just think that could be really important because I think that's part of what's going on here.
All right, Bramo. Next off for this market. Going to take some time to recover from that.
Please go ahead.
PPI at 8:30 Eastern Time, CPI tomorrow, and lots of bank earnings tomorrow too. JP Morgan, Citi, Wells Fargo, and Goldman Sachs. Coming up this hour, less of that, more of this. Emily Rowland of John Hancock as stocks look to build on yesterday's gains. Libby Cantrell of PIMCO as Trump's team considers a gradual approach to tariffs. And Sean Roberts of Villa Homes on the path to rebuild Los Angeles. We begin this hour with stocks pushing higher. Investors optimistic on a Bloomberg report that Donald Trump's economic team is considering a gradual approach on tariffs. Joining us now, Emily Rowland of John Hancock. Emily, good morning.
Morning.
We have been whipsawed from headline to headline, from data point to data point. Is this one any different?
I mean, it's just remarkable. And one of the things that we've been watching closely is the moves in the U.S. dollar. One of the things that we think has started to constrain equity markets so far this year is you've seen this significant strengthening in the U.S. dollar. You think about large cap equities, which were just carrying the crown of leadership last year. 40% of their revenues are derived from abroad. So that could be a significant issue for large cap stocks this year. So I think this morning you're seeing a bit of a modest pullback in the dollar, and that's probably helping risk assets a little bit.
Mike Wilson, Morgan Stanley, said rates drive beta, and what you're seeing in foreign exchange drives dispersion. Are you starting to see that beneath the surface on the S&P?
We're seeing a little bit of a broadening out in market leadership. Leadership is a tough word, I guess, right now, where we're seeing some pressure on markets. But what we typically see in these environments where bond yields are backing up, inflationary pressures or potential inflationary pressures, to your point, are building is things like value stocks start to do a bit better. Small caps get hurt. Of course, they have the highest levels of indebtedness, which can be an issue when the cost of capital is elevated. But I think value equities, in particular areas like energy, utilities, infrastructure related assets, those are lower beta. They're more defensive businesses. They have dividends, and they have some element of inflation protection here that we think might be accretive to investors into this year if we see maybe another 2022 type playbook.
This is a confusing moment. This is confusing for all of us. It's hard to really understand where the lodestar is at a time where there's so many different narratives that go completely contrary to each other. I want to go back to 6 a.m. this morning when we got NFIB, small business optimism, which came in at the highest rate going back to 2018 at 105, really superseding expectations. Do you want to be more levered to a growth story or more levered to a conservative portfolio, one that is more protective and levered to maybe downside risk right now?
We would say a more conservative portfolio right now. What we're seeing right now is the biggest catch up in history between soft data and hard data. So the hard data had been coming in well, things like the labor market. Of course, we added 250,000 new jobs last month. But when we look at the soft data, it had really been struggling, and then boom, you get the results of the election and you have this massive amount of optimism and sentiment just pervading the markets. So we want to be mindful of watching this kind of mini bump in reacceleration and animal spirits and sort of in the way that business owners and people are feeling in general. Of course, there's a huge divergence between Republicans that are responding to those surveys and Democrats that are responding to those surveys. So we want to be mindful of that. We may be seeing a modest reacceleration in the economy, but the challenge is, and you guys have talked a lot about this on the show, is kind of the self-limiting dynamic of this backup in treasury yields that we're seeing on this potential reacceleration in growth. Borrowing costs are high. Mortgage rates are above 7%. Mortgage applications are plunging. Inventories are up. Housing is the economic cycle. And if we start to see the shelter component of CPI decelerating, that could speak volumes to the cross-asset dynamics.
But this story has been one that's consistent over the past couple of years, that it's been a frozen housing market. And that's only led to higher prices because everything else is doing okay. And there hasn't been enough supply. How much conviction do you have in this call of a slowdown to go headlong into longer-term treasuries at a time where other people are saying, you might want to wait a little bit?
Well, it's not headlong, so we still haven't been overweight duration. We've just suggested that investors that are sitting at the short end of the curve leg into the intermediate part of the curve with a benchmark level of duration. And right now, the way the yield curve is sloped, we now have the potential for roll down as well, with the short end of the curve actually being significantly lower than the long end of the curve. I think what's notable about the housing market is you're seeing inventories up about 30% year over year. And a lot of that's concentrated in the hot spots. Like, remember when everybody left Manhattan during the pandemic or the West Coast and they went to Austin and they went to Nashville? By the way, great cities. They went to Colorado. But what's happening now is Manhattan-based companies are saying, you have a job in New York. Guess where you have to go? New York. So you're starting to see all that built up inventory come back online in some of those areas as people migrate back to the major cities. Emily, do you have a call on how high you think we could see the 10 years? People are debating whether or not we actually will hit and can sustain 5%. Yeah, so 5% I think is about the area where you kind of see that self-limiting mechanism creep in. We're watching bond yields, of course, overseas, which you're going to see sort of an element of tracking there. And if all these overseas markets
higher rates, you could see some downward pressure on Treasury yields from there. But let's just do we want to do a little bond math? I know it's really early in the morning.
Go for Lisa,
do it. But even so think about, say yields went back up to 5.5%. You're still not seeing a negative return on the aggregate bond index because the yield is there. We're looking at yields that are above 5% on high quality bonds right now. You might have to get paid to wait on the duration front if yields sort of chop around from here. But equity markets might do in an environment where we're at a 5.5% Treasury yield. I don't think they would like it. So I think the fact that you're flat on bonds, you might want to take that.
I'm not sure what Lisa started, but Kevin Gordon of Schwab has written in and said it's Barbara. Bonds are really back and really awesome.
I love it.
I'm not sure that's catching on either.
More of this.
I got another message as well on the Bloomberg terminal. Turn her Bloomberg off and tell her to start her vacation now. When does this vacation begin?
Hey,
you know,
you really want me to go on vacation? I'll happily leave. Thank you so much. It's been really real.
Emily, appreciate your time. It's good to see you. Thank you for being here. Emily Ronan there of John Hancock. Equity futures this morning slightly positive with an update on stories elsewhere. Let's get to your Bloomberg brief and cross over to Danny Berger. Hey, Danny.
Hey, John. Los Angeles and the rest of Southern California are facing a second week of fierce winds as two major fires continue to burn across the city. Crews have been struggling to contain the fires, which have killed at least 24 people and scorched nearly 40,000 acres. The disaster is expected to be among the most costly in U.S. history, with estimated damages and losses between $250 billion and $275 billion. Special counsel Jack Smith said in a report that the Justice Department and that the president-elect could have been convicted for trying to overturn the 2020 presidential election. Smith's report details Trump's efforts to pressure Vice President Mike Pence to reject congressional certification of the election. It also highlights Trump's refusal to help stop the Jan 6 riot at the Capitol. Cleveland Cliffs and Nucor are looking at a joint offer for U.S. Steel. People familiar say the Cliffs CEO confirmed his interest in a media event and later told Bloomberg that he'd fund a deal using debt. A source says the partnership could include Cliffs acquiring most of U.S. Steel, while Nucor takes its mini mill assets. Shares of Cleveland Cliffs rising just by 0.5% on the news. And that's your brief. John.
Danny, appreciate it. More from Danny in about 30 minutes' time. Up next on the program, setting Donald Trump's tariffs in motion.
I think everyone is on board with a kind of forward guidance or a phased-in tariffs. If you bring down your tariffs, we will bring down ours.
That was back in August. We'll get to the latest up next from New York. This is Bloomberg. Equity futures right now up by 0.2% on the S&P. Bond yields a little bit higher. Your 10-year 479.24. Under surveillance this morning, setting Donald Trump's tariffs in motion.
I have spoken to the president, spoken to his team, and I think everyone is on board with a kind of forward guidance or a phased-in tariff. So, here's President Xi, here's 60%. It might be 2.5% a month for 24 months. Tell us when you've had enough. And at the end of the day, I think that Donald Trump views tariffs as a way not to, as an end to free trade. If you bring down your tariffs, we will bring down ours.
So that was back in August. Sound familiar? Here's the latest reporting. Bloomberg reporting President-elect Donald Trump's incoming economic team is considering a measured approach for implementing tariffs, gradually increasing the duties by fewer than 5% per month to ramp up negotiating pressure and sidestep inflationary impacts. With the latest, here's Tyler Kendall with more. Tyler, good morning to you. Is Scott Besson at the epicenter of this effort?
Yeah, good morning, John. Clearly, he's going to face those questions as we look ahead to his confirmation hearing on Thursday. But it is worth to mention again that those potential reasoning behind a gradual tariff approach could be twofold. One, to tamp down on concerns about any potential inflationary impacts, and two, to serve as negotiating leverage. I can tell you here in Washington, we actually had the Canadian ambassador to the U.S., Kirsten Hillman, on Balance of Power last night, who said that they are actively looking for ways to get to that negotiating table and that nothing would be off the table, except, of course, an acquisition of Canada, but clearly a bid to try to de-escalate tensions before they get here. And on the second point about any potential inflationary impacts, I actually caught up with one Republican strategist who told me, look, this is going to be way more palatable for congressional Republicans in particular, who will be questioning Scott Bessent later this week, who have already expressed concerns about tariffs and in particular about rhetoric about any spike in prices and what that could mean to Republicans as they try to hold on to their slim majority in Congress going through for the next 2 years. And then again in the 2026 midterms, since they would like to see unified government for the total of 4 years under Trump's term. Just lastly, John, Bloomberg News, of course, reporting that President-elect Trump has not yet been presented with these plans. They're still very preliminary, but that they likely would be enacted under some sort of emergency power. We know that Scott Bessent would be needed for that.
Tyler Kendall, appreciate it. Tyler, down in Washington, D.C. Initially, these headlines were moving markets around, some dollar weakness. I can tell you just moments ago, euro-dollar turning negative briefly on the session, now totally unchanged at 102.45. Libby Cantrell of PIMCO is joining us around the table for more. Libby, good morning.
Good morning.
Good to see you. Let's talk about base case assumptions, underlying assumptions for you and the team at the moment. What are they? We've had reports from the Washington Post, from CNN, from us overnight. They're all considerations. The president hasn't signed off. What do you think will be when we end up?
I think in general, just in terms of the economic policy writ large, there are more questions than answers at this point. I think our view and what we're signaling to clients is that don't underestimate President Trump in terms of how deep-seated this ideology is. He's been talking about tariffs since the 1980s. He really is very focused on the goods trade deficit, which has increased with most countries, except for China, which it has declined, although China, of course, we continue to have the highest goods trade deficit with. So don't underestimate this. But I mean, he obviously, inflation was a huge issue for voters. And so he is going to be, it sounds like, potentially mindful, or his advisors, I should say. I think this is very interesting. This plan hasn't been presented to the president. And he is the ultimate economic advisor. He is his own economic advisor. So I think we should take all of these reports also with a grain of salt. But again, what we're telling our clients is let's not underestimate the deep-seated ideology that underpins some of these threats. And while, we sort of say, while transaction man is going to be there, tariff man will also be very much present. And, if there is forward guidance, if they do try to feather it in, maybe it doesn't spook markets, but we are preparing for increased tariffs, by and large.
He does like tariffs. I mean, over the course of the campaign, he called it the most beautiful word in the dictionary. At the same time, he also likes deals. Do you see tariffs as a means to an end, or you think he actually wants to do them to revenue raise?
Well, this is where I think that there is. I think there's part of it where it is a means to an end, absolutely. And he and his trade advisors point out the fact that other countries do have elevated tariffs on the United States, and so there should be some reciprocity.
गाइस 5 PM हो चुका है 6:30 न्यूयॉर्क सेशन की ओपनिंग 8 PM यूएस मार्केट की ओपनिंग क्रूड ऑयल रेजिस्टेंस पे था कैंडल ओपन इक्वल टू लो बनी थी बट उसके बाद उसने अपना लो ब्रेक कर दिया वहीं से सेलिंग चल रही है लेट्स सी अब कुछ मूव करता है याद रखना मेजर न्यूज़ जो क्रूड ऑयल के लिए है आज वो है क्रूड ऑयल की इन्वेंट्री जो कि 9 बजे आएगी बट उससे पहले गाजा में जो सीज फायर डील है उस पर भी नज़र रहेगी अगर सीज फायर डील हो जाती है तो इट इज़ नेगेटिव फॉर क्रूड ऑयल अगर नहीं होती है तो प्राइस वापस रिटर्न कर जाएगा अपसाइड की ओर फिलहाल के रेजिस्टेंस एरिया पे था नीचे एक लेवल पे आया था ये एक नेक्स्ट रेजिस्टेंस है लेट्स सी कंटिन्यू सेलिंग आती है नहीं आती थोड़ा ट्रेल कर लो अब इसको 6:30 के बाद शायद थोड़ा मूव आ जाए देखा जाए तो अभी ऑलमोस्ट 35 पॉइंट मूव आया है नीचे पूरा नीचे आता है नहीं आता है बाकी यहाँ कोई सपोर्ट है नहीं फिर भी बार बार प्राइस रुक रहा है लेट्स होप नीचे एग्जैक्ट सपोर्ट पे आए 6,600 के अराउंड अदरवाइज इट इज़ कम्प्लीटली साइडवेज डे हाई से डे लो देखोगे 100 पॉइंट की रेंज है और 6,740-50 के अराउंड पॉइंट ऑफ कंट्रोल बना हुआ है ऑलरेडी चलो गाइस डोंट फॉरगेट टू लाइक द स्ट्रीम ठीक है जिन लोगों ने सेल किया है ट्रेल कर लो क्रूड को कुछ ज़्यादा ही स्लो हो गया एक्चुअल गैस कल रेजिस्टेंस एरिया पे था 2-3 बार ऑलरेडी रेजिस्टेंस ले चुका है मैंने पहले ही बता दिया यहाँ पर थोड़ा सा रिस्की लेवल है अब ये क्योंकि कल ऑलरेडी इसके थोड़ा सा हाई लेवल पर जाके इसने विक बना दी थी फिर नीचे आया था फॉरेक्स में फिर से सेलिंग आई, अब मुझे लग रहा है शायद ब्रेक करना चाहिए। दो पॉसिबिलिटी जो मैं एक्सपेक्ट कर रहा हूँ, या तो ये सीधा यहाँ चला जाए ऊपर वाले रेजिस्टेंस पे और यहाँ से गिरे। एक्जैक्टली अगर नीचे आता है तो फिर नीचे सपोर्ट एरिया पे है। मॉर्निंग पे भी एक्जैक्टली सपोर्ट एरिया पे आने की कोशिश करी थी, बट देख पा रहे होगे एक्जैक्टली टच नहीं किया इसने। कर देता तो बेटर ही था। तो ये दोनों ही लेवल ओपन है अभी फिलहाल के लिए हमारे पास। आज यूएस का इन्फ्लेशन का डेटा भी है 7 PM पे, वेरी इंपॉर्टेंट। गोल्ड और सिल्वर को इम्पैक्ट करेगा। लेवल देखोगे गोल्ड और सिल्वर के, हाँ इसको नेचुरल गैस में वीक रेजिस्टेंस मान सकते हो। ऊपर एक अच्छा रेजिस्टेंस है 2702 के आसपास। इन्वेंट्री देखो, एक्सपेक्टेशन तो फ्लैट ही है। क्रूड ऑयल की इन्वेंट्री देखोगे लास्ट वीक -1 थी, इस वीक भी -1 ही एक्सपेक्ट करी है इन लोगों ने, तो फोरकास्ट न्यूट्रल ही है। लेट्स सी -1 से ज़्यादा आती है कम आती है, फिलहाल न्यूट्रल है फोरकास्ट देखा जाए। sees global oil price falling in 2025-2026 as production outpace demand. US oil production seen advance slightly this year. Is like the stream, like करते रहो सभी लोग। Ukraine advisor concede Ukraine peace deal is month away. ये तो फिर बहुत ही अच्छी न्यूज़ है रसिया यूक्रेन वॉर को लेकर। Advisors to President-elect Donald Trump now concede that the Ukraine war will take months or even longer to resolve. A sharp reality check on its biggest foreign policy promises to strike a peace deal on his first day in the White House.
You know, they're small business people, they're farmers, they're state legislators. I mean, these are so smart people and sophisticated in their own right, but they're not necessarily market participants. And so, is the 10-year capturing the attention of folks who are on those committees of jurisdiction? Probably, but outside of that, I'm not sure what the reaction function from between the market and between Washington is. I think much more so is when they hear from their constituents that mortgage rates are higher, that they can't get a loan, that they can't get out of their house. I think that is much more kind of apt to actually influence members than what the 10-year is.
It's hard to tell constituents that rates are lower at the Federal Reserve, but mortgage rates are higher. It's hard to explain that.
It's hard to explain all of this, and it's harder to explain that I'm going to cut your benefits and I'm going to cut costs here by not putting as many lights in or utilities that are going to get upgraded because your mortgage rates are high. How do you explain that to people?
Bond yield to higher again this morning, up by a single basis point, and that post bump off the back of our story, that post-story bump, has faded. Equity futures right now positive by only 0.2%. Libby, it's good to see you.
Good to see you. Happy New Year.
Happy New Year. Libby Cantrell at PIMCO, forcing it out of me. Up next on the programme, Armin Paprika of Rheinmetall on the outlook for Ukraine as President-elect Donald Trump takes office. An important conversation just around the corner. As I say, the bump in futures fading just a little bit. Likewise, the story of the US dollar. That was a whole lot weaker earlier on in the session. Euro dollar just about unchanged at 102.50.
Today, South Korea's impeached president is arrested. Trump's advisors concede that a Ukraine peace deal could be months away.
While aid for Los Angeles wildfire recovery becomes a political fight in the House.
Plus, self-proclaimed TikTok refugees are fleeing to another Chinese app as a US ban approaches. It's Wednesday, January 15th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in London.
And I'm Christopher Waljesper in Chicago.
When you hear LSEG data and analytics, what do you think of? Comprehensive data you can trust, exclusive access to Reuters News, industry-leading analytics and unique insights. Discover new possibilities with LSEG data and analytics.
Advisors to President-elect Donald Trump now concede that the Ukraine war will take months or even longer to resolve in a sharp reality check on his biggest foreign policy promise. Two Trump associates who've discussed the war in Ukraine with the president-elect described the day one promises as a combination of campaign bluster and a lack of appreciation of how long it will take to tackle the intractable conflict with the new administration.
Over the past several weeks, our intensive efforts have brought us to the brink of full and final agreement.
US Secretary of State Antony Blinken on a possible Gaza ceasefire and hostage release deal. Close, but not over the finish line yet. US and Egyptian negotiators say their focus is on the coming hours and hammering out the final details after marathon talks in Qatar. In South Africa, authorities have pulled at least 60 bodies from the shaft of a shuttered gold mine. More than 100 survivors have been forced out and arrested, and an unknown number of men are still feared trapped more than a mile underground following a crackdown on illegal mining.
President Joe Biden will relax sanctions targeting longtime foe Cuba days before Donald Trump takes office. Biden is reversing several hardline restrictions put in place by Trump and expects the broad set of steps to lead to the release of political prisoners in Havana. The Securities and Exchange Commission is suing Elon Musk for failing to properly disclose his ownership of X. Musk has suggested the disclosure delay was a mistake.
And Kate, Britain's Princess of Wales, says she is relieved to be in remission following her cancer treatment. Her comments coming after a visit to a London hospital where she underwent months of medical care. Investors are treading water as they wait for a raft of numbers due out today, including US consumer price data that could potentially shift the monetary policy outlook, plus Q4 results from some of the top banks. Investors are eyeing Citi and JP Morgan earnings to see if they will deliver on sky-high expectations. And you can see the results and the market reaction on Reuters.com and the Reuters app.
The U.S. Supreme Court could announce as soon as today how it might rule on the U.S. TikTok ban. TikTok users say they're bracing for the worst and looking for alternatives. In fact, thousands of them have joined another Chinese app called RedNote.
Okay, because I'm one of the TikTok refugees, and I'm used to
Users like Crystal from Massachusetts, who recently posted this on RedNote.
If we do anything wrong, just let us know, because we're used to making videos where we dance and do stupid stuff.
Our tech reporter, Crystal Hu in New York, has been looking into RedNote and other apps that have seen a boost from the impending TikTok ban.
RedNote has a pretty vibrant community, and in the past 2 days, I think to much surprise to RedNote, the company itself, what we heard is over 700,000 new users joined the platform, and a lot of them call them the TikTok refugees. And it was a very interesting phenomenon to see American users joining into another Chinese app to avoid a ban on the Chinese app TikTok.
And now we're seeing media reports that a possible option for keeping TikTok alive in the US would be a purchase, potentially by Elon Musk. What do we know about that prospect?
To be fair, Trump and Elon Musk's team haven't said a word on this. And when we reached out to TikTok for comment, they told us they cannot be commenting on pure fiction, and the Chinese government did not reply for any request for comments. What has been reported is like is internal deliberations between the Chinese government. So if indeed there is a loosening up of that line the Chinese government is holding, that they're open for a conversation and effectively put TikTok in a for sale sign, as this reports asserted, there will be tons of interest, we believe, from the U.S. investors and the business side.
TikTok plans to keep paying its US employees past the January 19th deadline, even if a Supreme Court does not overturn the law that would force its sale or ban. That's according to an internal memo reviewed by Reuters. Impeached South Korean President Yoon Suk-yeol has been arrested and questioned by authorities over his failed attempt to impose martial law in December. Yoon says he's only cooperating with what he calls an illegal probe to avoid unsavory bloodshed. Jumin Park is on the ground and sent us this from South Korea's Corruption Investigation Office.
The arrest today was, live broadcast from before dawn, and hundreds of thousands of people were watching live feeds on YouTube. Finally, Yoon, with a prosecutor, got in his car and departed his residence and came to this corruption investigation office where intense questioning is expected. As soon as there was news that Yoon might be shortly arrested, the supporters were very upset. They teared up, and some people are so upset and angry, and they slapped the police with their Korean and American flag poles. It's very classic to see Yoon supporters holding South Korean and American flag together because they are huge fans of Trump, U.S. president-elect, and they hope that Trump is going to save Yoon or support Yoon.
It's a busy week for President-elect Donald Trump's cabinet appointees. His pick to lead the Pentagon came under fierce grilling during his confirmation hearing on Tuesday.
One of your colleagues said that you got drunk at an event at a bar and chanted, "Kill all Muslims."
Democrats like Senator Tim Kaine voiced concern about Pete Hegseth's inexperience and alleged drunkenness. The former Fox News host called those allegations a coordinated smear campaign.
And why do they want to destroy me? Because I'm a change agent and a threat to them, because Donald Trump was willing to choose me, to empower me.
He has vowed to abstain from alcohol if confirmed. Hegseth largely weathered the 4-hour hearing without making any major gaffe that would have alienated Republicans, and even won critical backing from Republican Senator Joni Ernst, who holds sway in her party. All confirmation hearings are set for today, including Attorney General, Secretary of State, and Homeland Security Secretary.
Meanwhile, over in the House, a fight over California wildfire disaster aid is breaking out. Republican Speaker Mike Johnson told reporters on Monday that there should be conditions placed on aid, claiming that officials in the Democrat-led state mismanaged water resources and forests. House Democrats like Representative Ted Lieu pushed back on Tuesday.
When Mother Nature strikes, she doesn't go, "Hey, are you a Democrat or Republican? Because if you're a Democrat, I'm going to take your home and burn it. And if you're a Republican, I'm not." That's not what happened.
Our reporter David Morgan is following the story in Washington.
There were a couple of things that seem to be going on. One is that President Trump has voiced a partisan political message about California, but also there is a climate in Congress these days that frowns on spending of any kind. Hardline Republicans don't want to spend that much money on things. So there are some elements to this that seem to delve into partisan politics. There are other elements that seem to be wholly focused on fiscal matters. It's important to realize that FEMA, for the moment, says that it has enough money to deal with the need that it faces in the Los Angeles area. And it's also important to understand that if aid for California goes through the usual appropriations channels, it means that the Senate will need 60 votes to pass it. that means that Republicans will need help from Democrats, and therefore Democrats will be involved in negotiating what the final package looks like.
To stay ahead in fast-moving markets, you need to transform quality data into tailored, practical, and valuable intelligence. Access your choice of pre-built and market-validated models fast. And choose AI-powered analytics tools.
In 7-8 weeks, that the new government will create a very strong contact to the Trump administration. And I believe that they want to work out a good plan and to make a deal together. Europe and the US has to make a deal for security.
You talked about how you're investing in the United States, and I'm wondering how important it is to get a foothold in the U.S. to get around any potential tariffs or other types of issues that come down the pike.
Very important, very important. I understand all the issues that the U.S. has, and I said, okay, we want to make money, and President Trump wants to make deals, and he's right about that, and we have to take care about that. That's the reason that we are investing also in the U.S.
Are you also ratcheting back certain businesses in Europe that you think are going to be more exposed?
We grow at the moment 40% per year, so we can grow in Europe, and we have to grow in the U.S.
The president wants to make deals. Do you want to make deals? Do you think we need some consolidation in European defence?
Yes, I think it's possible, and I think it's important to do it. As I always said, Europe needs also a bigger machine in defense. And what I believe is we need a company which makes 40 billion per year. We are at the moment only on the level of 10 billion, but we will grow over the next years to 20 billion, maybe more. And the backlog is a very good one, so I believe that
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest on the Los Angeles wildfires. Crews from as far away as Canada are still struggling to contain the massive blazes that broke out 8 days ago. Now, the same combination of high winds and low humidity that set them off in the first place is threatening the region again. L.A. Mayor Karen Bass says the next 24 to 48 hours will be critical.
If you are told that you are in a warning zone, it would be advised that you actually take that opportunity to leave. Get packed, get everything ready.
Mayor Karen Bass says she has issued directives to help fast-track the rebuilding, but first, conditions on the ground need to improve. Palisades fire incident meteorologist Rich Thompson says they're getting there.
Critical fire weather conditions, red flag warnings in effect until 6 p.m. Wednesday evening. Now, by Wednesday evening, Wednesday night, I expect the critical conditions to diminish, and then for Thursday into the weekend, we're actually get back to a more normal weather pattern here for this part of the country.
As it stands now, the biggest fire in the Palisades is 18% contained. The Eaton fire, which destroyed much of Altadena, is under 35% containment. The death toll is now up to at least 25. Estimates of insured losses are running as high as $40 billion.
Well, Nathan, the fires are also threatening to make the Los Angeles housing crisis even worse. Before the fires, only about 5% of LA apartments were vacant, with a median rent of $2,299. Now more than 12,000 buildings have been destroyed, many of them homes. One rental company that manages some of LA's priciest neighborhoods says it's getting more than 10 times as many calls as it did before the fires. The firm recently arranged a 12-month lease for one tenant in Beverly Hills for $35,000 a month. After the fires, the owner raised the rent to $40,000.
Now to the latest on efforts for a truce in the Middle East, Karen. Israel and Hamas are now accusing one another of delaying a Gaza ceasefire. While officials say an agreement for a 6-week pause in fighting is still likely soon, frequent failures to get a deal finalized have left everyone cautious. CBS News previously reported Israel and Hamas had agreed in principle to a ceasefire. Speaking at the Atlantic Council, Secretary of State Antony Blinken said he thinks they're close.
I believe we will get a ceasefire. And whether we get there in the remaining days of our administration or after January 20th, I believe the deal will follow closely the terms of the agreement that President Biden put forward last May and our administration rallied the world behind.
Secretary Blinken says the sides are discussing a pause that would allow for the exchange of hostages and a boost in aid to Gaza. During the truce, Israel and Hamas would start a second, more serious round of indirect negotiations about ending the war and rebuilding the territory.
Meanwhile, Nathan, in Washington, President-elect Trump's pick for Defense Secretary Pete Hegseth appears on course to win confirmation after a half-day Senate hearing. Bloomberg's Amy Morris is in Washington and has more on the heated hearing.
New York Democratic Senator Kirsten Gillibrand questioned Hegseth's position.
गोल्ड और सिल्वर में रुक जाओ अभी थोड़ा सा गोल्ड और सिल्वर में थोड़ा सा वेट कर लो फिलहाल अभी नेचुरल गैस और क्रूड ऑयल लगाया हुआ है गोल्ड और सिल्वर में थोड़ा सा मार्केट अभी साइडवेज ही चल रहा है एंड डेटा भी है 7 PM पे इम्पॉर्टेंट है CPI का डेटा इन्फ्लेशन का डेटा है 7 PM पे लिखा हुआ है और एम्पायर स्टेट मैन्युफैक्चरिंग इंडेक्स का डेटा विच इज़ वेरी इंपॉर्टेंट सो आई थिंक वेट फॉर दैट अभी तो मार्केट साइडवेज ही है बाकी कोई लेवल बनते हैं तो देखते हैं क्योंकि न्यूज आई तो उसमें कुछ खास होगा नहीं तो 6:30 न्यूयॉर्क सेशन की ओपनिंग 7 PM पे इम्पॉर्टेंट डेटा है तो अभी थोड़ा सा मेरे अकॉर्डिंग वेट करना चाहिए गोल्ड और सिल्वर में कोई फ्रेश पोजिशन बनाने से पहले 7 PM के बाद बेटर रहेगा मेरे अकॉर्डिंग अटक गया वहीं पर रेजिस्टेंस पे नीचे ही नहीं आ रहा है साइडवेज हो जाएगा अगर ये ऊपर निकलता है तो $78,395 से सेलिंग में हो मैं MCX में लेवल बनाता नहीं हूँ सिर्फ फॉरेक्स में क्रिएट करता हूँ सिर्फ फिर भी देख लेता हूँ एक बार 78,395 से फ्यूचर सेल किया है 78,395 78,530 चल रहा है अभी देखो जैसा मैंने बताया अभी न्यूज आने वाली है थोड़ा सा उसका वेट कर लो मैं इतना ही कह सकता हूँ अभी बाकी ऑलरेडी थोड़ा सा लॉस में हो शायद 78,400साल के लिए वही एक सपोर्ट है मार्केट के पास 78,400 टू 78,380 15 मिनट टाइम फ्रेम पे अगर देखें तो आता है वहां पर तो निकल जाना कॉस्ट टू कॉस्ट अगर ब्रेक डाउन होता है 78,370 के नीचे 15 मिनट में तब वापस सेल कर सकते हो कि आई थिंक अभी ये रेजिस्टेंस पर ही रुका है ना शायद एग्जैक्टली बाकी अभी रेजिस्टेंस ही रेजिस्टेंस लिया है इसने 78,000 फॉरेक्स की बात M6 की बात कर रहा हूँ फॉरेक्स के लेवल तो क्रिएट नहीं कर रहे हैं डे हाई रेजिस्टेंस ही बना हुआ है अपर लेवल पे अगर 78,750 के ऊपर ब्रेकआउट रीटेस्ट हो गया तो और ऊपर जाएगा
To the economy now, a day after we learned wholesale inflation in the U.S. unexpectedly cooled in December, we get another key reading this morning. Consumer prices are forecast to have risen 0.4% last month. Let's get a preview from Bloomberg's Michael McKee.
The change in the consumer price index usually doesn't match the change in producer prices, so yesterday's surprisingly tame PPI report probably tells us very little about what we'll see today. Investors and Fed officials will be watching housing costs in particular after housing inflation finally appeared to start cooling in November. If that continues, it's good news for the inflation outlook. Also under scrutiny, used cars, food and energy, and airline fares. Nothing but a huge miss, high or low, would get Fed officials to consider changing their plan to hold rates steady at their January meeting. Michael McKee, Bloomberg Radio.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The Auburn Tigers, ranked number 1 in college basketball for just the second time ever, had to play without their star center, Janai Broome, the likely National Player of the Year. He's injured, but without him.
A surprise cooling in wholesale inflation, giving traders a buying opportunity, but who is taking the bait? Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
I'm Bonnie Quinn, and we are taking you to the closing bells. Let's have a look where we stand. We have been higher, we have been lower, and the only major index of the equity indices that has stayed higher all day is the Russell 2000, which tells you a lot, actually. TD Securities calling it Trump vol and saying that it's kicked off even before Inauguration Day. So here we are on the S&P 500. Will we stay there through the close? We'll have to wait and see. As I said, we had a bit of a snake of a day when it comes to those prices. Nasdaq 100 down about 1/3%. The 10-year yield holding steady around 4.78. So after that PPI data, bond market waiting to see what CPI says before it makes a decision. The dollar index was a little bit weaker after we got the tariff news that it might come in increments as opposed to all at once. It is back above 109, though, again, Romaine.
Yeah, but we go back to that PPI data, because if you thought a soft reading on producer prices this morning would actually embolden confidence that U.S. inflation was back under control, think again. That drop in PPI was driven largely by moderating food costs. Fresh vegetable prices actually down 15%. Rice down about 1%. And egg prices, remember, which had surged 56% in November, they only rose 0.5% in December. That's good, right? Well, guess what? You know how I do this. I'm going to give you the bad news. The components of the producer price index that matter most to the Fed's preferred measure of inflation, the core PCE deflator, that was troublesome. Airline fares, which had been moderating, resurrected now, surging 7% last month. Car rental prices up almost 3%. And deposit financial services, that was up almost 5%. And all this comes at a time when consumers and business managers are trying to figure out where prices are going to go next. Maybe that's why you're seeing so much dispersion in consumer spending. And maybe that's why you're seeing so much disruption in the C-suite. Consultancy Challenger Gray said 2024 saw a record number of CEO changes at U.S. public companies, and the average tenure of a CFO, that fell to just 3 years. And that brings us back to the economy, which is really where we want to start this show, because forecasting where the puck is going to be much harder today than it was in the past. This morning's PPI number was a case in point as investors really looked through that data point to Wednesday's consumer price index. You saw that in Bonnie's chart. The S&P expected to move 1% in either direction tomorrow on January 15th based on the cost of at-the-money puts and calls. That's according to Citi's Stuart Kaiser. And he says that that's the largest implied move ahead of a CPI print since the regional bank turmoil going all the way back to March of 2023. And for comparison, to put this in perspective, that reading rivals the implied move for the Fed's January 29th rate decision and is higher than the implied move around the February 7th jobs report, Bonnie.
Well, Romaine, let's get a view from Wall Street now and bring in Joanne Feeney, partner and portfolio manager at Advisors Capital Management. So, Joanne, what are we supposed to make of this PPI data and even tomorrow's CPI data, given that we know there's a bunch of potential inflationary moves coming from the administration just a few days away?
Yeah, it certainly doesn't make it easy for them to try to impose tariffs and restrictions on immigration in the face of what appears to be a bit of a plateau here in inflation. The Fed did a good job for a while, but there's some stickiness to the inflation pressures that haven't gone away. And so, the numbers today, a little bit softer than expected, but as was just pointed out, some of those elements are worrisome. And so, we're going to watch tomorrow's numbers pretty carefully. But overall, the economy remains strong. And let's not forget about that jobs report on Friday. And that tells us that there's less of a need for the Fed to cut rates to help the labor market. And so that could lead us to see rates higher for longer.
So what do you make of the market moves then? We have the VIX very close to 20 over the last few days. It hasn't really budged much in either direction. We have the S&P 500 doing literally twisters in one session, starting off with great enthusiasm and then sort of having that enthusiasm fade. And we have the bond market clearly throwing what at least one outfit is calling a tantrum.
Yeah. Well, uncertainty is never good for investing. And what we're facing right now is more than usual policy uncertainty. And it's partly the tariffs and, their sort of sideways announcement that, we're going to gradually roll out tariffs, maybe, a month at a time, isn't actually helpful. That actually spreads the inflation pressure through time rather than getting it over with a price spike, sort of a one-time change in prices because you've imposed taxes. You'd get it over all at once. Now we potentially could see it month after month after month, and that means a sustained increase in inflation. So people don't like that. We don't know yet what's going to happen on the immigration front. That could potentially increase wages, particularly in construction, travel and leisure, agriculture. And then third, this budget deficit debt problem, right? We're not hearing anything that is consistent with reducing the deficit or reducing the pressures on the debt. In fact, we're hearing quite the opposite. So while there are certainly some good economic policies coming, notably reduced regulation, that would pave the way for, perhaps faster home building, for example, and a more friendly, attitude towards M&A. Those are all positive things for growth. But we have these worrisome issues, and it's more uncertainty. And uncertainty makes folks cautious. It makes them want to buy bonds, and it makes them want to potentially take some wins off the table, or at least reduce some exposure to some companies that might be more vulnerable.
I am curious, though, Joanne. I mean, are there sectors of the equity market that could potentially benefit from an inflationary scenario?
Well, so the not necessarily inflationary scenario. I mean, potentially a steeper yield curve, could be benefiting to banks. Obviously, we've seen some of that. We've certainly heard a lot of talk about that. The cause of the higher inflation, though, is really what you need to think of. Try to figure out what companies might benefit. So if there are tariffs, for example, on particular products that protect domestic producers, those producers could benefit. Right. So those are the things that really means you have to get into the nitty gritty to try to figure out which companies are the winners here or the losers.
Do you see right now, at least in kind of your lay of the land, are people like hedging? Are they like sort of seeking out protection for some of the volatility that is most likely going to accompany some of the things that you just laid out?
Well, it's hard to tell from the market moves. When interest rates rose at the end of the year, we saw dividend stocks actually come down, at least those in the mid-range, because all of a sudden you had, treasuries risk-free offering even more attractive yields. So that substitution effect actually hurt some of what would be considered typically safer investments. I expect that's likely to reverse over time because, as you point out, Romaine.
Yes, CPI का data 7 p.m. पर है. 6:30 न्यूयॉर्क सेशन की ओपनिंग 7 p.m. CPI का डेटा, एम्पायर स्टेट मैन्युफैक्चरिंग इंडेक्स का डेटा, फिर 8 p.m. यूएस मार्केट ओपन, देन 9 p.m. क्रूड ऑयल इन्वेंट्री. बाकी क्रूड ऑयल में न्यूज़ भी आ सकती है. सीज फायर डील वाली वो भी इम्पोर्टेंट है. करते हैं बैंक निफ्टी निफ्टी, बट आजकल हेल्थ सही नहीं है इसलिए मैं लाइव ज़्यादा बोल नहीं पाता हूँ. सीज फायर डील नेगेटिव इम्पैक्ट क्रूड ऑयल, डिपेंड करता है सर सीज फायर हो रहा है नहीं हो रहा है. हुआ तो नेगेटिव होगा, नहीं हुआ तो पॉजिटिव होगा, वापस रिटर्न कर जाएगा प्राइस. ये अपना एसएल कॉस्ट पे रख लेना गाइस. क्रूड ऑयल में कुछ खास आया नहीं नीचे, सिर्फ 35-40 पॉइंट ही मूव किया. थोड़ा नीचे और आता तो बेटर रहता है. बिल्कुल ही साइडवे चला गया क्रूड ऑयल. डे हाई से डे लो 100 पॉइंट की रेंज में. अगर ट्रेलिंग एसएल जाता है तो एग्जिट, फिर देखेंगे बाद में कोई नया लेवल क्रिएट होगा तो. There guys, don't forget to like the stream and subscribe the channel. लो ब्रेक करना जरूरी है क्रूड ऑयल को नीचे आना है तो. एक रीटेस्ट भी पेंडिंग है मार्केट में काफी नीचे 6400 वाला और 6600 वाला. आ जाए तो बेटर ही है यहाँ तक. तो मैं लगा रखा लेवल सर रेजिस्टेंस एरिया पर ही है. अगर अब डे लो ब्रेक करता है तो मेरे अकॉर्डिंग आ जाना चाहिए 6600 के अराउंड. वो एक रीटेस्ट जोन है यहाँ पर. ये यहाँ कहीं बाइंग एक्सपेक्ट कर सकते हो फिर वापस. यहाँ अगर नहीं आती है सेलिंग तो फिर ये कहीं 6800 के आसपास सेल करेंगे वापस, क्योंकि ऑलरेडी एक बार सेलिंग दे चुका है, दूसरी बार दे चुका है, थर्ड टाइम रेजिस्टेंस मिल रहा है. अब भी नहीं आती है सेलिंग तो फिर मार्केट नेक्स्ट लिक्विडिटी लेने चला जाएगा ऊपर की ओर. सेम नेचुरल गैस का हाल भी है. नेचुरल गैस में भी रेजिस्टेंस जो नहीं है ऊपर. कल रेजिस्टेंस एरिया पे आया था, फिर वहीं पर क्लोजिंग हो गई मार्केट की. गैप डाउन ओपन हुआ, एग्जैक्टली सपोर्ट पे आया नहीं वापस सेल करना चाह रहे हो तो वापस सेल कर सकते हो हाई लेवल से, नहीं तो फिर हमारे पास नेक्स्ट रेजिस्टेंस फिर सीधा 360 364 के अराउंड है करंटली रेजिस्टेंस जोन। दिस इज द रेजिस्टेंस जोन। नीचे आएगा तो बाइंग का प्लान रखेंगे। हाँ, काफी बड़ा लेवल हो जाएगा ये। कर दो इसको। हाँ, यहाँ तक आ जाए तो बेटर है। इस मॉर्निंग पे टच नहीं किया था, थोड़ा सा रह गया, तो मेरे अकॉर्डिंग ये पेंडिंग तो है अभी क्रूड में, सॉरी नेचुरल गैस में। इन्वेंट्री 9 बजे। इन्वेंट्री बाकी देखोगे तो क्रूड ऑयल की फ्लैट एक्सपेक्टेड है। लास्ट टाइम -1 थी, इस बारी -1 ही है फोरकास्ट। याद रखना क्रूड ऑयल की 3 इन्वेंट्री आती है, क्रूड ऑयल की आती है, गैसोलीन की आती है और ईआई की आती है। के क्रूड ऑयल कैंडल अगेन ओपन इक्वल टू लो, कैंडल ओपन इक्वल टू लो बनाते जा रहा है कंटिन्यूअसली क्रूड ऑयल। ट्रेलिंग एसएल कॉज पे रखना, जाएगा तो निकल जाना। यहाँ पर सेलिंग नहीं आती है तो फिर वही 6800 के आसपास देखेंगे सेलिंग।
Singapore has also grown its EBITDA. This Marina Bay Sands has grown from, I'll call it $1.6 billion in EBITDA to now closer to $2 billion. And the multiple has actually expanded for Singapore. So the expectation is higher now. Whereas for Win, you get that U.S. more centric exposure. You get exposure to a new growth project in the UAE, and you're trading at a much lower multiple.
Just on the US-centric exposure, not just for Win, but also your other favourites, Viking and Travel and Leisure, for example, Stephen, how does higher for longer impact these type of companies, and will that have an impact throughout the year?
So that's a great question. You have certainly within the cruise space, I'll start off with that with Viking, there's always a concern around the leverage that they take on to build these ships. Viking is different. They have the lowest leverage of the cruise space. They're going to be at under 2 times net debt to EBITDA by the end of the year. They're going to be generating a ton of free cash flow. We actually think that they're going to start either a dividend or a buyback potentially in the next year or two. We think that can act as a catalyst for the stock. That's a higher end consumer, mainly US centric, and they're going to other markets and they're growing.
Candle again open equal to low है crude में, remember. ट्रेलिंग एसएल जाए एग्जिट, ठीक है, होल्ड मत करना. अगर ये नहीं आती है हमारे पास यहाँ से सेलिंग, तो फिर इस लेवल को रिमूव कर देंगे, जरूरत नहीं है फिर इसकी. We need to consider, some other levels. नेचुरल गैस का बताओ क्या होने वाला है। नेचुरल गैस बता तो दिया, रेजिस्टेंस एरिया पर है, सेल प्लान कर सकते हो वहां से, और कोई इसमें लेवल है नहीं अभी। दैट इज रेजिस्टेंस एरिया ऑन अपर साइड। नीचे एक रीटेस्ट है और सपोर्ट है, दोनों साथ में बने हुए हैं, और एक रेजिस्टेंस 360 364 के अराउंड है। सेल क्या हुआ है तो ट्रेल कर लो, फिर से आए फिर से सेल कर लेना हाई लेवल पे। 350 354 रेजिस्टेंस जोन है, बड़ा है रेजिस्टेंस जोन, इसलिए वो एक ब्लू कलर की लाइन ड्रॉ कर दी है। चाहो तो इसको रिमूव भी कर सकते हो, इजी हो जाएगा। सिक्स PM हो गया, 6:30 न्यूयॉर्क सेशन की ओपनिंग। अगर कैंडल क्लोज होती है 341 के नीचे नेचुरल गैस में तो आ जाएगा इजीली। 341 के नीचे यहाँ कहीं कैंडल क्लोज हो जाए, सीधा आ जाना चाहिए फिर तो।
Powell said it at his last press conference. The economy's in pretty good shape, and he's counseling patience for what the Fed will be doing.
And one reason why I brought that up, Vince, is because when we had the NFIB data today on small businesses, we saw that optimism continue to rise. We've seen that in some of the consumer sentiment indicators. And it's kind of a flip-flop of where some of those indicators were just a few months ago. The data hasn't changed significantly. And I'm wondering if that could actually maybe help us through this for all the hand-wringing that we're doing, at least on this program, and others about a potential resurgence in inflation. If people feel good, businesses and consumers alike, does that maybe blunt the impact of that?
Be careful what you wish for, because people also responded they were a little more worried about inflation. Some of the soft measures on inflation expectations have ticked up higher. Look at the New York Fed survey, and such. So I think in terms of spending's got momentum. The nominal activity is growing in the neighborhood of 5.25%. There are fundamentals in place that should keep that going. Most of what we know of the next administration's plans tend to be supportive of more spending. So that part, I think you're right. Households are going to be a little freer with their wallets. The question about inflation is, does it put additional pressures on resources? And there, the good news is, yeah, employment growth was strong, as we saw last Friday. But it's basically been cooling to something that's more sustainable. And right now, the labor market looks like it's in balance.
Vince, do you see any problem at all with the FOMC and the Fed in general's communication policy right now? We did see an awful lot of whiplash last year throughout the year.
Oh, so look, I spent a lot of my career worrying about the Fed's communications policy, so I always worry about it. And right now, the Fed is in a bind of its own making. Because when you talk about monetary policy, it's what they do at the policy rate, but it's also what guidance they provide about the rate going forward. And guidance is about an economic forecast. And right now, an economic...
Again, open equal to low in crude oil. लगता है 6:30 के बाद ही मूव करेगा क्रूड को भी नीचे जाना है तो देखो डे लो तो ब्रेक जरूरी है डे लो ब्रेक नहीं हुआ तो और नीचे आएगा नहीं फिर वापस चला जाएगा कल के हाई के अराउंड 6,800 830 थोड़ा और सेलिंग आए तो मजा आएगा 6,680 डे लो ब्रेक डाउन अगर कर देता है प्रॉपर्ली
that nobody wanted to buy anything at the price points that they were offering, but I was like, you're the CEO. Why didn't you just lower the prices? So what's going on? Explain to me why they had this miss, why they're guiding lower.
Right. I mean, it really is an interesting situation. If you think about the holiday season, that's when people tend to spend. And that is a peak season when you think about jewelry and that industry there. And as we know, Signet actually owns Kay Jewelers. We've got Zales and Jared. So they have quite a few brands under their purview there. But what we are seeing here is that people are really pulling back on their wallets. We still have a consumer that is stretched beyond belief. And when you're expecting people to go buy some rings and some jewelry ahead of proposal season, you know, holidays into Valentine's Day that'll be coming up, we're actually seeing people pulling back on those purchases here.
Well, and of course, gold was at records for most of last year as well, right? Or close to records. Does that have an impact? Do they pay for that as a raw material?
Well, they actually mentioned the idea that they're going to be targeting self-purchasers, so those who tend to spend more, and particularly on lab-grown diamonds. So we are seeing a bit of a shift and more emphasis on the lab-grown aspect versus maybe the raw materials that tend to be more expensive when we think about rings and diamonds.
But this gets to a question, though, about consumer spending overall. Because when you think jewelry, I mean, this is probably one of the more ultimate discretionary items. Nobody really needs a new ring or, a necklace or whatever.
I was going to say, are we sure?
All right. Well, I'm just saying, you don't need it to survive. Let's just say that. But it gets to this idea that, are they sort of telegraphing that there is something broader afoot here? Or is this just kind of a one-time deal where people during the holiday season made some budget decisions that maybe then we get through this in, 3 months or 2 quarters?
Right. I mean, I think it's important to note that we have other retailers that have been also echoing similar situations. We had Macy's that reported, we had Abercrombie and Fitch, and they're also talking about, when we look at the outlook and what the things that they have been struggling with as we think about the consumer and whether or not they're resilient, it seems to be an issue for broader retailers, and it's not necessarily exclusive to Signet here.
Nora, thank you so much. We're going to continue to follow the stocks move, and it has been a day of big moves. That is Bloomberg's Nora Melinda there. And Romain, I just want to see if you've read the story. So you win an Olympic medal, you get a piece of the Eiffel Tower, and then you want to hand it back for something better?
Well,
have you seen that story?
Well, I've seen this story that apparently some of the medals that they handed out at the Paris Olympics over the summer, apparently now some of them are
be monetized in the next 20.
Money isn't just transactional, it's personal. With 8.5 billion endpoints across more than 190 markets, Visa Direct helps to make all of it possible.
Partner or compete with Apollo, Ares, and others.
It is a different model, Ken, because for most of the big banks, the way that they've been approaching private credit is partnerships. Goldman, with that announcement, to your point, shows that they can compete with some of the big names. Which of the model for the banking sector do you think will ultimately win out?
Depends who you are, but I think Goldman can play offense. So they can certainly, as I said, be principal and compete, but also for asset-backed loans, they can also be there to also provide funding for the private equity firms. The traditional banks have a different game, particularly regionals or mid-size, which is really loans or syndicate loans competing against a corporate who wants to just get immediate attention with a direct borrowing from a private equity firm. And it's a sea change because it's moving up in size of the deals from small mid-sized companies to much larger deals over $1 billion. So it's a multi-year trend. I think Goldman, again, you have to go back over 10 years. Goldman couldn't be.
Okay, natural gas देखो यहाँ पर एक FEG है, छोटा सा रुक सकता है थोड़ा बहुत 630 भी होने वाला है, तो जो लोग नेचुरल गैस में टारगेट थोड़ा बड़ा लग रहा है, बड़ा नहीं है वो ऑलरेडी 17 पॉइंट, तो हाफ प्रॉफिट बुक करके ट्रेल कर लेना. दैट इज FEG एरिया. प्राइस को और नीचे आना है तो इस FEG के नीचे ब्रेक करना जरूरी है. नहीं ब्रेक किया तो रिटर्न कर जाएगा यहीं से नेचुरल गैस.
Change or shock in the markets that affects volume, but also affects in their books exposure. And I mentioned it at the hour before, which is really the black swan event. Some complex derivative product that has a ripple effect, whether it happens in Asia or Europe, but it impacts Goldman. Generally, the other one, which Jamie Dimon speaks to, is a geopolitical event. That has usually been, if there's any sell-off, a buying opportunity. But what we're seeing so far is confirmation that 2025 stayed the course, and we're going to see, I think, the consensus or street analysts raise their estimates as we go through the year.
It's the prudent thing to do to manage potential risk, Ken, but ultimately, I think what speaks louder than anything is the outlook from JP Morgan. The outlook's pretty decent. Geopolitics aside, incoming policy changes aside, the outlook's better than good, and the stock is up in a pre-market. I just want to finish with you, Ken, and look ahead to Citi. Numbers drop in about 21 minutes. You've had a decent read on a cross-section of Wall Street now. We've had numbers from Wells, from JP Morgan and Goldman. What should we expect from Citi in 20 minutes?
There's two things. First, they have the highest percentage of net interest income, over 70%. of total net revenue. So we want to make sure there's a good print there. Second, from Jane Fraser, the CEO, is the ability to show that they're moving through on the transformation or restructuring, and we're actually seeing concrete evidence in the results.
Ken, appreciate your time. You'll be with us a little bit later. Ken Leon there of CFRA on some of the financials and the earnings we've had so far this morning. Shani, just to cross over to you. When do these calls start and what questions have you got?
Well, JP Morgan has an analyst call first, or a media call. They talk to us first. I do want to know where they think the rubber will hit the road. Not only is Ken right with that black swan event, I can tell you from firsthand knowledge, I'm still talking to all of these executives about risks, and more risks. We were talking about how JP Morgan, they increased their value at risk for the equities book while their book had missed expectations. They took on more risk, bought in less revenue than expected over there. At equity markets, still pretty close to all-time highs. And then they were beat by Goldman in that same business. So there is still a lot of competition going on, and the banks want to scrape every dollar out of their balance sheet to make sure they're capturing that share.
Bank stocks up across the board. Equity futures elevated on the S&P as well. We're higher by 1/3 on the S&P. As I say, numbers from Citi in about 20 minutes' time. With an update on stories elsewhere with your Bloomberg brief, here's Yahara Hackers. Hey, Yahara.
Hi, John. Recapping those earnings, we're seeing a strong start to bank reporting season due to a trading bonanza. As Danny said, JP Morgan traders scoring their biggest fourth quarter haul ever. Meanwhile, Wells Fargo net interest income beat estimates, and it forecasts an increase for 2025. And at Goldman Sachs, earnings per share handily beating estimates, coming in at $11.95 per share, much higher than the $8.35 expected. Meanwhile, Donald Trump says he will create an external revenue service to collect tariffs on foreign imports. In a post on Truth Social, the president-elect says he'll set up the agency as soon as he takes office next week. Democrats and analysts have pointed out tariffs are already collected by U.S. Customs and Border Protection. And Meta is cutting roughly 5% of its staff. In a note to staff seen by Bloomberg, CEO Mark Zuckerberg says he's raising the bar and plans to, quote, move out low performers faster. Given its current staff, the move could affect roughly 3,600 jobs. Affected workers in the U.S. will be notified on February 10th, while workers in other countries will be informed at a later date. Meanwhile, new hires to fill those roles will take place later this year. That's your Bloomberg Brief. John?
Yahara, appreciate it. Thank you. More from Yahara in about 30 minutes' time. Changes at Meta, seen changes elsewhere. On the labour front, reports of JP Morgan saying get back to the office 5 times a week. Neil Dutta of Renmax saying these are not things that happen when the labour market is super, super tight.
It's not just them. It's also Citi saying they're capping 401k payments. Microsoft pausing hiring in their U.S. consulting unit. Southwest Air halting corporate hiring. It's happening in a lot of different industries, which presents this idea that the labor market's maybe not as strong as it seems on the surface.
Neil's not a worrier. I want to be clear about that. He really isn't. He is no permabear. He is usually constructive. He has some concerns about how this economy is going to start the year and finish it in 2025. Up next on the program, U.S. bond traders hoping for some relief.
We've seen a little bit of a relief rally in the bond market because the bond market really needed it. But we got to see some sort of improvement in CPI as well for the bond market to really start to see yields push a little bit lower.
That conversation up next. Live from New York City. You're watching Bloomberg Surveillance.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
There's 15 minutes left in US market से पहले न्यूयॉर्क सेशन ओपन होने वाला है. अपनी पोजीशन पे ट्रेलिंग ऐसा लगा लो. क्रूड ऑयल वहीं का वहीं रुका हुआ है. नेचुरल गैस एफपीजी तक तो आ गया है. थोड़ा और नीचे आ जाए तो वेल एंड गुड. एटलीस्ट इस लेवल के आसपास आ जाए. यहाँ से बाइंग प्लान कर लेंगे. रीटेस्ट और सपोर्ट दोनों साथ ही में बने हुए हैं. एफपीजी ब्रेक हो जाता है तो मज़ा आएगा. बाकी क्रूड ऑयल भी जो लोग सेलिंग में है अपना एसएल कॉस्ट पे रखना. ठीक है, कॉस्ट टू कॉस्ट जाए तो निकल जाना. काफ़ी देर से रुका हुआ, इतने देर सेलिंग के लिए प्राइस रुकना नहीं चाहिए लॉजिकली. नॉट गुड. एफईजी भी बना दिया इसने, नेचुरल गैस क्रूड ऑयल ने यहाँ पर छोटा सा एक वेरी स्मॉल एफईजी.
Yeah, Greg, good to see you.
Great to be here.
Good morning, sir. Thanks for being with us. Let's talk about this backup in bond yields. What's behind it? What do you think is driving it? We just heard from a guest there, Tom Tsouras from Strategas, who thinks that a lot of it's about supply. Do you think it is?
That's a piece of it. There's a multitude of factors, honestly, right? You have it's part growth, right? If you look at the move, it's mostly been real yields, right? So that's a growth change, which I don't quite fully comprehend. Some of it is productivity through AI and some other means. Some of it is supply through the deficit. Some of it is the policy uncertainty and factoring a little more inflation. So it's a combination of all those things. And kind of what's driving the move ultimately is the change in Fed. If you look at the pricing and probability of rate cuts and rate hikes, it's completely flipped. If you go back to September, the probability of a rate cut a rate hike was virtually zero. Now it's almost 25%. So the fact that the front end is being repriced, that's allowing kind of yields to move higher across the curve. And this is a global phenomenon. That's the interesting part about it. It's not a U.S. story, it's a global story.
And we see it playing out worldwide, not just stateside. So if that's why you think yields are high, what gives you the confidence they're coming back down?
I just think it's a little far afield. Thinking about, we have CPI today and just inflation generally. I just don't really see the prospects of a rate hike here over the near term. What I think on balance, we're still in restrictive territory. I think ultimately the Fed, in this case, wants to get to neutral, which is a starting point of 4. And I just see kind of scope for that to move lower. And it just feels like a little a little overdone here.
But you pointed to the shift in the Fed, and I think that's a good point because at the end of the last year, you had a Fed that was guiding the market to a certain destination. What feels like it's changed is that we're back to a reactive Fed, a Fed that's very data point dependent. Does that not concern you? And what you're describing is that ability to get back down to a guiding Fed that's going somewhere lower.
I actually wish it was a data-driven market. It's the exact opposite. It's a potential policy-driven market, right? And if you're the Fed, how do you incorporate, tariffs, immigration, tax cuts, and deregulation? Some would bode for rate cuts. One would be actually hikes. So it's we're really beholden to policy here, which is not a great place from an investing standpoint because investors ultimately like the data and want the data, and we're beholden to these factors that we don't really fully understand.
Well, then what happens if we have, for this year and the next 4 years, a Trump that is unpredictable in his policy? As we know,
ये है छोटा सा एक एफईजी क्रूड ऑयल का। $630 होने वाला है गाइस। ट्रेल द एसएल इन क्रूड ऑयल, ओके। इन नेचुरल गैस में भी हाफ प्रॉफिट बुक करके ट्रेल करना। हरीश जोशी जी, for the super chat. Harish Joshi ji sent 100 rupees super chat. ओके 8 मिनट लेफ्ट, 8 मिनट और बचे हुए हैं। एफईजी का पता कैसे लगता है? एफईजी क्या होता है? 3 कंसेक्यूटिव कैंडल के बीच का डिस्टेंस, अगर यहाँ पर एक गैप रहता है तो वो एफईजी बनता है। ट्रेलिंग एसएल यूज कर लेना, किसी की ओपन पोजीशन है तो सिस्टम पे एसएल रख लो, कोई नई पोजीशन मत बनाना अभी 6:30 से पहले। नया रेजिस्टेंस ही बना दे या फिर नीचे ही आ जाए प्राइस। नेचुरल गैस भी एफईजी पे पास ही है, नीचे आता है तो देखो एक रीटेस्ट है यहाँ पर, साथ ही साथ सपोर्ट है। वैसे सपोर्ट पे आके सपोर्ट ले तो बेटर है, बट रीटेस्ट पे भी रुक सकता है, ध्यान रखना। रेजिस्टेंस था, ब्रेकआउट हुआ है तो वो भी एक रीटेस्ट की तरह काम कर सकता है, सपोर्ट की तरह इन द सेंस ऑफ। बाकी उसके जस्ट नीचे एक सपोर्ट ही है, चाहो तो दोनों को अलाइन भी कर सकते हो, बट मेरे अकॉर्डिंग अगर एग्जैक्टली सपोर्ट पे आ जाए तो बेटर रहेगा। और टारगेट बड़ा बन जाएगा, एसएल छोटा हो जाएगा नेचुरल गैस में। छः मिनट और हैं। ऊपर जाएंगे तो ऊपर रेजिस्टेंस 15 मिनट में कुछ खास है नहीं, अब 30 मिनट टाइम फ्रेम यूज़ करना पड़ेगा बिकॉज 15 मिनट में उतना पीछे कोई लेवल शो नहीं कर रहा है। सेलिंग नहीं आती तो फिर प्राइस डेफिनेटली ट्राई जरूर करना चाहिए 6800 टू 830 जाने के लिए। भी करते रहो गाइस, 100 लाइक्स इज द टारगेट, डोंट फॉरगेट टू लाइक द स्ट्रीम। 7 PM पर एक डेटा भी है सीपीआई का, याद रखना उसका थोड़ा बहुत इम्पैक्ट क्रूड पे भी पड़ता है कभी कभी, मेनली तो गोल्ड और सिल्वर के लिए इंपॉर्टेंट है। थ्री मिनट लेफ्ट, 3 मिनट बचे हैं। सपोर्ट रेजिस्टेंस Okay, 1 minute left, only 1 minute left. पड़ेगी तो क्रूड का रेजिस्टेंस थोड़ा सा अपवर्ड भी शिफ्ट कर सकते हैं, ठीक है। 30 seconds left. नेचुरल गैस भी आ ही गया नीचे ऑलमोस्ट। ग्रेट। सेशन ओपन हो गया गाइस, एक्सपेक्टेड है थोड़ा वॉल्यूम। नेचुरल गैस डे हाई रेजिस्टेंस है स्टिल, नीचे सपोर्ट 326 और 27, एक साथ में रिटेस्ट भी है। सपोर्ट पे आ जाए तो बेटर ही रहेगा। क्रूड ऑयल रेजिस्टेंस पर ही है, 2-3 बार रेजिस्टेंस ले चुका है फिर भी नीचे नहीं आ रहा है। अब तो नीचे एफईजी बना दिया एक। बाकी नीचे एक अच्छा सपोर्ट है अराउंड 6560। बीच में भी शायद कुछ ना कोई लेवल बने होंगे, बट ये जो गैप अप हुआ है और पीछे कोई लेवल हमें दिख नहीं रहे 15 मिनट में एटलीस्ट, तो उस वजह से कुछ यहाँ पर है नहीं, ब्लैंक ही है पूरा लेवल। नेचुरल गैस में आप एटलीस्ट प्रॉफिट बुक कर लेना, मोमेंटम थोड़ा बहुत नेचुरल गैस में ही आ रहा है, क्रूड में कुछ खास नहीं है। डे हाई से डे लो जरूर देखोगे, मोमेंटम लगेगा 100 पॉइंट का है, बट ओवरऑल देखोगे साइडवेज ही लग रहा है मार्केट बिल्कुल ही। मोमेंटम थोड़ा आना चाहिए, अब भी नहीं आया तो फिर सीधा आप एक्सपेक्ट कर सकते हो। यूएस मार्केट और 7 PM पे सीपीआई का डेटा भी है। बाकी चाहो तो क्रूड का रेजिस्टेंस थोड़ा सा और शिफ्ट कर सकते, शिफ्ट क्या थोड़ा सा इसको एक्सटेंड कर देते हैं सो दैट ब्रेकआउट पे डायरेक्टली बाय मत कर लेना। बाकी आपके यहाँ पे सेल किया हुआ है तो एसएल कॉस्ट टू कॉस्ट पे रख लो। कर भी नहीं सकते इसमें। कैंडल क्लोज होने देते हैं, फिर देखते हैं, अगर फिर से रेजिस्टेंस लेता है तो ट्राई करेंगे, नहीं तो फिर अवॉइड।
As much of? This is the question.
Shanali, appreciate your time this morning. Lots to work through. Look out for more from Shanali in about 55 minutes' time when she leads the show into the opening bell alongside Matt Miller and Katie Greifeld. Ken Leon of CFRA is still with us. Ken, we spoke to you about 30 minutes ago. I'm going to say this for you. You gave Goldman Sachs an A+. What does Citi get this morning?
Well, we'll give them a B. I haven't seen the details, but picking up from what Shanali said, the return on equity narrowing the range. You know, they took a $1 billion restructuring charge in 24, so the ability possibly to reduce costs or more than the street thinks might be able to help them on ROE. Citi is also an event-driven stock of the large banks. They are finally, this year we hope, moving to monetizing, selling in Mexico, Banamex, which was by far the largest consumer bank they had outside the U.S. So that's significant. It's event-driven. They also have stable businesses with more transparency. That's called services. It's treasury and trade solutions, a dominant position in the corporate treasury market. And certainly they're more on the fixed income side versus equity across banking and trading. So I think Citi's going to be fine, and they're still trading below
This is the Asia Trade. I'm Sherian in Tokyo.
I'm Heidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set for a cautiously positive open. Traders bracing for a US inflation report that could confirm fears of the Fed holding interest rates for most, if not all, of this year. We'll be getting the outlook when it comes to rates and the dollar from Goldman Sachs chief US strategist David Kostin, who'll be joining us exclusively from their global macro conference in Hong Kong. Plus, South Korean police reportedly entering President Yoon's residence after a pre-dawn raid in a fresh attempt to arrest him over last month's martial law declaration. We do have just some data crossing the Bloomberg when it comes to the South Korean labour market and the state of that unemployment market at the moment. The December adjusted jobless rate rising to 3.7%. The estimate was for 2.9%, so really a significant overshoot when it comes to the adjusted jobless rate for the month of December. That is the highest since June 2021. This is according to Statistics Korea. The estimate range for economists, of 13 economists, I should say, was between 2.7 to 3%, and that's coming at 3.7%. The November jobless rate, 2.7%. We saw a removal of 52,000 jobs from the South Korean economy from a year earlier. And when it comes to the population growth over 15 years old, we saw an increase of 0.3% compared to earlier as well. So all of this adding into expectations of more BOK easing. The Bank of Korea expected to cut the interest rate to 2.75% to continue trying to support the economy. It is, of course, facing this sluggish labour market, but also the ongoing political turmoil, of which we'll get the latest in just a few moments. That terrible Jeju air crash there as well. So 18 out of 22 economists at this point, Sherry, predicting a cut from the BOK on these ongoing and really consolidating concerns for South Korea's economy.
Yeah, no wonder we have seen that pressure for the Korean won in recent weeks. We'll continue to watch that pressure as we're seeing other currencies across Asia also being pressured for a stronger U.S. dollar. Right now, we have seen the PBOC again reiterate that they will try to stabilize markets, that they will try to stabilize the yuan. You have it at 734 right now. We saw a little bit of support for the Japanese yen as well after comments from the BOJ Deputy Governor ahead of the BOJ policy meeting. Next week, we'll discuss that in a little bit. But Nikkei futures at the moment gaining a tenth of 1% after 4 sessions of losses already. Not a lot happening in the ASX 200, of course, that's staggered open. But take a look at how U.S. futures are trading right now. We saw the downside pressure in the overnight session, especially when it came to tech. We're now hearing that Meta will be laying off about 5% of their workforce. We'll get more details on that. But in the meantime, we continue to watch that Treasury route, that despite the fact that we got wholesale inflation coming in a bit more benign, we actually saw yields rising and Treasury just reversing earlier gains. The 30-year yield, again, surpassing that critical level of 5% hiding.
Let's get some more when it comes to these inflation expectations. And Bloomberg opinion columnist John Author says U.S. inflation has the potential to derail a second Trump presidency before it begins. He joins us now for more. And John, it seems like we are hearing kind of more flutters of concern, right? We had the reporting yesterday that there's sort of plans being circulated proposing potentially a more staggered approach to trade tariffs, because clearly that is one of the biggest implications for a spike in inflation. But how much do you worry about kind of the self-fulfilling inflationary mindset taking hold?
देखो क्रूड ऑयल हो गया साइडवेज कंप्लीटली, ऊपर रेजिस्टेंस बना चुका है, वहीं पर रुक होल्ड है, नीचे एफईजी का सपोर्ट आप मान सकते हो। मोमेंटम करना है तो पहले कि एक रेंज ब्रेक कर दें। कोई बड़े लॉन्ग ट्रेड के लिए मत जाना, यहाँ पर लॉन्ग मतलब मैं बाइंग की बात नहीं कर रहा हूँ, किसी बड़े टारगेट के लिए मत जाना। ऊपर रेजिस्टेंस, नीचे सपोर्ट, कोई एक लेवल ब्रेक हो गया, नया कोई लेवल बनता है तो देखते हैं। लेवल आया नहीं क्या?
unlikely to do anything truly stupid, truly dangerous. That said, if we get a big surprise, a rise in inflation tomorrow, that reduces their room for maneuver and increases the risk of mistakes.
Our Bloomberg opinion columnist John Authors there. We do have some breaking news just crossing the Bloomberg when it comes to Elon Musk. Obviously, as we know, a person very close to President-elect Trump. The SEC is suing Elon Musk over a securities violation in federal court. The full SEC complaint against Elon Musk is not immediately available, but we do know that the case has been filed in D.C. federal court according to that filing. So we'll strive to get more details as they become available. We do know that there's sort of a number of ongoing tussles that we've seen between Elon Musk and the SEC. He had earlier posted in December a letter on X stating that the SEC is investigating his company Neuralink and preparing to take action against him relating to his Twitter investment. In that case, the SEC was looking at the timing and the disclosure, I should say, of Musk's Twitter stock purchase before the acquisition in 2022 and gave him a deadline to look at either a settlement or enforcement action. So we don't know if this is the same sort of issue or a different case, but we are seeing that that has been filed by the SEC over a securities violation. That lawsuit, the complaint, has been filed in D.C. federal court. We'll bring you more as we get more details, but Tesla at the moment still pretty flat in the after-hours session. Sherry.
And Heidi, let's go live to Seoul, where we continue to see this dramatic standoff between the police and also President Yoon Suk-yeol's team. South Korean investigators have launched a dramatic new bid to arrest the impeached president following a failed attempt earlier this month. Yonhap News is reporting the police and investigators have entered the residence of Yoon Suk-yeol using a ladder and gotten past 2 lines of security. You can see the live pictures right there of South Koreans camped on the streets. Bloomberg's Dennis Thomas joins us now live from Seoul with the latest. We continue to see these protests, I think, from both sides, protesters for impeachment and against impeachment and removal of the president. What does this mean? Where are we at right now?
Hi, good morning. So yes, it's a second attempt, as you mentioned, and by what we are seeing from the live images, there is the investigators are making steady progress. As you remember, the last time they couldn't continue to execute their warrant, so this time they come better prepared, and there is a bigger police presence to make sure that this goes smoothly. The acting president has made it very clear that he doesn't want to see any physical clashes. So the investigators this time are determined, and they have a better strategy, hopefully, to make sure that they take Yoon into custody eventually. And it will be pretty unprecedented for a sitting president to be taken into, to be detained. And so South Korea is definitely going through one of this worst political crisis. What it means, I think the Constitutional Court has already started an investigation or a trial into the impeachment attempt that Yoon made, and what this probe is trying to make is that Yoon is also questioned for his role in what he attempted to do on December 3rd. So that's where we are in terms of the protesters. There's a bigger presence today of Yoon protesters on the ground. Local media saying there's around 6,500 of Yoon protesters and a fewer numbers in people who want him arrested. So that's where we are, and we'll get to know more in the coming hours in terms of where things go.
And at the same time, we see the worsening picture when it comes to the economy, right? That adjusted jobless rate rising to the highest since 2021. We know that the Bank of Korea is now under even more pressure to cut, despite the pressure that we see on the Korean won as well. How much is sort of the deterioration in the economic outlook also playing into this, given that we're also dealing with the aftermath of the aviation disaster and just this really long, strung-out political turmoil?
Yeah, so tomorrow's Bank of Korea meeting is going to be pretty crucial, and we already have 2 back-to-back cuts in November and October. And if they go and cut tomorrow, it's going to be one of the, again, setting some kind of record in terms of how policy has moved swiftly. But it's a kind of a very close call. The Bank of Korea wants to wait and see how the past 2 rate cuts have played into the economy. Equally, the government has cut the growth forecast. So there are various factors at play here, and it's going to be a very close call tomorrow. There is a view out there which says that if you go and announce a 3rd cut tomorrow, it's going to be sending a bit more of a pessimistic mood out there and sending a bit of a warning bell from the central bank. So how the bank plays it out tomorrow is going to be, it's a wait and see, but it's very close call, and people are closely following how this tomorrow's meeting goes and what comments we'll hear from the governor tomorrow.
Bloomberg News editor Danny Thomas there from Seoul as we continue to watch that developing political situation very closely today. But coming up on the Asia trade, in the meantime, we'll be unpacking the risks still facing China's property developers with Jefferies. Goldman Sachs' chief U.S. strategist David Kostin will be along with us live from their global macro conference in Hong Kong. We're talking about this global bond market as well with Brandywine Global. They think that Treasury yields could take a breather as the Trump administration prepares to take office. But first, hot, dry winds fanning the Southern California wildfires. Around 2 million people are now warned to brace for more extreme conditions for at least the next 24 hours. We'll get you the latest live from Altadena next. This is Bloomberg.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
Hot, dry winds are raising wildfire risks in Los Angeles and surrounding areas of Southern California, with authorities warning millions of residents of a dangerous day ahead. Let's bring in ABC reporter Melissa Adan in Altadena. Melissa, so how bad is the situation on the ground today?
Absolutely, Sherry. So it is something that has been so hard for so many families to deal with. On one end, you have thousands and thousands of homes like this, just property leveled. So many homeowners without nothing left. It goes on for miles. And this is just one wildfire here at the Eaton Fire in Altadena, California. Then you have towards our coast several thousand other homes that are gone. Right now here in this area, we're hearing activity because there are some signs of trying to rebuild already. The electricity crews are coming, trying to repair nearby things. We've seen bulldozers trying to clear out so much debris because it is going to take so long to rebuild. However, all of this amid these really dry conditions that we've been experiencing. Some parts of Southern California already clocking in 45 to 70 mile per hour winds again today. It is unsettling. People are nervous, and they're definitely anticipating any evacuation warnings if another wildfire were to break out.
Tell us more about these evacuation orders. What sort of assistance is available to residents? Where are they being told to go, and how difficult or how easy is it to be able to get these people out?
Absolutely, Sherry. So that is kind of how all of Los Angeles County and the greater Southern California area has been. We've been on alert, just waiting to see if you get an alert on your cell phone, if you see the news report coming in, if a wildfire is to break out and your area is even under an evacuation warning. Officials are saying get out, have that evacuation plan in place. Make sure that you have a go bag ready to go. Then make sure your route is in place. There are evacuation centers that have opened up across Southern California. But at this point, they're full. Some of them are filled to capacity as now folks from these victims of these wildfires are looking for their temporary housing. So it is definitely an evolving situation, but also some welcome sight. FEMA is on the ground. That is our federal assistance across the United States. They are now set up at 2 locations across Los Angeles County to provide that really key resource, making sure people get funding, get their loans so they can get to temporary housing, so they can file for their insurance claims, so they can get one-time donations, so some money to make sure they have food, water, clothes, making sure they can, if their IDs burn down, their important paperwork. There is just so much to look at for these families. And then again, with that current threat and red flag warnings that we're all under, that people are really stressed and waiting and anticipating any further updates. Sherry?
Melissa, there's been a lot of finger pointing politically, of course, as I can imagine, when it comes to the level of preparedness for Los Angeles in the wake of these fires, right? If you take a look at data, it seems like the area is actually really underfunded for firefighting capacity compared to perhaps other major US cities that face less fire risk. So is there a conversation about how better prepared LA could be going forward and how that feeds into, you know, whether and where these houses and infrastructure might be rebuilt, particularly in light of an expected ongoing fire season that might get worse with climate change?
Absolutely. You know, so first and foremost, people are sad, they're frustrated, and they're angry, and they have a right.
डेटा आ चुका है, डेटा पॉजिटिव है आपका गोल्ड और सिल्वर के लिए, नेगेटिव फॉर डॉलर इंडेक्स। सीपीआई का डेटा आ चुका है, गोल्ड और सिल्वर को इम्पैक्ट करेगा, ध्यान रखना। गोल्ड वैसे रेजिस्टेंस जोन पर ही है अभी, डेटा पॉजिटिव ही है, ध्यान रखना, फॉर बोथ गोल्ड एंड सिल्वर। सीधा आपका 8 PM पे यूएस मार्केट ओपन है, 9 PM पे क्रूड ऑयल की इन्वेंट्री। क्विक 2711 के आसपास रेजिस्टेंस है, वहाँ अगर रेजिस्टेंस मिलता है तो वहाँ पर एक सेलिंग की जा सकती है। करंट लेवल भी रेजिस्टेंस का ही है, काफ़ी बार टेस्ट हो चुका है ये ऑलरेडी वैसे तो, एंड ये रीटेस्ट भी हो चुका है ऑलरेडी, मार्केट रीटेस्ट भी कर चुका है। तो ये एक रेजिस्टेंस जोन है, अच्छा रेजिस्टेंस जोन है, अगर आ जाए तो वेल एंड गुड है। करंट लेवल पे अदरवाइज हमारे पास ये एक रीटेस्ट लेवल है, ऑलरेडी कर चुका है रीटेस्ट, ध्यान रखना ये, बट दैट इज़ ऑल्सो रीटेस्ट लेवल। अगर फिर से रीटेस्ट करता है तो यहाँ पर भी एक सेलिंग बन सकती है गोल्ड में। ये रेजिस्टेंस नहीं है, ध्यान रखना, ये रीटेस्ट लेवल है, कर चुका है पास्ट में एक बार रीटेस्ट। बाकी देखो क्रूड ऑयल के रिगार्डिंग भी एक न्यूज आई है, विच इज़ गाजा सीज फायर। हमास की ओर से ऐसी रिपोर्ट आ रही है कि वो जो सीज फायर डील थी उसको आगे बढ़ा सकता है, सीज फायर डील को आगे बढ़ा सकता है, मतलब रेडी है सीज फायर डील के लिए। हाँ, यहाँ पर भी रेजिस्टेंस है, ये भी मल्टीपल टाइम टेस्टेड है, बट अभी फिलहाल न्यूज़ बेस मुंह में कैंडल है तो थोड़ा संभल के। इट इज़ ऑल्सो रेजिस्टेंस 2690, बट अभी ये न्यूज ही है, देखो क्या इम्पैक्ट पड़ता है। डेटा वैसे आ चुका है। कोर सीपीआई का डेटा नेगेटिव था। डॉलर इंडेक्स के लिए पॉजिटिव फॉर गोल्ड एंड सिल्वर, बाकी दोनों ही डेटा मंथ ऑन मंथ और ईयर बेसिस सीपीआई का डेटा फ्लैट है, न्यूट्रल। पर 2711 वाला भी रेजिस्टेंस अच्छा ही है, काफी अच्छा लेवल है वो भी। कि अब सीधा क्रूड ऑयल की इन्वेंट्री एंड यूएस मार्केट ओपनिंग, वेटिंग फॉर दैट। इसको रिमूव ही कर दो, या फिर अगर रीटेस्ट देख रहे हो तो संभल के। ओके, सो दीज आर द लेवल्स इन गोल्ड। लेट्स बैक टू द क्रूड ऑयल। क्रूड ऑयल भी साइडवेज ही पड़ा हुआ है, कुछ मोमेंटम नहीं हो रहा है। ऊपर रेजिस्टेंस है, वैसे साइडवेज है, ध्यान रखना। इट इज साइडवेज नाउ, यू कैन कंसिडर इट साइडवेज। एफईजी ब्रेक हो तो बढ़िया, नहीं तो कोई ट्रेड फिलहाल नहीं है। रेजिस्टेंस से सेलिंग आती है तो वेल एंड गुड। तो गैस भी देखोगे कैंडल ओपन इक्वल टू लो बनी है 0.1 का ही डिफरेंस है बट ओपन इक्वल टू लो है वापस डे हाई के रेजिस्टेंस पे आ गई है रिमूव कर दो इस एफयूजी को थोड़ा सा नीचे आ जाता तो बेटर रहता सपोर्ट पे
You can see the live pictures right there of South Koreans camped on the streets. Bloomberg's Dennis Thomas joins us now live from Seoul with the latest. We continue to see these protests, I think, from both sides, protesters for impeachment and against impeachment and removal of the president. What does this mean? Where are we at right now?
Hi, good morning. So yes, it's a second attempt, as you mentioned, and by what we are seeing from the live images, there is the investigators are making steady progress. As you remember, the last time they couldn't continue to execute their warrant, so this time they come better prepared, and there is a
क्रूड में भी देखोगे ओपन इक्वल टू लो है कैंडल जस्ट लाइक नेचुरल गैस स्टिल ऑन रेजिस्टेंस क्रूड तो मल्टीपल टाइम टेस्ट कर चुका है सीपीआई के डेटा का थोड़ा सा पॉजिटिव इम्पैक्ट ही हो रहा है क्रूड पे भी 7 PM सीपीआई डेटा ऑलरेडी आ चुका है सीधा अब यूएस मार्केट ही ओपन होगा. क्रूड गया साइडवेज. अब या तो ये नीचे आ जाए या फिर कोई नया रेजिस्टेंस बनाए या फिर ब्रेकआउट ही कर दे. अदरवाइज अभी और कोई ट्रेड नहीं है. साइडवेज है, मोमेंटम ही नहीं आ रहा. नीचे शायद मे भी कोई सपोर्ट रहा है यहाँ पर जिसकी वजह से रुक रहा है, बट यहाँ पर 15 मिनट में दिख नहीं रहा है गैप अप होने की वजह से. फॉरेक्स में देख लेना, एमसीएक्स में तो कुछ नहीं है. अगर सेलिंग नहीं आती है बिफोर इन्वेंट्री तो फिर इन्वेंट्री पर ही इम्पैक्ट होना चाहिए. बाकी कोई न्यूज आती है तो वी विल सी दैट. क्रूड ऑयल इन्वेंट्री शेड्यूल एट 9 PM. भी कंटिन्यूसली ओपन इक्वल टू लो बनाया जा रहा है रेजिस्टेंस जोन के अराउंड. लास्ट कैंडल भी ओपन इक्वल टू लो, करंट कैंडल भी अगेन ओपन इक्वल टू लो.
Some welcome sight. FEMA is on the ground. That is our federal assistance across the United States. They are now set up at 2 locations across Los Angeles County to provide that really key resource, making sure people get funding, get their loans so they can get to temporary housing, so they can file for their insurance claims, so they can get one-time donations, so some money to make sure they have food, water, clothes, making sure they can, if their IDs burn down, their important paperwork. There is just so much to look at for these families. And then again, with that current threat and red flag warnings that we're all under, that people are really stressed and waiting and anticipating any further updates. Sherry?
Melissa, there's been a lot of finger-pointing politically, of course, as I can imagine, when it comes to the level of preparedness for Los Angeles in the wake of these fires, right? If you take a look at data, it seems like the area is actually really underfunded for firefighting capacity compared to perhaps other major US cities that face less fire risk. So is there a conversation about how better prepared LA could be going forward and how that feeds into, you know, whether and where these houses and infrastructure might be rebuilt, particularly in light of an expected ongoing fire season that might get worse with climate change?
Absolutely. You know, so first and foremost, people are sad, they're frustrated, and they're angry, and they have a right to be angry, right? So everyone where you live in different municipalities, if you're either responding to
कुछ ज़्यादा अच्छा इम्पैक्ट हो गया गिफ्ट निफ्टी पे. यहाँ डेटा की न्यूज़ है, 7 PM का डेटा गिफ्ट निफ्टी के लिए भी अच्छा ही आया है. पॉजिटिव फॉर गिफ्ट निफ्टी.
positive in terms of where it's heading.
We don't see inflation accelerating from here like other people. Inflation is going to be demand driven. I just don't see enough demand.
More towards the cautious side, not the optimistic side.
There are a lot of things out.
Like भी करते रहो guys. 70 people are watching. 100 likes is the target. Don't forget to like the stream. Like करते रहो फटाफट से.
let alone the week after, and all of these different policies that are potentially going to whip around global markets.
I was in Palm Beach this weekend, and one thing that stood out to me is the foreign policy and potentially the trade approach of Donald Trump is going to be summed up in one word: unpredictable. On purpose. There's an element that Donald Trump wants in terms of keeping adversaries and maybe sometimes some of their allies on their toes. But what this story says to me is that Scott Bessent and his wing of the cabinet is winning out at this moment. It's the sausage making in real time.
So we've had three different versions of this story over the last 2 weeks or so. We had one from the Washington Post, another from CNN, and another from the team here at Bloomberg. And they all acknowledge that they haven't actually crossed the desk of the President-elect Donald Trump just yet. But I think this one is important.
And we store it all in Grail, a data lakehouse purpose-built to deliver answers and intelligent automation, not just more data on glass.
For the Federal Reserve, that's one of the reasons why we've seen these inflation expectations so elevated. But it is nice to see that, at least on the shelter side, we're seeing a bit of a deceleration. And a lot of economists out there are saying that we will continue to see that throughout the course of 2025. But we're going to have to be a little bit patient.
Josh, I always like watching the indexes for food within this. I know you're keeping close tabs on this as well. You've got your own, magical hands in the kitchen that I've seen on your social.
Brad, I feel like people always tell me I come on, and you guys always tell me I'm overly optimistic and I'm overly bullish. So we'll spin a bit of a bear take here, right? Groceries up the most since October 2023. We've been watching egg prices shoot higher. And I think the key part of this metric, guys, and overall headline CPI is, of course, when we talk about core CPI, we're talking about the Fed, we're talking about interest rate cuts. When we're talking about headline CPI and the fact that that moved higher, we're talking about the actual consumer, right? And one thing I've spoken to economists about that's going to be a key thing in 2025, we're talking about potential wage growth slowing in 2025, right? If we're going to be making less money, the fact that headline CPI and the things that people spend on is continuing to remain sticky is going to be an interesting pressure point for the Fed and the overall economic story in 2025. I was speaking with ADP chief economist Neela Richardson about this. We were talking about slowing wage growth after the last ADP report. She said we're getting to a point now where headline CPI and wage growth are starting to converge and are at some of their lowest levels that we've seen in this post-pandemic era. It leaves a looming question as we move forward throughout the year. We've had this consumer resiliency story, but if the things that we actually spend most of our money on, like food and energy, are not really coming that much lower, what does that mean for consumer spending in 2025 does feel like an emerging story as we move forward.
It certainly does, and we're starting to see that in the sentiment numbers too, right? When you take a look at University of Michigan, I think it was the 5 and 10 year expectations that hit the highest level that we have seen in years. And then you pair that with
necessarily or most of their money on core inflation. We spend our money on gas at the pump and food at the grocery store, right? And so if that is not coming lower at a certain point, it becomes a major sticking point, and we'll have to see how it plays.
And gas at the pump, 4.4% increase from November to December. So pretty significant.
Surge pricing, some might call it.
40% of the increase that we had seen there was accounted for by energy prices. Josh and Ali, thanks so much for taking the time here with us this morning. Appreciate it. Before we head to break, let's get a check on markets. As of right now, futures are trading higher. We're taking a look at the Dow futures. They're up by about 1.5%, about the same on a percentage basis for the S&P 500 and the NASDAQ futures. You're seeing those higher by what looks like about 1.9%. And we're also going to have much more CPI coverage ahead just after the break here when we begin Morning Brief.
As observability has evolved from observing data to actually give you insights, give you automation with Dynatrace, we keep pushing the boundaries for you and help you with the new challenges coming up.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Shauna Smith alongside Brad Smith. Let's get you the three things that you need to know today.
Good morning, everyone. First up, the U.S. CPI report, Consumer Price Index for December, sending stocks higher here. In headline inflation data, it came in line with estimates, while core inflation came in below estimates. Treasury yields slipped on the back of the report as investors breathed a sigh of relief that the prints did not come in hot.
Plus, big bank earnings kicking off on Wall Street. We've got JP Morgan, Goldman Sachs, Wells Fargo, and Citi all out with results this morning. JP Morgan shares pushing higher after trading revenue rose 21% from a year ago for its biggest fourth quarter haul on record. JP Morgan CEO Jamie Dimon out with some commentary this morning saying that the U.S. economy, it remains resilient and that businesses are optimistic on a pro-growth agenda going forward.
And the SEC sues Elon Musk. The commission alleging Musk misled shareholders about his Twitter stock purchases and cheated Twitter shareholders out of more than $150 million by waiting too long to disclose his growing stake in the company as he prepared a takeover bid. The agency's complaint, they accused the billionaire of failing to promptly report that he had amassed more than 5% of the social media platform's stock in early 2022, a revelation that would have sent the stock's price up. The lawsuit was immediately disputed by a lawyer for Musk, who said the action is, quote, an admission that the SEC cannot bring an actual case because Musk has done nothing wrong and everyone sees this sham for what it is, end quote. The market reacting to the CPI report for the month of December, a positive one today with investors buying into stocks and bonds. There you're taking a look at the U.S. major averages here moving on the back of this report. We're higher across the board. The Dow up 1.6%, 1.5% for the S&P 500, 1.8% for the NASDAQ futures here. And we've been breaking down this report since it broke, Shauna. And one of the things that jumps out to me is that it wasn't shelter that actually led this report. It was energy. Energy and gasoline prices specifically came to mind here. And we're at the top of that, you know, at least at one of the top of the stanzas within this report here. And among the other indexes that we did see some increase, we were breaking down food. Food, one of the largest increases that we've seen in several reports here as well. So that is something both at home and away from home that's certainly getting called into the minds of some of the consumers out there. But for investors, they're seeing this as a better than expected, or at least in line with report that should be, or at least put a little bit of the fear coming into the report at the side for now, and now all eyes shift towards several meetings out for the Fed.
Yeah, exactly. We're seeing that reflected in the futures action here this morning. You're looking at all three of the major averages well into the green here ahead of the opening bell. When you flip over to the bond market, you've got yields pulling back from those levels that we were closely watching here, the massive climb to the upside here. You have prices moving to the upside, yields falling just a bit. So when you take that for what it is, I think at face value here, the market very much almost looking at this print coupled with the last jobs report that we got out, very much a Goldilocks sort of economy at this point. When you talk about what this means here going forward and digging into this print where we are seeing some of those price increases, it's right to call out energy, right? Energy was the biggest culprit of the rise here that we did see, or the headline gain. At least 40% of the monthly all items increase that was accounted for by energy. We just had Ali on set here moments ago talking about the fact that the gasoline index that jumped 4.4% here on the month. So again, a couple of key readings to keep in mind here going forward, where we did see some of those price increases beyond energy. You also had shelter, airfare, used cars and trucks, new vehicles, medical care, also motor vehicle insurance all contributed to some of those price rises here for the most recent month. So again, moving forward here, what does all this mean for the Fed, at least from the commentary that we've gotten from economists, from strategists here so far this morning? Is it's still too early to tell. Obviously, the Fed's going to remain data dependent and wait for more readings just to get a better sense of where things stand.
Yeah, and I'm taking a look at the CME Fed Watch probability. As of right now, it seems like the first instance, and there has been a little bit of movement on this since yesterday and after this report, where we were looking at the potential for a rate cut, not until, you know, the midpoint of this year, and even after that, potentially even into Q4. But as of right now, I'm taking a look at the CME Fed Watch probability for the month of June. And at that meeting, now you've seen some of the probability shift. Yesterday, it was for staying the same and no cut for 42.7% of the probability, leaning in that direction. But now you've actually seen that shift towards a 25 basis point cut coming at that meeting. So that is where things are starting to knock around just a little bit more, especially as we start to run the calculus coming off of prints like this and the economic data that the Fed is tracking so closely here.
All right, we want to continue this conversation around the December CPI print. Core inflation coming in below expectations. We're just 2 weeks out from the first Fed decision of the year. Markets are expecting the Fed to hold rates steady. No surprise. Obviously, this has long been forecasted within the Fed rates prediction markets here at the January meeting, with many projecting just one cut now this year. We want to bring in Tom Porcelli. He's the chief U.S. economist at PGIM Fixed Income. Tom, it's great to see you. I'm curious what you make of the printout this morning and maybe what this spells is ahead here for the Fed.
Yeah, look, it was a good outcome. And I think just given the sort of the level of fear, right, given the sort of all this momentum toward the idea of, hey, inflation might reaccelerate this year, I think this is exactly what we needed. It's almost like a sobering report in that regard. Because I think too many people were really buying into this idea that you could potentially see as sort of big acceleration in inflation, when I think there's still a lot of evidence to suggest that inflation will actually continue to sort of slow as the year progresses, right? Like I'm thinking of things like, goods disinflation, which remains in place per this report that we just got. If I look at like shelter prices, which, are starting the process of softening up. Even if I look at something like wages, which are slowing down, I mean, there's a lot of, I think, evidence to suggest that you can actually see lower inflation by the end of the year. And I think people were just a little disillusioned by some recent prints. So this is exactly, I think, what we needed.
Lower inflation by the end of the year, but is it enough to hit the 2% target from the Fed? And should that still be the target from your view, Tom?
Yeah, I think this is such an important discussion point. Look, I think you get close to 2%. I actually don't think you'll get to 2%. So our call for core PCE is that you're about 2.2%. By the end of the year. But here's the thing. I think it's good enough. I think you're close enough to target for the Fed to feel very comfortable if that outcome were to materialize. I mean, look, let's all be sort of very analytical about this. It's incredibly difficult to hit with precision 2.0%. It's, in fact, if you think about the percentage of time that we've spent at 2.0% over history, it's very small. So I think you want it within a comfortable band of the target. And I think that's exactly where we will get. And I think that'll make the Fed feel very comfortable. Also, I would add, I think it also suggests to me, the market is now starting to price in cuts again for the June meeting. I think the idea that people were just abandoning ship on the idea of cuts this year, again, I think that was a little premature. I'm not saying it's not an unreasonable conversation to have, but I think, you think about that payroll report from last week, which really got people starting to think, hey, maybe the Fed is not going to cut at all. Just take a step back from that report. It is an incredibly volatile report. In fact, it's twice as volatile as the ADP report, yet they continue to average roughly the same amount, about 150,000 jobs over the course of last year. So think about that. I mean, I think that's important context when you see a 6,000 jobs print come across your screen. Just recognize there's a lot of volatility behind it.
Tom, there has also been some talk here about the fact that maybe the Fed could potentially raise rates before the end of the year. Obviously, it's not being priced into the market yet, but there has been more and more chatter about that. When you take a look at this print, does that at least take that narrative off the table for now?
Yeah, I think it does. I mean, look, and to be totally transparent on this, we look. I can assign a probability to anything. It's the sort of the degree of probability, or how lofty the probability is. I think the likelihood that the Fed would hike rates this year, I think, was lower than some of the chatter that was really starting to sort of seem to build over the last few days. So, yeah, I do. I think that a number like this certainly throws some cold water on that idea.
All that in mind, you have an incoming Trump administration where it seems like the Fed is going to be watching for the effects of early month policies from the incoming administration. What are perhaps the pillars of what's been campaigned on that would rattle the Fed the most, or that they're waiting to see exactly how the economy will ingest that?
Yeah, again, this is really important for us to talk about. I think what the Fed is doing right now by stepping to the sidelines is right. In fact, I would actually argue prudence demands that the Fed step to the sidelines for the moment, just to see what is going to unfold in the coming months. I mean, when I think about our view for the economy, right, we expect continued economic expansion over the course of 2025. But if I look at the distribution, we have what we call very fat tail, statistically speaking. In other words, I can easily make an argument for some downside risk, and I can also easily make an argument for some upside risk, depending what policies the Trump administration unfolds early on. So I think it's right for the Fed to sort of step to the sidelines for the moment, reassess, and look. They've actually taken back a lot of the aggressive tightening that they put in place. I would actually argue we're really close to getting toward neutral. So I think they've done the right thing thus far, and I think they continue to do the right thing.
Could tariffs, though, disrupt some of that progress? And when you square that with the gradual report that we got out earlier this week of gradual tariffs, of course, that has then sparked this conversation about whether or not that's a balanced approach to controlling inflation, whether or not that can maybe stoke some of those longer-term inflation expectations. Where do you stand?
Yeah, so look, I think if you're going to go full steam ahead with tariffs, which again, just sort of economically speaking, I think that's a terrible idea, because here's the problem. Not only do you potentially stoke inflation, sort of in the immediate term, if you go sort of across the board from a tariff perspective, but here's what people, and I think people in D.C., I hope that they're debating this, although I don't know that it's really much of a debate. Tariffs are a tax. That is a full stop idea. The problem is it's a two-edged sword. So not only do you run the risk in the immediate term of potentially putting some upside pressure on inflation if you want to get across the board tariffs, but I think the problem then becomes that over the sort of the course of sort of the ensuing quarters, and not many, over the course of a few quarters, you then have a growth hit on the back of increase in prices. So to me, it could really. I've been saying Donald Trump has been handed a really nice economic backdrop. I think it's his job now just to sort of keep it going.
Tom, always a great pleasure to get some of your insights. Thanks so much for taking some time with us just after the report and before the opening bell.
Thanks.
Certainly. It's a good day to be a big bank. JP Morgan, Citigroup, Goldman Sachs, and Wells Fargo all posted strong profits during the fourth quarter, thanks to a resurgence in deal-making and investment banking strength. Joining us now to dive into the results, we've got Chris Whalen, who is the Whalen Global Advisors Chairman. Chris, good to have you here with us in studio.
Pleasure. Good morning.
Absolutely. You gave us a report card for this morning's earnings results, and we're showing it for our viewers here. The only name that earned an A was JP Morgan. Why was that?
Stability and predictability. They deliver quarter after quarter. You only saw 1% loan growth, which I thought was kind of interesting. And to me, that says that Jamie Dimon's being picky about the assets that he puts on the book. JP Morgan's only half bank, remember. The other half's the investment side. But overall, good quarter, a little bit of a credit build. So we're going to start worrying about credit, I think, in 2025. That was supposed to be part of the narrative earlier this year, as you know, in the third, but it didn't happen. So banks ran like crazy. The average in the bank index we published was 45% through the third week in November, but then they started giving it back. So I think you're going to see financials, even with these good results, continue to give it back simply because people are worried about the economy. Not consumers, but the commercial side, commercial real estate, and particularly corporate debt. We have corporate debt spreads that are as tight as they've been in years, and yet bankruptcies are going up dramatically. So there's these weird discontinuities, I think, in the data set when you look at the industry right now. Good earnings, killing it in terms of capital markets, both debt and equity underwriting in the fourth quarter. And yet there's this big question mark, which is where's the recession? Everybody was postured for, the Fed was postured for a recession, didn't happen.
Do you think banks can continue with this momentum here before we get to some of your other ratings here? But can they continue with this momentum if the Fed doesn't cut further this year?
No, I think that's the other part. One worry is credit. The other is maybe today's rates are where we're going to be living, particularly as you see long-term rates extending. That's the really interesting thing that's going on now. Imagine if Fed funds stays at 4%. But we end up with a long bond over 5, and particularly the 10-year. Imagine if that gets close to 5. What that will tell us is that the mark-to-market problems that many banks still have are not going away. But on the other hand, the loan side has pretty much repriced since COVID. So that's the good news. 2 years ago, if I had done a mark-to-market for you on Bank of America, it was pretty ugly. The security side still hasn't moved much because they don't want to sell those bonds. The average yield, Bank of America is down in the twos. So if you look at the bond market today, where are those securities trading? 80? They don't want to sell those. But the loan side has been okay. Bank of America, the rest of them have been growing. So, it's kind of a mixed picture is what I'm saying.
As we think about many of these banks, and maybe we can toss up the grades that you're giving them as well, who do you believe is best positioned if we were to see something that Jamie Dimon talked about in deregulation and how much these banks are relying on that as well for future deal making to come forward, and who also might be relying on this to deploy some of their own capital towards some of the smaller or regional banks as well if there are opportunities that present themselves?
If we're talking about M&A, I think you're really talking about banks outside of the top 10.
Yeah.
I cannot imagine the Fed or the OCC allowing any of those banks to merge. U.S. Bancorp did that very large transaction with Bank of California.
Yeah.
They're done for a while. They have to absorb that. It's good for the bank, by the way. But go down the list. Who else is going to be allowed to make an acquisition? Morgan Stanley could. Goldman could potentially. But I really think for the rest of them, Wells Fargo, imagine if they get let out of jail during the Trump administration. They then have to make a decision. They've been shrinking that bank for the past 4 years. They're continuing to shrink.
What do you think of Wells Fargo? You had a B, I believe it was a B minus, I want to say, for Wells Fargo this past quarter. Shares, though, are up 4.5%. It looks like the street is at least encouraged B, not B minus. Why did it fall a little bit short in your eyes?
There's nothing going on. Yeah. I mean, I do a lot of work in the mortgage business. They are shrinking their book. JP Morgan is now the largest servicer in the U.S., not Wells Fargo. Wells used to have a third market share in residential mortgages, but they have made a conscious decision to get out of that, get out of areas of investment management, offshore, for example. They completely jettisoned that business. So I think Wells has to have a bit of an epiphany that says, do we want to keep shrinking? Do we really want to get this bank down to, say, below $1 trillion? I don't think investors want that. Or if we're going to grow again, where do we grow? Do we just focus on domestic? Do we stay away from mortgage?
What would make the most sense?
I think it was a shame that they were driven out of mortgage by the regulators. I really do. I think that was a mistake. They saved the U.S. mortgage market after 2008. Okay? So, we need to have a more level, less volatile regulatory environment, whether there's a Republican or a Democrat in the White House. To have banks have to manage their business based on whether or not Elizabeth Warren is going to attack them or not is absurd. You can't run a business that way.
All right. Well, Chris, always great to get your insight. Wish we had more time with you. Thank you so much for taking the time to join us here.
My pleasure. Have a great day.
You too. All right. Well, coming up here next on Morning Brief, we're going to count you down to the opening bell on Wall Street as stocks push to the upside. Plus, we'll continue with earnings and break down results out this morning from BlackRock. Plus, Tesla CEO Elon Musk sued by the SEC. We'll break what's behind the suit. Got that for you and much more coming up on Morning Brief.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
That's the opening bell on Wall Street. It's music to your ears as Pitney Bowes rings the opening bell, celebrating 75 years. NASDAQ, you're seeing a live look at health in tech ringing the opening bell. They've got some funfetti flurrying in the air there, making its way to the ground. All right, taking a look at today's bell ringers and now taking a look at today's opening cross. We're taking a gander at the Dow Jones Industrial Average up by about, that's calibrating. It's up by 1.5% here as things are certainly moving around here. But off of the December CPI print, we did see all three major averages strongly in the green. That's exactly where we open up. Dow Jones Industrial Average up 1.5%. NASDAQ Composite up 1.7%. S&P 500 up 1.4%. Let's dig deeper into the 11 S&P 500 sectors here. We've got them pulled up on the screen so you don't have to go searching for them. We're up across the board here. We'll keep this brief. Real estate moving to the upside by the most. It's up by about 2.5%. And then additionally here in this sea of green, you've got energy, which actually was the biggest contributor to the all items index for CPI. You're seeing that higher for XLE by about 0.2%. But actually, let me toss this back up here real quick because we did see that leading the pack earlier. And over the past 5 days here, you're seeing that up by about 4%. And so earlier this week, it was one of the outstanding or outliers, rather. And let's also take a brief look at the NASDAQ Composite. We've got the NASDAQ 100, I should say. If we were to try and put 3,000 names on here, let's just say we would never be able to click through. But this is a sea of green. That's the best way we can define it. And actually, no laggards in the NASDAQ 100 at the top of today's trading session. That is a rarity. All right, so we're taking a look at some of the biggest leaders there. Tesla is certainly one of the biggest movers to the upside as of right now by about 3%. Perhaps I can bring in, as we get one spot of red that pops up on the screen here into it. Perhaps we can toss things on over to Jared Blickery, get a little bit more context around this.
Well, thank you, Brad. One of my talking points this morning is that the rally is broadening over the last few days, and we're leading with the small caps here. So I'm going to put the Russell 2000 in. I'm going to put a one-year chart, and I'm just going to show you we had come down to this is a long-term chart. So we come down to a support level. This also happens to be bouncing off the 200-day moving average. That's not quite what I drew in there, but the point is small caps are bouncing from a strong support area. I've also been tracking this head and shoulders pattern in the S&P 500. This, after a false breakdown over the last few days, is resolving to the upside. This points to a continuation. It suggests that maybe we are in the clear for higher prices in stocks and whatnot in the risk markets past the inauguration. So that's kind of a bold prediction, and there are lots of caveats there, but this is what it's suggesting right now. Also want to check in on the 10-year T-note yield because that is dropping by 12 basis points. That is a huge amount. That is a huge release valve for stocks. So we're also seeing the U.S. dollar down. I will show you that as well. That's down about 57 basis points. Not a whole lot, but it's off the highs there. When it's pressuring, when it's going highs, forging those new multi-year highs, that's when we see that spill over into the equities market. So this is a release here. Want to check in on the big banks. I'm going to do that real quick just because we got some earnings there. The banks have been leading this morning. Although JP Morgan, it was up in the pre-market down 0.8%. But look at Wells Fargo. Look at Goldman Sachs. Each of those up just shy of 5%. Citigroup up 4%. Bank of America up 3%. And guess what, guys? The regional banks, which aren't even reporting yet, PNC is tomorrow. We got those in the mix. Those are flying high here. We have a number of these in the 3% range, a few in the 4% range. And we're also seeing some other leadership that I want to get back to because in the context of this being more broad-based, look at this. These are all my leaders. Everything is green. Haven't seen this in a while. Home builders are leading the pack. That's interest rate sensitive. So that relief valve that I was talking about with the 10-year, that is contributing to that because mortgage rates are tied to that. They are coming lower. ARK is up 4%, that innovation fund. So disruption is doing well. Solar is doing well. Bitcoin's doing well. We'll get to that in a second if I have time. Small caps, biotech, and also retail. So a broad swath there is getting a jump. We've got to go to gold. And gold is interesting today because we're getting a bounce off of this good news report, which is an inflation report. And we also got a bounce off of the bad, which is good news for the economy. The jobs report last Friday was good news for the economy, but it it was bad news for stocks, guess what? Gold was going up anyway. So anything that goes up on both bad news and good news is in a bull market. Got to mention real quick, copper rising to a 2-year high, or 2-month high, excuse me. But I want to close with crypto, because crypto has been on an amazing run over the last few days. Here's a 3-day look. Well, it's not showing right now. Let me try and pull up the 5-day. We were at 89,000 only on Monday, and now we are right back up, knocking on the doors of 100,000, not quite up to 99, but that is significant progress after a scary few days there. Or maybe it was only a few hours, Shauna.
I know. It's hard to decipher, but just because of the movements, the wild movements that we've seen. We're going to talk a little bit more about the crypto market coming up later next hour. Jared, thanks so much. It's time now for today's strategy session. Today's CPI report sending stocks higher as investors breathing a sigh of relief on the inflation front. So could this print be the catalyst for the next leg higher in stocks? Let's talk about that and more with Kevin Mon. He's Hennian and Walsh Chief Investment Officer. Kevin, it's great to have you back here on Yahoo Finance. So what do you think? How big of a catalyst do you expect this print to be here for the market?
Yeah, Shauna, I believe that the beginning stages of the new year are likely a microcosm for what 2025 overall will look like for the markets. More uncertainty, more short-term bouts of volatility, changes in leadership, but ultimately more growth opportunities ahead. However, investors need to be realistic about their expectations for overall stock market gains. And here's a great stat for all of your listeners. Going back to 1950, Shauna, there have been 9 times where the stock market has rallied by 20% or more in consecutive years. 2024 was the 10th time. Good news is that in 8 of those 9 times, the stock market was higher the following year. Perhaps the bad news, only by an average gain of 3.6%. So investors are going to need to be a lot more selective in the new year to find those growth opportunities, and Jared touched upon a few of them. Smaller cap biotech, smaller cap regional banks, and then leaning back into the AI revolution, because that's a long road ahead and there's plenty more growth opportunities within the overall AI ecosystem.
I think both of us were sitting on set, Kevin, hearing that and just like, dang, all right, that's some serious cold water. Only 3% on average after those 2 consecutive years of 20% gains here. So ultimately, what kind of chop, perhaps, what kind of volatility then should we expect, even if we were going to see even 3% or more type of growth in the S&P 500?
Yeah, Brad, last year was an abnormal year for volatility. If you look overall, the number of days where the stock market declined by 1.5% or more was less than 4% of the time. So investors should anticipate that low a level of downside volatility. And we're going to continue to play the Fed guessing game. Now we've had 2 positive inflation reports. We had a positive, or actually a hot jobs report last Friday. So I think the Fed does nothing in January. They don't meet in February, and there's a high likelihood that they don't do anything in March either. So no interest rate cuts, certainly no interest rate increases during the first quarter of the year. That will call investors into question, well, when are they going to cut next? And when there'll be a return of inflation? So that could introduce some choppiness. And we can't just necessarily throw a dart this year at the S&P 500 dartboard and expect to get a gain. You're going to have to actually search for some of those growth opportunities, but I believe there are numerous growth opportunities ahead.
Kevin, where are they?
Well, the first place I would start is in the AI revolution. When I talk about that, everyone wants to go into semiconductors and chips and Nvidia and Broadcom, and certainly there's more growth opportunities there, Shauna. But we need to look beyond that as well. Look into the software companies, the hardware companies, and at the top of that chart right there, data centers, which you generally find in the real estate investment trust category, or REITs. Consider companies such as Digital Realty, Equinix, even Iron Mountain. But as we continue to find more and more, these data centers require tremendous amounts of electricity, and they run very hot. So that introduces the cooling solutions from companies such as Vertiv or Modine Manufacturing, and of course the utilities that supply all that power to them, whether it's natural gas, electricity, or now, as we're finding out, nuclear. So I think that's one area that's ripe for investment opportunity, and then jumping into, of course, again, the biotechs and the regional banks as well, Shona.
Kevin, coming off of the CPI print for December that we've been breaking down throughout the morning, it seems like there's more of a tenor that the Fed could be in wait-and-see mode after the inauguration, of course, waiting for future data prints as well, just to see how policy changes might be ingested by the economy. Where are the opportunities and which sectors do you think are best positioned to benefit perhaps from a pause from the Fed?
Sure. And one thing we need to keep in mind, as of December, according to the Fed's dot plot chart, they're only predicting 2 rate cuts of 25 basis points each this year. In total, another 2 rate cuts of 25 basis points each in 2026, and just one rate cut of 25 basis points in 2027. In fact, by their own inflation gauge, they don't believe that core PCE will get to 2.2%, still above their 2% target, until the end of 2026. So I think that Fed path forward for lower interest rates is going to be very gradual, and investors shouldn't expect much more. So look for those companies within those sectors that pay good dividends, that have strong balance sheets, and can weather a potential economic slowdown. Don't forget about consumer staples. Look to some consumer discretionary names that allow the consumer to be more frugal. How about a name like Amazon that continues to dominate the e-commerce world? And then as interest rates do gradually move lower, expect more M&A activity. And that's where the smaller cap biotechs and the smaller cap regional banks come into play, Brett.
Kevin, how close are you watching, just in terms of what's going to be the biggest driver of the market this year? Is it the Fed moves? Is it the latest reading on inflation and jobs and the assessment there? Or is it earnings? And I bring that up just because some of the talk this morning is on the heels of that softer than expected inflation print. Maybe the focus is on earnings, and that is going to be enough here to be that next catalyst higher for markets.
Yeah, Shona, the markets are still trading at elevated multiples above both their 5 and 10-year averages. So what helps bring down those multiples? Increases in earnings, or on the flip side, decreases in price, but no investors like that. So we want earnings to grow, and we want that earnings momentum to extend beyond the Mag 7 into the not so magnificent other 493 stocks. Fortunately, as it's forecasted now, they're expected S&P earnings growth of about 15%. Perhaps if inflation continues to stay moderate and we get a couple of interest rate cuts from the Federal Reserve and the economy doesn't slow too much, we could see even more earnings growth, and that would make opportunities in the stock market even more attractive. So yes, I'm going to be watching GDP growth. I'm going to be watching the inflation prints, and then of course the unknown. If, in fact, tariffs will be put into place, what will the retaliatory tariffs look like, and will they have an inflation consequence themselves?
Kevin Mon of Haney & Welsh, thanks so much for taking the time here. We appreciate it.
My pleasure. Have a great day.
You too. Coming up, everyone, we're taking a look at the latest moves in crypto ahead of a new administration and SEC chair. That's coming up.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Catalyst. I'm Shauna Smith. We're 30 minutes into the U.S. trading day. Let's get you the three catalysts that we're watching this hour. First up, the market reaction to the December inflation print. We'll break down what to expect for the Fed and across asset classes as inflation shows some signs of cooling. Plus, we break down commentary from big bank earnings as Jamie Dimon says that the U.S. economy remains resilient. And President-elect Trump's pick for energy secretary heading to Capitol Hill today. We're going to break down what the pick means for the future of the industry and oil prices. Let's take a look at some market headlines to start the hour and take a look at the major averages here. All three of the major averages pointing to the upside. We're looking at gains. That has been the case all morning here. Certainly risk on sentiments following that CPI print that we got out this morning. Also helped by some strong earnings that we're getting from some of the largest banks here. You've got the NASDAQ up just about 2%. The S&P up about 1.5%. Not too far from that 6,000 level now, at least less than 100. And then you got the Dow up just around 700. That's good for a 1.7% move to the upside here. Lots of questions about whether or not this momentum is going to stick and what ultimately this means here for the Fed down the road. Let's flip it over to Bitcoin. We talked a lot about some of the correlation that we've seen between Bitcoin prices and also the S&P. We're seeing Bitcoin rising once again here this morning, just shy of that $100,000 level here. So again, Bitcoin moving to the upside here. You're taking a look at that intraday chart here and still trading just below 100,000. All right, joining us now for more reaction on today's CPI print, we want to bring in our very own Josh Schaefer. And Josh, when you take a look at the gains I was just mentioning in the market right now, how do you think investors are thinking about this print and this risk on mentality that we're starting to see?
We finally got a break in the rise in rates, right? We talked for the first several days of this week. It's Wednesday now, Monday, Tuesday. The whole story was the 10-year keeps going up. The 10-year keeps going up. What can bring us some reprieve on this rise in the 10-year as investors get nervous as we were headed to that 5% level? Haven't really hovered above 5% since about 2007 on the 10-year. Well, the 10-year is down about 10 basis points right now. It was down as much as 13 basis points. That seems to be sort of a key level or lever, I should say, as that comes lower for stocks to sort of rally. And you're seeing that, Shauna, when you take a look at the sector action too. I'm looking at the Wi-Fi Interactive right now and just taking a look at the broad-based gains we're seeing. We're seeing 11 sectors in the green. You're seeing rallies in sectors like real estate, rallies in sectors like utilities. Those are your rate-sensitive sectors, so not necessarily surprising to see what's leading here. And then you think about the big rally we're seeing in small caps today. That's been a very popular interest rate sensitive sector for us to watch, right? So again, rates lower, we're seeing that play out in the market.
And Josh, this is always the multi-billion, trillion-dollar question, is how long some of this momentum is going to last,
Sure.
right? And just how reliant maybe the market is on strong, not only data coming through it and further improvement on inflation and further resilience there when you talk about the jobs market, but also just earnings living up to expectations. And if we do see any sort of breakdown, just what kind of anxiety or angst that could cause here for the broader market.
Yeah, it seems like, Shauna, I always talk to strategists about this during earnings season. Are we in a macro focus moment or a micro focus moment? And for the last several weeks, we've been in a macro moment, right? We're talking a lot about will inflation resurge in 2025? What will Trump's policies do for inflation? The Fed might not cut. Would the Fed hike? All of those conversations sort of driving the market action. Well, if we get a little bit of ease in the inflation story, which it feels like we did today, we won't get much more news on inflation for a couple weeks now. Maybe you get a chance where earnings can help lead. Now, I will point out, of course, we have the inauguration next Monday, right? And President Trump will be coming into office. He can start actually trying to put in policies. What will that do to the market? I'm not sure we're really going to move out of the macro-driven part of the market, but it feels like maybe we got a step closer to that today. And you look at a sector like financials and the large rally you're seeing there after some positive earnings from big banks. When you have macro headwinds, sometimes you don't get that reaction out of the stocks. There were very good earnings across multiple big banks. But if we had a bad inflation print, sometimes those stocks can't fight through that. For today, they're able to fight through that. Will we continue to have a little bit of an easier, less noisy macro backdrop? Where the S&P is supposed to grow earnings by almost 12% this quarter. That would be the best quarter in 3 years. So if they can beat that bar, I don't think a lot of people would be arguing that's bad for stocks. So the fundamental story has not really changed for the stock market over the past couple of weeks. There's just been other things to focus on. If we can keep those things at bay, maybe you can get a bit more of a rally here and sort of the positive sentiment we had to end the year comes back a little bit.
Yeah, exactly. When you take a look at the fundamentals, or at least earnings expectations, and you mentioned that strong 12% growth, almost 12% growth that we're expected to get here in the fourth quarter. I think the question is just the noise surrounding it, right? Especially like you just said with the President-elect Trump's inauguration coming up on Monday. Lots of noise, lots of calls here for increased volatility, and what exactly that's going to spell out here for some of the jitters, more broadly speaking, throughout the market. So you're going to be busy.
Yeah. I mean, there'll be plenty of market moves on tweets, Shauna, next week. I'm sure of it.
All right, Josh, thanks so much. Let's take a look at the Treasury bond market here. Treasury yields and the dollar pulling back this morning after the CPI print came in line with expectations. We also got a better than expected print, actually, and better than expected, meaning inflation on the core number here coming in just below what forecasters have been expecting. We want to bring in Bridge Karana. He is Wellington Management's fixed income portfolio manager. Bridge, thanks so much for joining me here on Yahoo Finance this morning. I'm curious what you make of the dramatic pullback that we're seeing in yields this morning on the heels of this print. Is that justified to you?
Yeah, I mean, I definitely think so. It was a very good print. You know, core CPI, as you mentioned, came in at 0.2% month over month. That's the lowest we've seen in the last 5 months. Also, if you look at, there's something called super core CPI. That's what, the Fed looks at. And that really was at 0.2% month over month as well. So I think the details of the report are also important. If you look at the breadth of things that were disinflationary, there were a lot of items. There were only really 2 that surprised the upside. That was airlines, which, we had a strong December in airlines. Great. And then the second was in terms of used auto prices. But once again, that could be related to the hurricanes we saw in the fall. So overall, a very good report. As Josh mentioned, I think the bond market needed it, and certainly the Fed needed it as well.
Bridge, do you think we've seen a peak in yields, or just still too early to call?
I mean, I think it's still too early to call just because we don't know what the administration's plans are in terms of fiscal spending. I think if they can stick to really much more focus in terms of, what they talk about in terms of tariffs and immigration, that's actually a lower growth, higher inflationary world. If they really do a lot more fiscal spending, that's an environment where I think yields are going to kind of test those levels. But just, from a shorter term perspective, I think every question I've gotten in the last, month has been, are yields going to 5, 5.5, or 6? I think this is as I mentioned, a welcome reprieve for the bond market that, there are two-way risks to bond yields. It's not just one way.
Bridge, is it no longer a sure thing that you do see yields? Maybe obviously it never was 100% a sure thing, but the case isn't as strong now then for yields going to 5%?
Well, I think it really depends on what the Fed does. And, as I said, it's more on the administration side, but really what's happened with the Fed as well. I think going into this meeting, going into the CPI print, the market had only priced in one cut by the Fed throughout this whole year, which is kind of shocking to me considering that in the last 5 months, they've cut about 100 basis points. And so, even after today's print, there's still only about 1.5 to 2 cuts priced in by the Fed. And I think it's very important to remember that the Fed does not have a growth mandate. They have an unemployment and inflation mandate. And we've talked about the inflation side, but even with that strong payrolls print last Friday, you're still looking at, employment that's only growing at about 1.3% year over year, which is actually where we were, before the pandemic. And let's not forget also that interest rates have risen a lot since the Fed started cutting, almost by 100 basis points. That's going to slow housing investment. That's going to slow manufacturing. And if there is some reflexivity into stocks, consumer spending could get hit as well. Point being, the economy could look very different 6 months from now than it does today.
Bridge, what is your, we know what the market's pricing in. What is your base case for cuts this year?
I think you'll at least, it really honestly depends, as I said, on the fiscal situation. But I really do think that, I think 2 is probably fair with more downside there. I think if you look at the rhetoric, I think that policy.
Stocks rallying and bond yields sinking alongside the dollar after a slowdown in inflation added to bets on Federal Reserve rate cuts this year. Swaps traders now pricing in a Fed cut by July versus September previously. The S&P 500 up 1.5% at the open. The Dow Jones Industrial Average up about the same, and the Nasdaq up 1.7%. The 10-year Treasury yield at 4.65%. This is after U.S. consumer prices rose in December by less than forecast. We get more with Bloomberg's Michael McKee.
The thing to look at is the headline number came in bang on expectations, 0.4%, but the core up just 0.2, which pushed core CPI down to 3.2%. That's the lowest since August, and it is a little bit of progress. Gasoline prices went up. You knew that. Natural gas, no surprise, it's been cold. Airfares, a big contributor, not as much as in PPI yesterday, but they were up 3.9%, and used car prices continued to rise. What went down? Eggs, medical care.
And that's Bloomberg's Michael McKee. We also got plenty of bank earnings this morning. Goldman Sachs Group cruised past estimates as its equity traders delivered their best year on record. The firm's fourth quarter profit more than doubled. JP Morgan Chase's traders scored the biggest fourth quarter haul ever, boosted by volatility tied to the U.S. elections in November. Citigroup lowered a crucial profitability target central to Chief Executive Jane Fraser's plan to turn around the bank, but it also offered investors a sweetener in the form of a share buyback. Wells Fargo reported as well it took a $647 million severance charge in the fourth quarter. This as Chief Executive Charlie Scharf continues to whittle headcount as part of broader efforts to slash costs and remake the bank. Now to our other top stories this morning, and millions of Southern Californians on edge as winds began picking up during a final round of dangerous fire weather forecast for the region. Two massive blazes have killed at least 25 and destroyed thousands of homes. We get more with Bloomberg's Bill Ferries.
There's really been no reprieve for residents of Los Angeles, Southern California, or the firefighters out still battling these blazes. With those Santa Ana winds continuing to gust up to 60 miles an hour. There were some new fires that started over the last day. Firefighters were largely able to contain or extinguish those. But when you're talking about the two main fires, the Eaton fire, that's only 35% contained still, and the Palisades fire, even in worse shape, 18% contained. So a lot of work still ahead.
And that's Bloomberg's Bill Ferries. There is hope that better weather over the weekend will give firefighters battling the flames some relief. Sources tell Bloomberg U.S. health officials plan to ban the artificial food coloring Red No. 3, which has been linked to cancer and is currently in scores of products from candy to cold medicine. The move comes more than 30 years since the Food and Drug Administration prohibited the use of Red No. 3 in cosmetics after studies found tumors linked to the dyes in lab rats. President Biden will be looking to cement his legacy in a farewell address to the nation tonight. Bloomberg government's Jack Fitzpatrick has more on what to watch for.
A defense of his approach to the economy, his response to COVID, and we understand, based on a letter that the White House has made available ahead of his comments, he's not going to back down from the things he said about major threats to American democracy.
And that's Bloomberg government's Jack Fitzpatrick. You can hear President Biden's farewell address on Bloomberg Radio. It's set for 8 p.m. tonight, Wall Street time. More cabinet confirmation hearings in the Senate today, including for Secretary of State nominee Marco Rubio. The Florida senator is promising to implement President-elect Donald Trump's America First vision as Secretary of State, and Rubio says America's interests must be placed above all else. Impeached South Korean President Yoon Suk-yeol has been taken to a detention center near Seoul over his imposition of martial law last month. Yoon underwent about 10 hours of questioning today by the country's anti-corruption agency after he was detained at his presidential residence earlier in the day. Israel and Hamas accusing one another of delaying a Gaza ceasefire. The agreement would lead to an exchange of hostages for prisoners and send aid to the beleaguered Palestinian territory. While officials say an agreement for a 6-week pause in fighting is still likely soon, frequent past failures to get a deal finalized have left everyone cautious. And again, the S&P 500 up 1.5% this morning. The 10-year Treasury yield at 4.65%. And that's news when you want it.
Number, fourth quarter revenue, $13.87 billion against an estimate of $12.37. That's pretty stunning.
It's a lot of money. And when you think about the equities trading side in particular, what's more stunning is they brought in $1 billion. I'm laughing. They brought in $1.5 billion more than Wall Street expected. JP Morgan came in light. That means they are gaining share. Part of this is coming from the way that they are financing. They have record financing fees and record equities fees here. Goldman is going back to to being Goldman. They are beating at trading, in particular investment banking. No one's going to cry about being just under $1 billion, right? They are expecting that deal rebound and that underwriting rebound. You might have noticed they had created a new unit this week called Capital Solutions. That is telling the street that they're going to be on their front foot and make sure that their clients can go out and borrow as much as they'd like. So they are working on that underwriting, whether it's traditional way underwriting or whether it's through private markets.
Best and the worst performing stocks of this session, also on the Yahoo Finance's trending tickers page. Alexandra Canal joining me on set for today's rundown. So let's get to the first stock here, and that's Rigetti. Computing continuing to a surge here, driven by enthusiasm surrounding quantum stocks. You're looking at another rise today of 22%, just shy of $11 a share. Now, this coming as Microsoft announcing its new Quantum Ready program for businesses and saying that 2025 is, quote, the year to be quantum ready. Yahoo Finance's executive editor Brian Sazi spoke with the Rigetti Computing CEO earlier this morning about the stock's moves. Let's take a listen.
As a leader, before we get into your business, like what do you tell the team after a day? Well, one, your stock price up 48%, but the day before it might be down. I mean, the volatility it's huge.
Believe me or not, I try to tell the team not to focus too much on stock and try to ignore as much as possible the ticker and how it's moving and stay focused on technology. We are a technology development company. It's critical that we stay focused on technology development and not get carried away with the stock move and the trading volume.
So he also went on, Ali, in that interview just to try and say that maybe some of these expectations do need to be tampered just a bit. But of course, then when you square some of the optimism clearly within the industry surrounding quantum computing and some of the recent commentary that we've gotten from Zuckerberg and from Jensen Huang, Nvidia's CEO, kind of questioning the timeline there, we certainly have seen some whipsaw reaction with these stocks.
For sure. And it is interesting to hear a CEO telling investors to calm down and not be as enthusiastic. Normally we hear the opposite, but this is a situation where you don't want to put the cart before the horse, right? The technology is not quite there yet. And until you have the technology really set in stone, you're not going to see that sales growth, that profit growth. That being said, though, I'm not quite sure that investors necessarily care about the fundamentals at this point. It's really about the longer term growth story. We've seen a lot of volatility in these names. Obviously, some huge swings to the upside. Wall Street largely seems on board, at least when we talk about, again, that longer term story. On Tuesday, we saw B. Riley analyst Craig Ellis write in a new note that the sector was poised for a solid future, saying that recent developments, quote, offer broadly encouraging technical advances to boost confidence in the intermediate to long term. But investors, they're going to have to be patient. But I think overall, this could be a bubble here as investors are really looking for the next AI hype trade. Obviously, if you are someone that wants to kind of see the same gains that we saw with Nvidia over the past few years, the key is getting in as early as possible. So I think that's what we're really seeing here as investors try to recreate that Nvidia trade.
Yes, certainly. It's just been amazing to watch the swing to the upside in so many of these stocks. You take a look at a name like Rigetti with that stock up, I think it's 900-something% over the last year. And then obviously squaring that against some of the fundamentals, how realistic some of these expectations are. Maybe the investors haven't necessarily cared about that in recent months, but you think they start to price that in a little bit more as the stocks get a little bit more expensive. All right, let's move on to Disney, a name that you cover very closely here. Disney officially back at the top of the box office and the most ticket sales last year in 2024, benefiting from 3 of the 4 top grossing films of the year. Inside Out 2, I love that movie. Deadpool and Wolverine, and Moana 2, another good one. Disney totaling $2.2 billion in ticket sales last year. That was up 17% from 2023 and certainly helping things just a bit.
We know what movies you went to go see with your kids, Shauna.
Exactly.
No surprise there, but yes, Disney is one of those companies that has really struggled in the box office actually over the past few years. 2024, a big year of change, especially after we saw Bob Iger step back into that CEO role. That was something that he immediately wanted to fix, focus the company on creativity. And interesting to see that all of these movies, what are they? They are sequels. They are tied to intellectual property. Consumers are more aware of the content, the characters. And I think that's key to this box office revival, not just with Disney, but really across the board. You take a look at something like Wicked from Universal, again, tied to a musical, tied to a play, IP. These are the types of movies that we're going to see perform well, I should say, at the box office moving forward. And I think that goes to show that maybe some of the smaller indie films are going to be on streaming. But in this post-pandemic era, you really need something big to get folks off the couch and into the theater. And that's really what we're seeing here.
And I think also, and I'd love to get your thoughts on this, because when I was saying, I think those were the only two movies I saw at the theaters last year, and probably the first time I've been to the movie theaters in a very, very long time. But is the movie theater back? I mean, that was so long, the conversation when it comes to comparisons of the numbers pre-pandemic, and then obviously the lull that we saw pretty immediately following post-pandemic. How does that stack up to what we see?
Well, if you just look at the ticket sales, they were down just 3.4% from 2023. And that's really impressive considering last year we had a double Hollywood strike. So 2024 was expected to sort of be a slow year, but we saw since the summer this rebound in ticket sales. And then if you look ahead to 2025, 2026, analysts are really optimistic because we have even more movies coming to market here. So we're still not at, the peaks that we saw. And I don't think we're ever quite going to get there again. But relative to where we have been, I do think, to put how you said it, we are back in a certain sense, especially when it comes to these big budget movies, these sequels, these movies that really have a lot of hype around them. I think the marketing plans for a lot of these films are going to be really important moving forward. If you think about a movie like Barbie, Wicked, they spent a lot of money just marketing these films. So depending on the film, I do think that's going to be a big driver.
All right, Allie, thanks so much. Well, inflation for new cars increasing slightly in December from the prior month, and still ticking down, though, on a year-over-year basis. But other car-related expenses are seeing big increases. Vehicle insurance, that was up 11.3% on a year-over-year basis. Vehicle maintenance and repairs, that was up 6.2% from a year ago. Joining me now, I want to bring in Tom Donnelly. He's the Mazda North American Operations President and CEO. We also have Yahoo Finance's senior autos reporter, Pras Subramanian, joining us. Great to have both of you. Tom, certainly when you take a look at your numbers and maybe compare that to the numbers that we got out this morning, just specifically on pricing when it comes to inflation obviously remaining very sticky there. You couple that with the fact that we have a threat of tariffs here from the incoming Trump administration. I'm curious just how you're factoring that in, how you're navigating that, and where you see vehicle prices going.
Yeah, great question. Look, affordability itself is one of the significant headwinds facing the entire industry right now. Tariffs, I'll speak to that here in a minute. But we've been, and frankly, we're coming off in 2024, our best year ever. Some of that's product related, the introduction of a couple new products that we've had. And we feel like we're sitting right in the sweet spot in terms of the market. But we've had to make some adjustments in terms of mix and our programs and incentives. We've been able to maintain pricing overall. And again, this has led to our most successful year in our 54-year history here in the U.S. market. We're optimistic about 2025. I mean, the industry is, from a historical perspective, really in a good position, and it's expected to grow in 2025. We expect to grow in 2025. Some of that's product related. Some of that is the introduction of a new brand campaign that we put in place. So we're executing well despite some of the headwinds that the industry is facing.
Hey, Tom, Pras here. So do you kind of attribute some of the success here to product mix? A lot of other manufacturers are struggling with incentives and bloated inventory. What's sort of the Mazda recipe here to sort of get the buyers what they want in this, in last year with the 16.8% growth rate and also in 2025?
Yeah, great question, Pras. So it's a combination of factors. I talked about the product. So just to give you some specifics, for instance, we introduced CX90 about, let's say, 15, 18 months ago. We're selling 2 to 3 times what we did with the prior generation vehicle. We introduced CX50 about 2 years ago. That is an all new model in a segment that we already have a model in. So that's obviously incremental for us. We did about 80,000 CX50s last year. So when you layer these things on top of 2 to 3 times a prior model, an incremental 80,000 units, and then we've grown in each of our existing models as well. It's product, as this industry is largely driven by. We've also completely reimagined our retail experience for our customers. So Retail Evolution is what we call our image facility. It's open, it's vibrant. Customers really appreciate the environment. Together with our dealer partners, we've invested over $2 billion in the last 7 years to really reimagine this experience. And obviously, we're reaping the benefits of that.
So, Tom, across the product portfolio, I noticed you guys have 3 hybrids on offer. What are your customers saying about the hybrid selection? Are they into it? What's to do with EVs? I know EVs and Mazda have been sort of a slower uptake there. Are you seeing more of that going to come online later on?
Absolutely. So the term that I've used before is intentional follower. Look, we're moving on a pathway towards electrification, just at a different pace. I mean, you see and we all see where the industry is and some of the challenges in terms of adoption of electrification. Our solution, we call it multi-solution approach. So we introduced plug-in hybrids with the CX90 and CX70. With both of those models, it's representing about 15 to 20% of our sales. In October, we introduced CX50 hybrid, manufactured in Alabama. The market reception to that has frankly exceeded even our expectations. It's our fastest turning vehicle, like 3 to 4 days on our dealership lots. So we think those are the right, call them technologies or powertrains for today's marketplace. In our next phase, which we're just entering now, 2025, we will introduce our own battery electric vehicle as well as additional in our own hybrid system. So we feel like we're timing the market right in terms of the introductions of the powertrains with the plug-in, the impact that's had on 90 and 70, CX50 hybrid, having a full year of that in 2025. We're really enthusiastic about what the outlook is and the contribution those vehicles are making for us.
Tom, drilling down a little bit more just in terms of what these tariffs ultimately mean for your business. What does it mean for one, pricing, and then production changes?
Absolutely. Well, look, any business desires predictability and policies that will help stimulate a vibrant economy, right? So that's understood. What we're looking for, and we've been scenario planning for the last few months, even pre-election, of what our possible actions could be. We have a manufacturing plant in Alabama. We have a manufacturing plant in Mexico. But what's clear is no business in any industry can absorb the magnitude of what's being talked about here. So we have some optionality in terms of ramping up Alabama, where we produce CX50. But as you both know, that takes time. I mean, we have a supply chain that allows us to consider those things, but these are decisions that take, have a months to potentially year time frame in terms of the adjustments you make. From a pricing perspective, we haven't gotten there yet. We'll see what the final outcomes are, but we feel like we have some alternatives that will allow us to maintain our momentum heading into 25 and beyond.
Tom, is it tougher to do business potentially here under a Trump 2.0 administration, just given the fact that you don't have as much predictability, what you were just talking about there?
Potentially, but if I look back over the last 5 years, historic level of challenges, not just for automotive, but for any industry. We've grown 50% over the last 5 years. So you think about COVID, you think about chips, you think about the supply chain disruptions. I mean, last year, I already mentioned, was our best year ever. But we've grown 50%, more than any other mainstream brand in the industry. Some of that is our size. We have agility that perhaps others are.
Guys, 1 minute left. Crude oil inventory scheduled at 9 p.m. क्रूड ऑयल देखोगे, मैंने फॉरेक्स में देखा, यहाँ पर फॉरेक्स में सपोर्ट है, ये जो गैप यहाँ पर है फॉरेक्स में सपोर्ट बना हुआ है, एक रेजिस्टेंस था उसका ब्रेकआउट हुआ एक्चुअली है, तो इसलिए सपोर्ट की तरह काम कर रहा है एमसीएक्स में. यहाँ पर सीधा गैप अप है, इसलिए दिख नहीं रहा है. ऊपर रेजिस्टेंस है, बट अब इन्वेंट्री आने वाली है तो ध्यान रखना, वेट फॉर दैट. बाकी नेचुरल गैस भी देखो नीचे आता है, तो ये एफवीजी तक की सपोर्ट है, यहाँ से वापस बाइंग एक्सपेक्ट कर सकते हैं जब तक इस लेवल के ऊपर रहेगा. लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम. 17 seconds are left. Let's see इन्वेंट्री क्या आई. 3 इन्वेंट्री आती हैं, ध्यान रखना. ओके, कैंडल तो ओपन इक्वल टू हाई बनी है. ठीक है, देखो तीनों इन्वेंट्री नेगेटिव है क्रूड ऑयल के लिए. तीनों ही की तीनों इन्वेंट्री नेगेटिव फॉर क्रूड ऑयल प्राइस. इन्वेंट्री इज नेगेटिव फॉर क्रूड ऑयल प्राइस. क्रूड ऑयल की खुद की इन्वेंट्री नेगेटिव आई है प्राइस के लिए. EI की जो वीकली डिस्टिलाइड स्टॉक आता है वो भी नेगेटिव आया है. गैसोलीन की इन्वेंट्री भी नेगेटिव आई है. तो ऑल थ्री इन्वेंट्री इज नेगेटिव फॉर क्रूड ऑयल प्राइस. इन्वेंट्री हो गई आज की. इन्वेंट्री इज नेगेटिव फॉर क्रूड ऑयल प्राइस. ठीक है, क्रूड ऑयल इन्वेंट्री नेगेटिव है प्राइस के लिए. देखते हैं ऊपर अब कैसे सस्टेन करता है. 15 मिनट में और कोई रेजिस्टेंस बना तो नहीं है, दिख नहीं रहा उतने ऊपर. नीड टू सी. सीधा 30 मिनट का टाइम फ्रेम ही यूज करना पड़ेगा. Crude oil inventory is negative for crude oil price. बाकी वो हमास डील वाला था वो भी आई थिंक जो गाजा की डील थी वो भी शायद फाइनलाइज हो गई है. कभी भी उसके रिगार्डिंग न्यूज आ सकती है, ध्यान रखना. जो गाजा सीज फायर था इजराइल और हमास के बीच वो कभी भी हो सकता है. हमास की ओर से ऐसी कंफर्मेशन आ रही है. मैंने टेलीग्राम पे शेयर तो कर दिया था ऑलरेडी. डेटा यहाँ पर देखोगे ना थोड़ा सा ये डिफरेंट दिखा रहा है. फॉरेक्स फैक्ट्री वाला कंफ्यूज मत करना. ये फॉरेक्स फैक्ट्री में डेटा पॉजिटिव दिखा रहा है बट 3 इन्वेंट्री होती है, मैं पहले बता चुका हूँ. बहुत सारे लोग इसको नहीं तो पॉजिटिव समझेंगे. देयर आर 3 इन्वेंट्री. तीन इन्वेंट्री आती हैं. एक क्रूड ऑयल की खुद की इन्वेंट्री होती है, ये क्रूड ऑयल की खुद की इन्वेंट्री है. एक EI का स्टॉक आता है और एक गैसोलीन की इन्वेंट्री आती है. तो तीनों को कंबाइन करके देखना पड़ता है. तीन में से दो, जो गैसोलीन की और EI की इन्वेंट्री है वो नेगेटिव है और क्रूड ऑयल की इन्वेंट्री का इम्पैक्ट पॉजिटिव है. तो तीनों में से दो नेगेटिव एक पॉजिटिव. तो ओवरऑल हम नेगेटिव ही कहेंगे. क्रूड ऑयल इन्वेंट्री इज नेगेटिव फॉर क्रूड ऑयल प्राइस. सिर्फ इसको मत देखना, ठीक है. नहीं तो इसको देखोगे तो ऐसा लगेगा कि क्रूड ऑयल की इन्वेंट्री का क्रूड ऑयल की इन्वेंट्री पॉजिटिव आई है. तीनों का कंबाइंड देखना पड़ता है, पहले ही बताया मैंने. लाइक भी करते रहो गाइस. डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल. ठीक है, बाकी ये नेचुरल गैस में भी यहीं तक रहेगा. टारगेट एक्सपेक्टेड सेलिंग में वापस यहाँ पर प्राइस रुकना चाहिए मेरे अकॉर्डिंग. प्राइस वुड होल्ड दिस लेवल. ये FEG होल्ड होना चाहिए. गिव निफ्टी में कुछ सेलिंग आई या वापस ऊपर ही जा रहा है? स्टिल गोइंग अप. हमारा इंडियन मार्केट जो क्लोज हुआ था वहां से अभी लगभग 142 पॉइंट अप चल रहा है गिफ्ट निफ्टी. लाइक्स हो चुके हैं. कम ऑन, लाइक करते रहो सभी लोग.
Year. We were down to 3% by September, a little bit of a bubble here over the last few months, but you are seeing home price growth calm down. And if you look at the full year of 2024, we're 3 to 3.5% home price growth. That's the smallest calendar year growth that we've seen at any point, really since the market started recovering from the great financial crisis in 2012. So certainly more modest growth overall in the housing market.
What do you think that trend, when you talk about maybe more modest growth in the housing market, that trend looking out to 2025, how do you see that shaping up?
And a lot of that will be dictated by where interest rates go and what that does for demand. But if you look at the baseline as what have we been seeing on a month-over-month basis over the last couple of months and what happens if you project that out, what that says is you'd see another little tick up in terms of home price growth here in December. And as we get into the early stages of 2025, you would see that annual home price growth rate calm back down from kind of where we are down into the 3% range. And so I think that's the baseline expectation. Now, obviously, we'll be watching rates closely. We'll be watching demand and supply closely to see what that could infer for the market. But, kind of a gradual rise through December and then some modest cooling as we move into the early stages of next year.
And if we don't see the Fed lower rates again this year, how problematic is that potentially for housing?
I mean, if you look at kind of what's priced in right now in the futures market for 30-year rates, I think that is the baseline expectation, is that the Fed will be more modest in their interest rate reductions next year. You look at the futures for 30-year mortgage rates, the ICE conforming 30-year rate futures, and kind of convert that price into an interest rate expectation. What that says is we'll likely kind of hover in this same range over the next few months as we get into the early stages of the home buying season, and then some maybe modest improvements as we move towards the middle stages of this year. Now, those rate forecasts are always written in pencil rather than pen, and so expect some movement as we get more information in the doors. But that's the baseline expectation from the market right now, is kind of flat interest rates over the next few months and some modest improvement as we move towards the middle stages of this year.
And when you talk about on a regional basis, what do you see as being the catalyst in terms of some of that outperformance?
Yeah, there's some really interesting dynamics going on from a regional perspective right now. And a lot of it has to do with both affordability, some variations being seen, but certainly from an inventory perspective, you're seeing some noticeable differences across the country. The Midwest and Northeast, we've been talking about these for the last year. That's where you're seeing firmer markets, firmer prices, a lack of inventory, some modest improvement last year, but it would take years to recover at this pace in those markets. And so expectation as we move into the early stages of this year is, for that to be the firmer or the firmer portions of the country. And then you get into the South and Southeast, a quarter of markets nationally have normalized from an inventory perspective. Those are primarily in the Sunbelt region of the country. Your eyes go to Florida, your eyes go to Texas. That's where you're seeing softer prices. And among the minority of markets where you're actually seeing prices ease year over year, those are the areas of the country that you're seeing easing. And if you look at kind of the rate of improvement that we've seen from inventory, those are the markets that could normalize this year, right? A few more in those particular areas. And so certainly some of those regional differentiations that we're seeing in 2024 are expected to continue here as we move into 2025.
And let's talk about what's top of the agenda here for the Trump administration, maybe what that spells out for housing going forward. When you factor in things like tax cuts, when you factor in deregulation, do you see that as boosting the housing market? And I guess how big of a catalyst could that be?
I think we'll see, right? A lot of those, will wait to come to fruition. You mentioned a couple of them there. Certainly the government workforce could have some impact, especially when you look at VA performance in the VA market. Specifically, the recapitalization of the GSEs has become a bigger topic of conversation. And so those are certainly ones to watch. The greater impacts, at least in my mind, early on this year are going to be, what do we see from tariffs? What are the expected impacts on inflation and GDP growth? How does that factor into the bond market and translate downstream into 30-year rates? That's what we've seen over the last 3 months. It's been the biggest needle mover for the market. I expect that to be the bigger needle mover as we move into the early stages of this administration. And we'll see downstream, how that policy flow in works from that point forward.
All right, Andy Walden, great to have you. Thanks so much for taking the time to join us.
You bet. Thank you.
Coming up, the confirmation hearing for Trump's energy secretary pick is underway here this morning. We're going to talk to an industry expert about the outlook for energy under Trump 2.0. That's coming up next on Catalysts.
Oh yeah, you're not going to forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not going to forget to cancel those free trials this time, right?
Back up in Treasury yields over the past month or so. Do you think we're in the so-called buy zone right now?
Yeah, so I think we're pretty close to it. I mean, certainly if we take a longer term view, our forecasts at Morgan Stanley are very much for global bond yields, including Treasury yields, to decline. We have more Fed rate cuts in our forecasts than the market. We have them happening sooner. And we do think that inflation readings in the first half of this year will generally be declining. And there are a variety of reasons for that, but part of it is our read on incoming Trump administration policy, that we think that policy might be announced quickly, but the implementation will be slower, and so it will slow up. It will show up somewhat slower in the data. So I think if you get all those factors, and again, today's CPI reading is pretty key, that should lead to pretty good total returns for bonds on our forecast over the next 6 to 12 months, and creates a pretty attractive case. Now, today's CPI reading is important for that view, and obviously we need to see, we're going to get a lot more information, as you were talking about at the onset to this program, about the administration in the next week. So we need to keep an open mind, but on our current thinking and our current numbers, we think bonds look pretty attractive here.
Andrew, can we just sit on the why you think we have backed up in the fashion that we have over the last few months? I was reading through your research and you offer two choices: pricing it stronger for longer, or are we discounting a greater fiscal premium? Which one do you reckon it is?
Yeah, so I would be in the camp, and a lot of my colleagues are in this camp, that we're pricing in a stronger U.S. economy for longer. You've had a steepening of the Treasury curve, you've had higher real rates, and you've had some pretty good data. You had a strong U.S. jobs number. President Biden is going to exit as the first president to never have a negative NFP number on his watch. And Atlanta Fed, real-time GDP for the fourth quarter is exiting the fourth quarter pretty strong. So I think you've had strong data, you've had yields going up on the back of strong data, the curve steepening, higher real rates. I think that's all a pretty internally consistent story of the economy is somewhat stronger than the market was expecting. The other caveat we have to remember here is think back to last January. January can be a time when the market overreacts a little bit. And last January, the market priced in, with hindsight, way too many Fed cuts, way too early. And if I think about where the market's pricing versus our current economic forecast, we think the market's now pricing too little from the Fed relative to what we think they'll ultimately deliver.
Two energy policies. The Wall Street Journal reporting that he could, amongst other things, unwind President Biden's offshore drilling ban, roll back tailpipe emissions rules, resume approvals for natural gas exports, withdraw the U.S. from the Paris Accords, and also create a National Energy Council. Let's talk about the potential impact that all of these policies could have on the industry. For that, we want to bring in Ben Cook. He's a portfolio manager at Hennessy Energy Transition Fund. Ben, it's great to have you here on Yahoo Finance. Just first, let's start with Wright in the position here of Energy Secretary. What does this signal to you about the Trump administration's plans here for the industry and the implications that then has here for investors?
Yeah, good morning, Shauna. Thanks for having me. I think the selection of Chris Wright as the Energy Secretary says a lot about the Trump administration's plans for unlocking the abundance of energy resource that we have here in the United States. Clearly, the Trump administration sees that as a source of strength and is going to work towards eliminating those regulatory impediments, the hurdles, lifting the pause on the LNG export project approval process. So, we're going to see permitting, we're going to see project development acceleration. The administration will work, as I said, to unlock resource, to make that resource available, not just here in the U.S., but to our trade partners abroad.
What does this signal then, or I guess, what does all this mean then in terms of pricing? If we do unlock further innovation, technology breakthroughs, obviously some of the focus here and some of the talk that we've been getting from the incoming Trump administration, how does that then translate into pricing?
Our base case, for 2025 is a crude oil price environment, $70 to $80 per barrel WTI. We think that the U.S. will grow in the coming year. Drilling activity has moderated. It's important to remember that we continue to operate as an industry with a strong sense of capital discipline. That is, companies are allocating their capital judiciously, choosing to focus on shareholder returns, returning capital to shareholders, as opposed to growing for growth's sake. And the Trump administration can strongly encourage the industry to begin drilling and grow production, but ultimately it's the companies themselves that make those decisions. And as we know, they answer to the shareholders. So, we do believe that the U.S. will grow production at a record or near a record here in the United States, both with respect to crude oil and natural gas. It will continue to grow next year. But we do see crude oil largely range bound next year in the range of $70 to $80 per barrel.
Ben, for investors that are looking in the community of watchers right now who are looking to capitalize on this, what are the top plays within the sector? Is it the larger oil giants when you think of Exxon, when you think of Chevron, or just maybe some of the smaller niche plays within the industry?
Yeah, I think there's a couple ways to win. If you think about the commodity price environment, we envision $70 to $80 crude oil prices is very healthy for the upstream sector in the United States and abroad. We, as a part of our repeatable investment process in managing the Hennessy Energy Transition Fund, we look for companies that have strong asset bases, long-lived inventories of development projects, strong balance sheets, and strong management teams. We tend to have a bias for quality, and that typically focuses our emphasis on larger cap companies. In the environment today where crude oil's range bound, we like a company like Exxon. They have an enviable suite of upstream development opportunities. They continue to cut costs in their downstream business and are returning cash to shareholders in a healthy manner. Suncor Energy is a producer in Canada, developing oil sands resource there. A very similar story, optimizing operations, delivering on key metrics, production growth and refinery utilization and strength there. And we're seeing, again, the theme of capital discipline and returning cash to shareholders. LNG, Cheniere Energy, also another name that we like. Natural gas, by contrast to crude oil, we think will be relatively strong here over the near term. Obviously, the winter weather we've had over the last several weeks has been very strong for natural gas, but longer term, the natural gas story is very good. And when you consider the growing export role that the United States is playing, Cheniere Energy is well positioned to play a part in that role.
Ben, how do you see some of these Trump policies here reshaping? Does it reshape, to some extent, you would have to think so, the global energy market? And in what position does that put U.S. in then versus the world?
Yeah, growing our position as an exporter of crude oil and refined products and natural gas obviously makes us a stronger trade partner. And I think, energy diplomacy is a key element of the Trump strategy going forward, to the extent that we can build trade relationships with partners, build their dependency upon our energy resources. That can only help grow our industry going forward. So again, I think the Trump administration will work to unlock the resource that we have here at home and strengthen those diplomatic ties that we have through those energy trade relationships.
All right, Ben Cook, thanks so much for your time. Great insight.
Thanks so much.
Coming up, yields retreating from recent highs on the back of the inflation print that we got out this morning. Why one fixed income expert is eyeing ETFs, talking about the best ways to play the fixed income market through exchange traded funds. We've got that for you next.
Oh yeah, you're not going to forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not going to forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks higher after core CPI rose at a slower pace than expected in December. In top stories, big bank earnings beats pushing the Dow higher as Q4 results kick off. JP Morgan Chase with full-year profits hitting a record $58 billion, driven by its investment banking business. Goldman Sachs and Citigroup earnings also beat the street. Plus, Tesla plans to suspend part of the line's manufacturing its refreshed Model Y Juniper model in Shanghai for 3 weeks. It's for Chinese New Year, according to Bloomberg. And quantum computing stocks jumping as Microsoft declares 2025 the year to become quantum-ready, and D-Wave Computers announced a partnership with Karasoft Technology. Now, it's been a roller coaster for this sector after Nvidia CEO said useful quantum computers are at least 15 years away. And that is your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session. But now wealth begins.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, tools, tips, and the tricks that you need to grow your money. Hey, on today's show, big banks kicking off a busy fourth quarter earnings season today. We'll talk to a chief investment officer who's calling it the most consequential earnings season in more than a year. And the latest read on inflation. It shows that consumers are still spending a lot of money on food, housing, and gas. We'll break it down. Plus, Yahoo Finance's very own John and David Ottenschneider joined the show to discuss a 5-step strategy that you can use to pay off debt faster than the popular snowball and avalanche methods. All that and much more coming up during today's show. But first, let's take a look at some of the market action as we always do. We are 90 minutes into the trading session. We're taking a look at the U.S. major averages up across the board. The Dow up 1.5%, and the S&P 500 up 1.6%, and the NASDAQ Composite saying, hold my beer, it's up 2.1% right now. So stocks rallying after December's consumer price index was in line with estimates. Joining me now in studio, we've got Vance Howard, Howard Capital Management, CEO and CIO. Big banks officially kicking off earnings season today. You say that this could be the most consequential earnings season over a year. What should investors be doing?
Well, that's an interesting question because, Brad, we were very bullish going into the banks at the beginning of 2025, and we still are bullish in that area. But if you look at what happened in California, what's happening with the banks, there's going to be some defaults. And that's going to cause some issues, especially with earnings as we go forward. I don't think people have calculated that in yet because it just happened over the past, 3 or 4 or 5 days. So our theory or our synopsis was going into the year may have changed a little bit. So we're going to be a little bit patient as we look at the banks because if we do start to have the defaults that we think we're going to have, it'll impact earnings in the third and fourth quarter, maybe not the second. But, you look at a $20 million house, they lost 12,000 homes. I mean, that doesn't include strip centers and, multifamily, et cetera, and it just keeps going and going from there. But if you got a $20 million house and you could only insure it for $3 million, you're $17 million down, or maybe you put $2 or $3 million down, so you're $12 million, that you've got to pay back to the bank. Yeah. Some are going to walk away from that. And that's going to impact, especially mortgage companies. Look at like Wells Fargo and Bank of America, which are holding some of those notes. Yeah. So that's something to think about going forward. This was it was devastating.
Just to follow up on that, because I think you're making a great point here in that it wouldn't show up in the numbers that we've seen reported right now, but to what extent do you expect to hear it talked about by CEOs, by some of the executives, even as they are trying to position the narrative for their outlook for the year ahead with the analysts, with the investors, but also knowing that this is a major event that really has not been calculated for in entirety yet?
Well, I think we're just starting to talk about it now.
Yeah.
With me, and because like I said, we were bullish on the banks up until 3 or 4 or 5 days ago. But another thing, Brad, let's take a consideration to it. The regional banks that really could be devastated by what happened in California. This is a 1 in a 100-year event. This was the 100-year storm. You look at what happened in the Carolinas, but the home values and the property values weren't nearly as elevated as what they are in Los Angeles. Right. These are through the roof. Yeah. Another thing that they're not taking into consideration too, there was some incredible art and artifacts that were inside of a lot of these homes that are gone. Read the other day that a gentleman had a tremendous amount of Warhols, and he pulled out 3, and I think he had 20. That means the 17 are just ashes now. That how do you put a value on that? It's really tough. So there's a lot of insurance risk out there too. And you look at inflation. insurance is a big component of inflation. Well, our rates just went up.
Yeah, for sure. So you also have some stock picks for us as well that you're watching right now. What is the top of your list in terms of what you're prioritizing and how you're evaluating?
My top pick for 2025 is Salesforce CRM. And we really like that pick due to the fact that it's got recurring revenue. Excuse me. Recurring revenue, you don't have to go and resell the product again. It's a monthly subscription. We use Salesforce and we're very, very pleased with it. And it's not inexpensive. It's actually expensive to use Salesforce, but it's an incredibly effective tool. But everybody wants to look at AI, artificial intelligence, and how's it going to affect my life. This is going to be one of the few firms that you can actually probably see it and use it at the very beginning phases because of the robust structure that Salesforce has internally and what they're trying to accomplish.
Right.
So very bullish on Salesforce in 2025.
It's interesting. I was at the National Retail Federation big show, and Salesforce was one of the most prominently displayed logos in the exhibition hall as you were walking in, hearing people talking about agents and agent force, so forth. Just lastly, while we have you here, though, and we have a bit of time, your top tip for portfolio evaluation this year?
Well, like I said, we Salesforce. I also like O'Reilly Auto Parts. And one reason I like O'Reilly, number one, they're well managed. They're auto parts. So good times, bad times, people are going to buy auto parts. But they've had a long track record that's continually marched forward in their value of the stock, and they've got a good balance sheet, and they've got a good product that people are going to continue to use no matter what the economy does.
Vance, thanks so much for taking the time joining us here in studio. Appreciate it.
It's good to see you.
Certainly. Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, Moderna's price target cut to $38 a share from $70 a share at Morgan Stanley. The new target implies nearly 11% upside for the stock based on its last closing price. The analyst citing recent financial updates, including the firm's lowered 2025 revenue guidance and competitive pressures in the vaccine market. Next up, we're also tracking SoFi and Affirm, both rated outperform in an initiation note from William Blair. The analyst Andrew Jeffrey, citing the momentum of alternative options to traditional banking. Jeffrey views both of these stocks as leaders in the fintech space. SoFi with focus on personal, student, mortgage, and credit card loans, and then Affirm as a buy now, pay later provider, BNPL there. Finally, we're taking a look at tobacco stocks as well. They are under some pressure today after the FDA said that it would cap nicotine levels in cigarettes at 0.7 milligrams of nicotine per gram of tobacco. Now, the FDA says this limit could prevent young people from starting to smoke and help current smokers switch to lower risk tobacco products. We'll continue to track all those tickers as we move forward throughout the rest of today's trading session. New data from the Bureau of Labor Statistics shows core inflation eased for the first time since July. That core measure strips out volatile food and energy prices and climbed 0.2% in December. That's down from 0.3% in November. But food and energy costs are where a lot of Americans' money is going right now. Here with more is Yahoo Finance senior reporter Alexandra Canal. Hey, Ali.
Hi, Brad. And that's right. A big, bit of a mixed bag here, I guess you could say, when you think about the progress in moderating sticky core prices. But if you are a consumer, you're still feeling that pinch. And if we do include food and energy costs back into the equation, headline prices rose 0.4% month over month. That's an acceleration from what we saw in November, signaling that there were some hot pockets of price growth within this market. Gas prices, a big standout in this print. Costs at the pump rising 4.4% last month, accounting for over 40% of the monthly headline increase. Shelter costs, although easing from November, they're still up 4.6% from a year ago. And that's despite this being the smallest 12-month increase since January 2022. So it just goes to show how tough it's been out there in this housing market. And in a similar vein, we saw that the cost of rent, as well as the equivalent cost to rent a home, both ticking higher. Meanwhile, food remains especially sticky. The price of eating at restaurants rose 0.3% in December, unchanged from the prior month. And then at the grocery store, well, you're not getting much relief there either. Some of your basic items like cereal, bread, bacon, all seeing prices rise. And of course, we can't talk food without talking about the often volatile cost of eggs. Egg prices easing from a month earlier, but they're still up nearly 37% from a year ago. There were some items that did see relief in December. They included the cost of meat, milk, as well as fruits and vegetables. But again, it ain't cheap to eat these days. And then finally, one last category that I want to mention is airfares, because if you took a trip last month, chances are your ticket price was a lot higher than usual. Airline fares, a big pain point for consumers last month, with prices rising almost 4%, Brad.
Ali, thanks so much for the breakdown here. We've got much more as coming up. I talked to the CEO of Big Commerce about the impact of inflation on consumers. That's coming up next on Wealth.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
While December shelter CPI came in line with expectations, rising 0.3% from November and 4.6% from a year ago, it remains a challenging time for low-income and first-time home buyers. Darren Williams, Southern Bancorp CEO, joins me now. Darren, great to see you. Good to have you on the program with us. I mean, this is something that you're familiar with here when we're talking about that almighty shelter component here. What are some of the ways that potential home buyers can navigate this market from what you're seeing?
Well, first of all, Brad, thanks for having us on, and really appreciate you having the voice of Southern Bancorp. We are a community development financial institution dedicated to serving underserved people and places, and so this is the market that we work in. So for those first-time home buyers, there are a number of things we suggest that you do. You know, first of all, it's so important to know your credit score, know what's on your credit report, and so let's analyze that. Then let's do our best to reduce debt. Reduce your current debt, your overall debt, to help you position yourself to be ready to really afford a home. And then let's work with a professional like our mortgage professionals here at Southern Bancorp that can help you with researching programs to assist, a number of programs for first-time home buyers, a number of opportunities that you can take advantage of. But you really got to do your research and understand what you're getting into.
You know, this gets at something which is really even more important here about breaking the cycle of debt. What are the keys that Southern Bancorp really believes can help people break the cycle of debt, and how consumers can do it?
Yeah, so thank you for that question, because as a community development financial institution, we're dedicated to supporting people who often don't have the resources, have just not been trained on really how to manage money and how to really break that cycle of debt. You know, I say all the time that wealthy people have wealth advisors. Well, low wealth people also need wealth advisors. So we have certified homebuyer counselors and financial counselors inside each one of our branches that work with our team members and our consumers on really how to budget, how to save, how to analyze your debt, how to help you get out of debt. Of course, we've got products and services, but we really focus on the financial education. It's an opportunity and access to education in addition to the programs and products that we have.
It's anticipated that we could see more mergers as well in the financial industry under the incoming administration and Trump. And this deregulation has been talked about at length. And I wonder, from your seat at the table at Southern Bancorp and assessing the rest of the industry, what would that mean for regional and smaller banks and ultimately your customers and the changes that they could see?
Yeah, so unfortunately, many of the markets we serve larger institutions have abandoned those institutions. In fact, we have 56 locations across the Arkansas Mississippi Delta. In 12 locations, we're either the only bank or one of only two in the entire market. And so when you see that mass consolidation, you see all those banks are disappearing from those communities that are less wealthy, that are underserved. And so that's why, as a community development financial institution, our focus is really on serving those markets that have been abandoned by other institutions. And we have been aggressive ourselves in M&A. And so one of the things we're able to do when you have the scale, we're at $2.8 billion, looking to grow to about $5 billion in the next 2.5, 3 years. So we're looking at M&A opportunities as well. But we want to ensure that all communities have access to capital and credit that's so desperately needed to help to stimulate and revitalize those communities.
What are the keys towards getting to that $5 billion figure that you just mentioned?
Yes, so fortunately for us, we've benefited from a number of programs. We've got an infusion of capital that's allowing us to grow. And so it's both organic as well as M&A opportunities that we're looking for. And so we're right now focused on making the investments necessary to build an infrastructure, the team and the talent and systems necessary to grow and scale our business. When I got here way back in 2014, we're about $1.2 billion. Today, we're $2.8 billion. And so we're looking to continue to grow and provide our brand of financial education, of services and products to communities that often have been neglected or left behind or even abandoned by large institutions.
Just lastly, while we have you, we only got 15 seconds. What dollar figure are you earmarking for potential acquisitions?
Yeah, so our last two acquisitions have been about $200 million each. I don't know if there's a dollar figure. We're looking to go larger than that. We're, over the next, 2.5, 3 years, we're looking at double in size. So that means we're going to have to both organically grow and look for larger acquisition targets.
Darren, great to have you on the program here with us today. Really appreciate the time and look forward to checking back in the future.
Thank you, Brad.
Certainly. 38% of Americans say financial stability is their top focus area in 2025, according to an Allianz survey. And they're not alone. I'm in that one too. One of the first steps towards financial stability is to clear your debt. Some experts recommend the snowball method, where you pay off the smaller balances first, while others advocate for the avalanche method, where you pay off the highest interest rate debt first. My next guests have the debt lasso method, which they say helps you pay off debt faster than those other two methods. Joining me now at the desk, we've got good friends of the show, John and David Audenschneider, the debt-free guys and hosts of the Living Not So Fabulously podcast. Great to have you back here. David, let's start with you. Run through the 5 steps of the debt lasso method for us, and how does it work?
Sure, definitely. As you mentioned, there are 5 steps. The first step is to commit. Commit is actually broken into 2 pieces, and that is, 1, commit to a specific amount that you're sending to your credit cards to pay them off every single month, at least that amount every single month. The second portion of commit is to not add any more balance to those cards, because that makes it harder to pay them off. The second step is to trim, which is actually the snowball method, and that is, look for those small balances that you can pay off really quick, maybe 1 to 2 months worth of payments, that you can get those quick wins out of the way. The third step is the lasso portion of it, and that's really when you look at all your credit cards and you say, how can I get these to as as few accounts as possible with the lowest interest rate? Grabbing all that and bringing it in to manage it much easier. The fourth piece is to actually automate all of the process of paying those credit cards so that you don't miss a payment, end up having a late fee. And then the fifth step is to monitor that. You know you're going to pay a credit card off, so you're going to have to switch some balance or payments around.
And so, John, what is the best way to really approach that lasso step and bring your debt to fewer locations at a fewer and lower interest rate as well?
Yeah, the tools that David and I use personally and that many of our clients have used are 0% interest rate credit card balance transfers. But if that's not necessarily available to you to lower your interest rate, maybe look at a credit union or a bank where you can get a low interest loan. The snowball, the avalanche method, the problem with both of those is it can take so long to pay off your debt, and a lot of people kind of peter out before they actually become debt free. And that's what the debt lasso method helps you do, rein in that debt so it's easier to pay off more quickly. But use that opportunity to pay off your debt. Don't kick the can down the road, because you can only kick the can so often.
Certainly. So, David, say I've been successful at lassoing, and it's taken me some time to do this. How do you next ensure that you don't go back into debt, the area that you just came from?
Yeah, what is really important here is your debt payoff strategy helps you build good habits, good financial habits. When you learn those habits, the habits that help you pay off debt are the habits that help you build wealth. So have a strategy, and that's why we're here on this show, Wealth, is to help you build wealth. So pay that debt off, keep those same habits, financial habits, and use that to your advantage so you can grow.
And then just lastly, as we think about the time period that somebody should be allowing for themselves, like how long can this take to really implement this method?
Yeah, the important thing is to be patient with yourself. Don't beat yourself up. This is a common problem that a lot of people have. So I wouldn't necessarily put a time frame on it. Just be consistent. Yeah. Stay focused on your goal and work on it. It's taken some people that we work with 2 years to pay off their debt. It took us just under 3 years, but some people have taken up to 8 years. But don't beat yourself up, because there's no point in that.
Give yourself grace,
yes,
but also be consistent.
Yes.
David and John Audenschneider, thanks so much for taking the time here with us.
Thanks for having us. Thank you.
And you can catch more of John and David on Living Not So Fabulously every Wednesday at 12 p.m. Eastern Time on Yahoo Finance or wherever you get your podcasts at. Here's a sneak peek of today's episode, which digs into the realities of entrepreneurship and starting a business.
It can seem so glamorous at times online, or how many people make it seem like it's, oh my God, you can just work from ever, you can do whatever you want. And that's not necessarily the case, especially when you're starting off a business, if you want to do it the right way, in my mind. And so as much as it is rewarding and you can really get a lot from that, it is also, you have to put the effort and energy into it. You have to put the time into it. You have to think about your finances. But I think it's not for everyone. And I think someone has to really dig deep into understanding and also talking to people who have businesses and getting mentors and finding out like what was their experience before they kind of make that jump into it.
Recent demand for guaranteed income solutions has sparked a surge in annuity purchases over the past few years. According to LIMRA research, total annuity sales in the U.S. topped $430 billion in 2024. But let's take a step back here. What exactly are annuities, and are they a good investment vehicle for you? Here with more, I'm joined by Michael Downing, who is the Athene Chief Operating Officer. Quick disclosure, Athene is a subsidiary of Apollo Management, Yahoo's parent company. Great to have you here on set with us, Mike. Let's start with the basics. Just what is an annuity and how do they work?
Yeah, so at a general sense, an annuity is just a general term for a collection of retirement solutions. Mm-hmm. They're all generally trying to provide guarantees. And the way they fit in is if we think about your average retiree who's saved for 30 or 40 years, mm-hmm. their core need is to have guaranteed income for the rest of their life.
Right.
So one, they want a guarantee. Two, they want to have confidence they're not going to outlive their income. And three, they're going to want to make sure they feel comfortable that they can weather downturns, whether it's an equity downturn or a spike of inflation. So the way they work in terms of the guarantees, the basic types are strong rate of return for a fixed number of years, mm-hmm. guaranteed payments for your entire life, regardless of how long you live, principal protection with potentially some equity-like upside, and all of them are built within a tax-deferred wrapper.
Right.
So they both protect and preserve wealth and help retirees retire with confidence.
Now, annuities may not be for everyone, so what are some of the limits here that we should also be keeping in mind?
Right, so I think the key thing with annuities, I talked about there's a collection of different types of tools.
Right.
They should generally be an anchor of almost any portfolio in terms of the preservation of wealth. And so the things that customers should look at is the type of protection they need. So one, is it guaranteed return on your investment? And that's what some simple annuities provide, a guaranteed, say, a 5% yield for guaranteed for 5 years. Or is it you still want upside of the market but want to protect the downside? That would be an example of a fixed indexed annuity.
Right.
And then there are others that allow lifetime income withdrawals as well as having liquidity. So it's really a matter of trying to find which one is appropriate for your portfolio.
And what level of liquidity you need as well.
That's right.
And so what is the sweet spot for an age that you should be considering an annuity?
Yeah, so I'll talk about in the range of our target customers. Sure. So with Athene, last year we issued about $35 billion of annuities in this rising market. And our customer base on average ranges from about age 55 to about 85. Mm-hmm. And certain products are really popular at all ages. The simple guaranteed rate to term is popular across the spectrum. Other types like fixed indexed annuity, which promise principal protection but have equity upside similar to an S&P upside, but the downside protection tends to skew younger. So that might be more in the 55-year range.
And so with that in mind, when you talk about fixed indexed annuities, it seems like, especially for a lot of the younger investors that could eventually opt into or add in annuities to their portfolio as well, that's a way to almost take the thinking that might already exist from an ETF perspective and then layer that into an annuity perspective. I mean, I may have that incorrect.
You have that exactly right. So a common, like within the employer space, a common structure are these target date funds, which basically automatically adjust your risk profile as you get older. But they're just targets. None of them have guarantees or boundaries. The fixed indexed annuity provides guardrails that are guaranteed by the insurance company. So it's exactly that, Brad, is you can invest in these in a younger age, get all the upside protection, continue to get the tax deferral, and then when you actually need income, pull the income out.
Is there a sweet spot in kind of percentage return that you should be looking for in your annuities?
No, it's really just a matter of looking for annuities compared to alternative investments. So right now, again, in the current rate environment, you can get a guaranteed return of about 5%. You can get, in terms of a fixed indexed annuity, principal protection upside of as much as 10 or 15%, which is very strong, but it's all against the backdrop of alternatives. So at the current rate environment, annuities are a much stronger alternative to CDs because they offer the tax deferral, they offer liquidity to the extent you need liquidity for investment. And then when you look at equity alternatives with a high volatility, having that principal protection for most retirees makes a lot of sense.
Yeah. Michael, thanks so much for breaking this down for us.
Thanks for having me, Brad.
Appreciate it. We've got much more on wealth after the break. Stay tuned. You're watching Yahoo Finance.
From creating graphics cards for gaming to becoming one of the world's leading AI chip companies, it's safe to say Nvidia is officially one of the tech giants. Let's take a closer look at what led to Nvidia's boom with Beyond the Ticker, where we dive into the company's biggest moments. Nvidia was founded on April 5th, 1993 by Jensen Huang, Chris Malachowski, and Curtis Priam, with a vision to bring 3D graphics to the gaming industry. In 1997, Nvidia launched its first hit product, the NV3. It would later go on to sell a whopping 1 million units in its first 4 months of availability. On January 22, 1999, Nvidia went public via IPO at $12 per share. And in 2000, Microsoft chose Nvidia to develop the graphics hardware for the first Xbox console. 5 years later, Microsoft's rival Sony chose Nvidia's hardware to power the PlayStation 3. In 2010, Nvidia became the graphics chip supplier for automaker Audi. And in 2015, the company launched its Nvidia Drive chip for powering driver assistance technologies. In 2016, Nvidia kicked off its AI efforts with the launch of the DGX-1. 2 years later, the company debuted Nvidia RTX, the first GPU capable of real-time ray tracing. That same year, Google announced it was using Nvidia's Tesla P4 graphics cards for its Google Cloud platform. In 2022, Nvidia debuted its H100 graphics chip for AI, which still stands as one of the world's most powerful chips for artificial intelligence apps. On June 5th, 2024, Nvidia eclipsed that $3 trillion mark, joining the ranks of mega companies Apple and Microsoft. In June 2024, Nvidia completed a 10-for-1 stock split, providing investors with 9 additional shares for every one they already own. From a company of 3 engineers working on graphics cards to thousands of employees working on chips that will power the AI supercomputers of the future, Nvidia remains at the top of the tech industry.
Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I say, this is the podcast that will make you a smarter investor and a better leader. I'm really excited to talk to our next guest because they have one of the most active ticker pages on Yahoo Finance, I would say, over the past 3 months, maybe even 6 months. I have to go back and check my data. That is Rigetti Computing CEO Subodh Kulkarni. Good to see you. You're a bit of a rock star right now on the Yahoo Finance platform. I mean, holy cow. I mean, stock was up 48% yesterday.
No, we are certainly excited to see the increasing interest in quantum computing and specifically our company. It's an exciting time period for quantum computing. It's coming along very fast, the technology. We have made great strides. The industry has made great strides. So we are excited to be part of.
I was trying to think of what, I haven't seen moves like this in a while. I was thinking about, maybe I saw it in cannabis stocks a couple of years ago, but as a leader, before we get into your business, like what do you tell the team after a day? Well, one, with your stock price up 48%, but the day before it might be down. I mean, the volatility it's huge.
Believe me or not, I try to tell the team not to focus too much on stock and try to ignore as much as possible the ticker and how it's moving and stay focused on technology. We are a technology development company. It's critical that we stay focused on technology development and not get carried away with the stock move and the trading volume.
Do you get nervous though? Like, holy cow, I mean, it's just moving too fast.
As I said, we just try to stay focused on technology and get our job done. I know it's easy to get carried away with ticker symbol and the trading volumes, but the best thing is not to get caught up in it.
So you mentioned you were at the a Needham conference yesterday. Given the moves in the stock, what are you being asked right now by investors?
Well, the main question on everyone's mind right now certainly is because of some of the comments that were made by people like Jensen Huang and Mark Zuckerberg after that how close are we from quantum computing become a practical reality. The word that they used was useful, and it's a subjective word, it's a little vague word, so it's hard to say when is something useful for whom and so on. So but those are the questions that are front and center on investors' mind. Is everyone understands quantum computing is going to happen. It's definitely going to happen. It's a question of when, not if. And that's the critical discussion going on. Is it now, as some companies claim, that they are finding value with their quantum computing solutions with customers now? Or is it 15 to 30 years from now, as Jensen Huang was saying? That's on the pessimistic side. There are still some super pessimists out there who continue to say quantum computing is never going to happen. That's really far out there. We happen to be somewhere in the middle. We think quantum computing is definitely going to happen. We can talk technology numbers more precisely. We can talk about qubit counts and fidelity, which is a very important metric in quantum computing, gate speeds and those kinds of things. We have a roadmap. We can see how we can make progress with those numbers. Exactly how those numbers will materialize themselves into business opportunities with data centers, it's not clear. We can see most likely we can deliver what we call quantum advantage, which is basically superiority with quantum computing for practical applications, somewhere in the 3 to 5 year time period. So when people ask us, when do you think it's really going to happen? We say, please define what that means. Yeah. But so long as it means when is commercial interest going to really start making a material difference to all of us, our timeline is roughly 3 to 5 years from now.
So part of the role of a CEO of any public company is telling the company story, but also managing investor expectations. Mm-hmm. You know, when you're in that room in that Needham conference, do you have to tamp things down a little bit? Hold on a second, guys. We have to, we have a plan. We have to drive this plan, and then X, Y, Z will happen.
Absolutely. I mean, particularly because of the hype that is going on in the quantum computing space, and some erroneous statements are being made, including by people in the industry. We have to tamp down some expectations.
Like what's erroneous? Like what are they?
When some people are saying we can demonstrate great value with quantum computing now, sales are going to explode now, and I believe they are wrong. I don't think, I mean, right now most of us, when we talk about sales, these are essentially government contracts. As important as they are, that's not viable long-term business opportunities with commercial customers. Mm-hmm. So I do have to tamp down investor expectations when they say how rapidly are sales going to grow in 2025 versus 2024 and in 2026 versus 25. I try to tamp that down.
So that's like an example of hype. That's hype. getting into, I guess, expectations.
Yeah. So I have to tell them that it's still not the time to talk about sales and sales growth because we are still very much in the technology development mode. We have to get the technology perfected before we can start seeing real material difference in sales.
When do you? I mean, you make. I read your annual report. You make. You not high. Like you've not made money. Like when does that switch turn?
And that definitely ties with the sales milestones. So as I said, we are clearly in the R&D mode. We are clearly in the technology development mode. So we are in the investment mode right now. We do have some sales, but that's mostly government contract kind of opportunities. Assuming the timeline I described earlier holds, and we start seeing material sales opportunities 3 to 5 years from now, we certainly expect the company to start becoming cash flow break-even around that time period. And beyond that, profitability will come along. But it is a long process. It's not something that I can assure investors that it's going to be next year or next quarter or anything like that.
You mentioned in the in your reports that you may have to raise capital, but first quarter of 2026. I mean, given the stock price, do you use the stock price to raise capital now? Like, given how far it's come?
We are fortunately in a good position today. At the end of last year, we had close to $225 million cash and no debt. And our burn rate is roughly $60 million a year. Okay. So we have sufficient cash for at least 3 or 4 years. And then it depends on how the government contract opportunities materialize. Assuming US government and some of our allied countries that we deal with continue to invest in quantum computing and we get to some of those opportunities, we hope we can extend our existing cash to the point where we don't need to raise cash anymore to
so you wouldn't want to use this run up in the stock as a stock offering to raise money, just to build up your arsenal?
We'll always look at what we could potentially do, and so we never want to say we won't do something because things could change. But as of today, we don't need to raise more money for the foreseeable future.
That's good. So take us through what you actually do. Like, what is the chip that you make? Tell us a little bit about the technology.
So fundamentally, quantum computing is a very different way of doing computing compared to classical computing, where you have zeros and ones. We have multiple states, and they coexist at the same time. We call them qubits. We entangle the qubits. So when we have n qubits, our computational power goes 2 raised to n. Also, the energy consumption goes down. So fundamentally, it's a superior way to do computing, both from a performance standpoint as well as energy consumption standpoint. To make that happen, we build this chip, quantum chips, which have qubits. And that's really where a lot of the value in the company is. So we design our chips. We build our chips in Fremont, California. Then the whole stack, we call ourselves a full stack company, and we have an open modular architecture. So once we build a chip, we put it in what we call a dilution refrigeration to cool the chip down. Then we have control systems to control the stack. Then we have things like error correction, firmware, and of course the application layers. So right now we do just about everything. We outsource some parts of our stack. Dilution refrigeration we buy from existing players like Blue Force or Mabel and a few others. Control systems, we do look at options like quantum machines, Zurich Instruments, and so on. In error correction, we are partnered very closely with a company in UK called Riverlane in Cambridge, UK. So we look at options to integrate clever, innovative solutions from outside, but we are responsible for the full stack. But the core value of the company is actually the design of the chip and the fabrication of the chip. That's what we really put our effort. Right now, the focus is really on fidelity of the chip. We can clearly do computation, it clearly works, but our error rates are too high. And at the current high error rates, it really is not practical to compete against CPUs or GPUs today. We are inferior in performance compared to them.
Well, I'm glad you brought that up, because I think there's a lot of, just given the rise in the stock, there's a lot of new investors that have become familiar with their company. And I feel as though they are looping you in with an Nvidia and AMD. How are you different versus those companies, those bigger chip makers?
Well, fundamentally, we are dealing with what we call QPU, quantum processing unit. The companies you mentioned, Nvidia obviously is very important in the GPU world. In the CPU world, you have companies like Intel and AMD. AMD also is getting into GPU. So we are in the QPU world, completely different technology compared to CPU world and GPU world. We are dealing with qubits. We are designing the chips. We are making the chips. Certainly, we are in the R&D stage right now. Our focus is to get the chip perfected, essentially, get the stack perfected. And right now we are not there. We are clearly in the technology development mode. So today, if you ask me to do a ROI analysis with our QPU versus a GPU or a CPU, our solution would look inferior to you from a performance or cost standpoint. But we see the potential. Assuming we continue to increase our fidelity, assuming we continue to increase our qubit count and improve our gate speed and some other metrics, in 3 to 5 years, we believe we will be able to demonstrate superiority with QPU compared to CPU or GPU. And that's really the goal right now, is to get us to that point where we can say, here's quantum advantage. The potential opportunities after that are mind-boggling. We can tackle problems that cannot be tackled with classical systems.
Like what? Like what's a problem that this chip can solve?
I mean, things like weather forecasting, things like drug discovery, where you have protein folding, unfolding. There are many problems where you have tens of thousands of variables that are interacting simultaneously. And those are intrinsically very difficult problems to tackle with CPU or GPU technologies. Those are the kinds of problems we can take on. Things that are probabilistic in nature, where you are asking the questions of what are the chances of an economic recession happening? What are the chances of...
What are the chances? I have to ask.
Don't we wish I'll be a new answer to that one. So those are the tricky problems where you have tens of thousands of variables that are all interacting with each other simultaneously. They're very difficult to program and solve with the conventional classical computing architecture. Those are the kinds of problems we believe quantum computing will be able to help us solve.
All right, hang with us. We're going to go off for a quick break. We'll be right back on Opening Bid. All right, welcome back to Opening Bid. Having a really interesting conversation here with one of the hottest tickers, hottest companies on the Yahoo Finance platform. That is Rigetti Computing and their CEO, Subodh Kulkarni. I'm really enjoying this discussion. You mentioned you do work or working with governments. Like, what is the government reaching out to you and saying, hey, we want to work with you on this? Like, what do they need from you right now?
So governments of many countries understand the importance of quantum computing. There's potential that once we perfect quantum computing technology, you can relatively easily break AES 128 or even 256 or 512-bit encryption with quantum computing, which cannot be done with classical computing. That means quantum computing could be used for very rogue applications. People could hack into existing computing systems, and that could be a disaster.
Terrifying.
Exactly. So many governments understand the importance of quantum computing. So you obviously want to be ready for quantum computing to happen. You want to encrypt your information, assuming quantum computers are around to break standard AES 256 or 512-bit encryption. And so many governments have strategic interest in quantum computing. They understand that this is a technology of the future, and you definitely don't want to be a laggard in this technology. We certainly want to be a leader as a country. So the government of US certainly has been a pioneer in this area. The original National Quantum Initiative Act was passed in 2018 that funded our DOE labs, and many of the companies like ourselves got funded through those DOE labs. That's where we get the contracts from so far. There is a bill right now that the US government is debating. It's called NQI Reauthorization Bill that we expect to pass soon. And that's, assuming it passes in the current form, it's a $2.7 billion investment over 5 years. Most of that money will go to DOE labs and some of the government institutions. Eventually, it will come. Some of it will come to companies like us to help advance the technology. So then what we do is we work with individual government DOE labs like the Fermi Lab near Chicago or the Oak Ridge National Lab, Brookhaven National Lab, and so on. And we work with specific projects that they think are suitable for us to take on. So sometimes it can be they design the chip and we build a chip for them. Sometimes we build an entire chip or the substack of the quantum computer and give it to them. Sometimes it can be in the error correction area. Sometimes it can be in the control system area. So depending on what they think we should be doing, they define the contract and we work closely with them.
It's been an interesting 4 years, just staying on the government topic, in the land of chips. You had the Biden administration put a lot of money to work with the CHIPS Act, trying to build fabs in the U.S. Intel, of course, leading that charge. But they've also cracked down on what could be shared. Nvidia right in the crosshairs of this with China. Is there anything that the Trump administration could put forth that would help your company or things you're concerned about?
Well, right now we are certainly still in the technology development mode, so everyone's trying to understand how to safeguard the technology. Clearly, the interest is to make sure that whatever we are developing doesn't get abused by other rogue companies or countries. So safeguards are being put in place. It is deemed as a critical technology. So we will be eventually export-controlled technology. So all that work is going on. But we are still very much trying to understand where to draw the lines. You don't want to put the restrictions so severe that you thwart the development of technology. At the same time, you don't want to keep it so open that it becomes easily accessible for rogue companies or countries. So that work is still going on. It's not clear where exactly the safeguards have to be drawn. But as we perfect the technology over the next 2-3 years, I'm pretty sure there will be some regulations that will be put in place to safeguard the technology.
Do you think the technology has gotten out of hand, but it's moving so fast that regulators can't get their hands around it?
There's always a risk of that we in the technology development world tend to move quite fast, and regulations sometimes have a tough time keeping up. However, in this case, from what I've seen, many people who are quite knowledgeable about quantum computing have already started writing documents about where the line should be drawn. So I don't believe that's the case here, as it is in some other areas like the Gen AI software areas where it's harder to put the safeguards. Here, maybe because we are dealing with hardware technology, it's relatively easy to see where the safeguards may have to be drawn.
Why are Jensen Huang and Mark Zuckerberg wrong on the timeline for quantum? Now, I get you to say, yeah, they're going to be wrong because you're in this space. When Jensen says potentially 15 to 30 years, Zuckerberg maybe a shorter timeline, but they really, their comments hold a lot of weight and they impact your stocks. Like, why are they wrong?
I mean, it's hard to say or define what is useful, as I mentioned earlier. So rather than get caught up in why are they right or wrong, What I can say is based on where we are, I know where we will be in 3 to 5 years. So for instance, right now, we are at 84 qubit, we are at 99.5% fidelity, we are at 50 nanosecond gate speed. I can tell you that in 3 years, or certainly 5 years, will be more than 1,000 qubits, will be better than 99.7 or 99.8% fidelity. Gate speeds will be less than 40 nanoseconds. That is a lot more under my control and our team's control. So we are pretty confident of our roadmap and our ability to execute the roadmap. Will it be useful at that time? That's where the debate comes in. Now, someone like Jensen Huang and Mark Zuckerberg, of course, they have their rights to say what they believe in, and they think that it will be 15 to 30 or 10 years from now. And there's no way I can prove them right or wrong sitting here. I believe that assuming we execute our roadmap, there are a number of organizations that are going to start finding quantum computing quite valuable. So, and there are many big companies who have run reports on this, McKinsey, BCG, IDC, and they generally tend to agree with what I'm saying. They believe that the business will start evolving. The most conservative estimates we have seen is that the business for quantum computing will be about $2 billion a year 5 years from now. On the aggressive side, that they are talking about somewhere in the $10 billion a year neighborhood. Now, maybe to some people, $2 billion a year may not be a meaningful business because they are so big as companies right now, and maybe that's where they are coming from. But for small companies like us, $2 billion a year is a very sizable material opportunity. So perspectives can change depending on where you are coming from. So it may be just a question of what do they mean by being useful versus what do we mean by being useful.
You're getting lumped in, your company, with other quantum stocks. That's how these stories are written, quantum stocks. How are you different, let's say, versus a D-Wave?
So within the quantum world, there are many different ways of doing quantum computing. We belong to a camp that is called gate-based computing, which is what classical computing does. So in classical computing, we have gates created by the CMOS transistors. It's something similar we do in the quantum world with qubit gates. So companies like D-Wave or some other companies, they do what's called annealing. It's a very different approach. It's not a gate-based approach. And I understand you talk to them. So it's a very different way of using quantum effects to solve a problem. We are much more in the general purpose computing with gate-based computing. Within the gate-based computing world, there are different what we call modalities of quantum computing. We belong to the camp that's called superconducting quantum computing, which is where we are using superconductors to create quantum states, and that's what we are using to solve the problems. But there are other modalities. There's trapped ion modality, where companies like IonQ and Quantinuum are pioneering. There's photonics, where companies like PsiQuantum and a few others are doing some work. Spin quantum computing, which is where Intel and some other companies are playing a role. So, and there are a few other modalities. There's pros and cons of different modalities. We belong to the superconducting camp, where along with us you have IBM, you have Google, Amazon, but also Fujitsu in Japan, Traiken in Japan.
So does your chip compete with a Google Willow?
Effectively, we do compete with IBM and Google from a technology standpoint.
Interesting. So if I were having this conversation a year from now, what does your business look like?
Still, I believe we will still be a technology development company a year from now. We hope we will be at a higher qubit count, obviously. What we have disclosed is by the end of 2025, we want to be more than 100 qubits. We want to reduce our error rates by a factor of 2 from where we are. And we want to continue to improve the other metrics. Critical area where we are pioneering is we are getting into launching an approach with chiplets, very similar to what CMOS industry does. Right now, if you take any of your advanced devices and advanced nodes with CMOS, more likely than not, they are using chiplets, which is small chips. And the reason they do that is because it's a lot easier to control yields on small chips because of the unit surface area. The same holds true for quantum chips. So we believe the path to get to thousands and hundreds of thousands of qubit is through the chiplet side, not a single monolithic chip. As of today, all of us, whether it's us or IBM or Google or others, we are doing monolithic chips. We believe the right way to scale up a qubit count is through the chiplet approach. So a lot of our effort in 2025, besides improving fidelity, is to start including chiplets. So by the end of this year, we want to demonstrate chiplets work in quantum computing, and we can improve our fidelity and reduce the error rates by a factor of 2. That's where we will be a year from now. Assuming we succeed with that, then the roadmap will be continue to increase the qubit count and continue to improve the fidelity from there on.
In the final moments of the podcast, we always love to ask our guests like their hot takes. So my question to you is this: if you weren't doing this, what would you be doing in life?
I was in the semiconductor industry for more than 3 decades. Chances are if I wasn't doing this, I would still be in the semiconductor industry. And it's a close cousin of quantum. I mean, what I'm doing right now comes very close to what semiconductor industry does. That's one of the advantages of superconducting quantum computing, is we leverage the know-how from the semiconductor industry, garnered by people like myself. So I'm bringing semi-experience into the quantum world. So chances are if I was not doing quantum computing, I would be doing some part of the semiconductor stack anyway.
How do you blow off steam? Or you have a hobby? I mean, I'm trying to figure out, like, help some of these investors that are now really just enthralled with your company. Help them get to know you a little bit.
Well, certainly it's a complicated area. I mean, quantum physics is not something that
no, it's not easy stuff.
Anyone can understand. Most of us remember the toughest class we took, whether it was undergraduate courses or graduate courses, was likely the quantum physics class, and for good reasons. I mean, it's mind-boggling that two things can do that contradict each other can be coexisting at the same time. And a tricky part is when you go try to probe it, it loses its state. So something you cannot measure or monitor is going around, and that's very intrinsically very hard for us to understand. As I said, I'll try to understand the science the best I can. Sometimes it gets too deep, even for me. I'm an engineer by training, and this gets into the heart of quantum physics. I have my own hobbies. I try to do them to try to keep my sanity intact. But sometimes in the quantum world, you do wonder whether you know what you're talking about.
Subodh Kulkarni, Rigetti Computing CEO. Just interesting story. And that's it for the latest episode of Opening Bid. Be sure to hit us with those thumbs up on all the major social media platforms. Really enjoying right now the comments y'all are putting on YouTube. I try to answer them all. I really appreciate the feedback. I'm learning a ton. So continue to hit us with those likes on YouTube, and of course, all those thumbs up and signs of appreciation on the podcast platforms. We appreciate it. And that's it for the latest episode of Opening Bid.
News when you want it with Bloomberg News Now. I'm Amy Morris. This happening right now. Israel and Hamas have agreed to a ceasefire deal, bringing at least a temporary halt to the war in Gaza. Talks had centered on the release of hostages in exchange for hundreds of Palestinian prisoners. Now, we're going to bring you more on this deal as we learn it, but for now, a ceasefire agreement has been reached between Israel and Hamas. U.S. consumer prices rose in December by less than forecast, a welcome step down that helped arrest a deep sell-off in bond markets and reinvigorate bets that the Fed will cut interest rates sooner than previously thought. We get those numbers with Bloomberg's Michael McKee.
The core is up 0.2. That's a little bit less than last month, which is some good news for the Fed there. 3.2% on a year-over-year basis. That's down from 3.3% the month before. So overall, some reasonably decent news there.
Bloomberg's Michael McKee. Traders now pricing in a Fed rate cut as soon as July instead of September. And now Fed presidents are weighing in. Richmond Fed President Tom Barkin says the new inflation data show progress toward the 2% goal, but interest rates should remain restrictive. New York Fed President John Williams says he's confident inflation will continue to decrease. But as far as rate cuts this year, he says the economic outlook is uncertain because of fiscal, trade, immigration, and regulatory policies. We do check markets for you all day long here at Bloomberg. The S&P 500 is up 1.3%, NASDAQ up 1.7%, the Dow up 1.3%, the Russell 2000 index up 1.6%. The 10-year Treasury yield at 4.66%, and the 2-year yield is at 4.28%. JP Morgan's traders scored their biggest fourth quarter haul ever, boosted by volatility tied to the U.S. elections in November. More on this now with Bloomberg's Allison Williams, who says bank earnings have been good so far.
Net charge-offs in line, but the provisions were lower. So that means that they're setting aside less in terms of reserves. That is a positive in terms of the outlook. And that's really what we're looking for. What is the outlook for 2025?
Bloomberg's Allison Williams. Meanwhile, J.P. Morgan Chair and CEO Jamie Dimon used today's earnings call to pay tribute to Dan Pinto, who recently announced he'll retire in 2026.
I just want to point out that Daniel Pinto is not leaving the company yet. A great partner of mine, trusted by everyone at the company. So we're thrilled to have his skills and talents going forward. But I just wanted to recognize the contributions he made.
Dimon says his base case is to stick around for a few more years. Turning to Washington, Pam Bondi, Donald Trump's pick for Attorney General, says there will be no enemies list in the Justice Department if she's confirmed. Bondi is fielding questions about her lobbying work and potential conflicts of interest, and she also helped Trump contest the results of the 2020 election. Ranking Democrat Dick Durbin asked her about that.
I accept the results. I accept, of course, that Joe Biden is president of the United States.
Do you believe that the January 6 rioters who've been convicted of violent assaults on police officers should be pardoned?
If asked, I will look at each case and advise on a case-by-case basis.
Other Trump nominees up for confirmation hearings today are Senator Marco Rubio for Secretary of State, John Ratcliffe for CIA Director, Russ Vought to head the Office of Management and Budget, Chris Wright for Energy Secretary, and Sean Duffy for Transportation Secretary. The death toll is now at least 25 from the wildfires that have devastated the Los Angeles area. Search and rescue teams are combing through the burned-out homes and rubble. CAL FIRE Information Officer Robert Foxworthy says about 400 team members are going through Altadena.
Going to every individual structure and searching it, looking for hazards, possibly searching for any victims that may not have made it out of the fire, and they will continue to do this until they cover the entire fire area.
Winds are starting to pick up in L.A. now. It has not seen measurable rainfall there since Christmas Eve, and there is no rain in the forecast through the rest of this month. Russia is expected to demand Ukraine never join NATO in any talks with incoming President Donald Trump. Sources tell Bloomberg Russia will demand Ukraine drastically cut back military ties with NATO and become a neutral state with a limited army. U.S. health officials have banned the artificial food coloring red number 3. It's been linked to cancer and is currently in scores of products from candy to cold medicine. The FDA says that ban will take effect today. That's news when you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Not everybody likes talking about money. Some people find it awkward. Sometimes they even find it a little embarrassing. I do not. I like talking about money. Whether it's the boardroom, the newsroom, the trading floor, I've spent the last 30 years talking about money, writing about money, and talking about it and writing about it a little bit more. I'm Maren Sumset-Webb, and every week senior reporter John Steppick and I answer your questions about personal finance, and we discuss the best strategies for making the most of your money. Listen in for the kind of insights and explanations everyone can use to help them make better saving and investment choices for themselves and their families.
My question is whether you think maxing out my company pension match is enough for when it comes to saving.
Just do it. Just launch it. And so I say that, but I was like, launch it, just do it, because, you know, we can always procrastinate to make things perfect, right? Mm-hmm. And I'm here to say it will not probably be perfect the first go around. But if you have some type of strategy in place or an idea or a go-to-market plan, either you develop it or a hired expert develop it, I think that is good enough to just launch it and go, and let your audience kind of help guide you on how you can make those small tweaks. But if you sit and try to make it perfect, it will never launch. So you never launch it. So definitely just launch it. And the third thing is, it will always cost more than you think.
So I hear lots of experience here.
True words have never been said.
Yes. So that's I would say that it always costs more than what you think. Definitely have a budget in place and think about that. But I would definitely think about having a reserve just in case, because there will always be something small that happens, like, oh, I forgot to order X, Y, and Z, or I have to pay for this influencer that, I think that, it wasn't part of our original plan, but I think it would actually help, boost. So definitely have the reserves, and definitely have a budget, but just know that it probably will always cost. And that's kind of like a little bit into my story. So
yeah, no doubt. Well, and we'll dive into that. So you're saying that in addition to your emergency savings, just as a human being, you should have an additional reserve if you're going to dive into entrepreneurship.
Absolutely, because you want to. I totally believe in separating the world of your business and your personal. There's some overlap, and that always happens at some point. But having it separate makes it so much easier because you don't want to get into a position to where you're now pulling funds from your business to help support your personal life, which again is very much about my story that I have to talk about. And I learned a really big lesson in that. And so I like to keep it separate. So having that reserve, same as you would have if an emergency fund for your personal, it's the same thing as having an emergency fund for your business.
Yeah. It almost seems like entrepreneurship is very tricky, right? But why? I mean, we're doing what we love, what we're passionate about. What's not
no
to
corporate
love
oversight
about being an entrepreneur, right?
What's not to love? Yeah, there's a lot of things that's not to love. I think it's depending on who you are, and which is why I always say, like, it can seem so glamorous at times online, or how many people make it seem like it's, oh my God, you can just work from ever, you can do whatever you want. And that's not necessarily the case, especially when you're starting off a business, if you want to do it the right way, in my mind. And so as much as it is rewarding and you can really get a lot from that, it is also, you have to put the effort and energy into it. You have to put the time into it. You have to think about your finances. But I think it's not for everyone. And I think someone has to really dig deep into understanding and also talking to people who have businesses and getting mentors and finding out like what was their experience before they kind of make that jump into it.
Yeah, you're kind of talking about this intertwining of personal and business, I think emotionally and financially. Do you think that in the modern world we live in today that you can actually turn your side gig into a full-time, or do you think you need to have a stable job to start your business?
And I think that also depends on how willing are you to dig deep and dive deep into that, right? I always started most of my business as being an entrepreneur, and currently I'm an entrepreneur.
I'm sorry, what was that?
Entrepreneur?
Yes. Please define that.
So basically, who has a 9-to-5 or has a contract job or has a job, but also has businesses, and these businesses are thriving, and there are people who are help managing and running those businesses, as well as I'm also working for someone else. And so there's been moments in my life when I've been an entrepreneur or I've just been completely without having a 9-to-5 as well. I found that if you don't want to go through sometimes that point of just like, oh my gosh, my money, I'm pulling money maybe from my savings or emergency funds and like that. It's great to have that support, if you're, obviously if your job allows that, have the support of having a 9-to-5 job, getting that steady income where you have to worry about, I need to push this out as soon as possible, where sometimes you may push it out prematurely, or just I don't have like the full bandwidth to do it, or even like the capital to actually do it. But I also believe that if you have that thought and you've been saving and you may have had a job and you're ready to leave that job and to do that, I think that's perfectly fine as well. But I just think that you have to be aware of those things that may pop up financially sometime, which is why I say have those reserves.
Yeah. I do appreciate you mentioning this idea that it really kind of depends, right? Because there are so many. I mean, if I'm going to try to start a coffee shop, I probably can't also have a 9-to-5.
Yeah. Absolutely. But again, launch it, but take the time to grow it and not try to rush that process. So, yeah.
Right.
So let's dive into your story as an entrepreneur a little bit, the highs and the lows as well. What was one of the biggest mistakes that you think that you made maybe when you launched Brooklyn League?
Yeah. So Brooklyn League was a side gig. I was definitely full into corporate America, 9-to-5 job, steady income. And I launched Brooklyn League as a hobby, as a creative outlet. And just to give more context, people may not know, Brooklyn League is a e-commerce brand. It's a streetwear brand that encompasses Brooklyn. And it's a merging of old school Brooklyn, new school Brooklyn through art, through clothing, and other accessories. And so I started that because I live in Brooklyn. I love Brooklyn. So I wanted to kind of show what does Brooklyn look like to me as someone who moved to Brooklyn, but also have a lot of friends who were born and raised in Brooklyn. And so that's the reason why I was melding the two worlds together. And so I started with just I'm going to put it out there. People may purchase it. It's not going to, if I make money, great. If I don't make money, fine as well. And then it got to a point where I was like, oh, this is actually picking up some steam. Like, people are actually really into this. And so I started to do pop-up shops, but I'm still just like, I'm not making enough money to live off this. This is just still purely a hobby for me. Then fast forward to 2020. I was like, okay, it's time for me to leave corporate. I can do it. And I left in February of 2020 and did not know.
You had no insight?
No insight, no data points on that.
Right, exactly. Mother Nature was not telling you she's coming for you.
Yeah. And so pandemic hit, right? And I was just like, oh, I have a lot of time on my hands right now. And so as being a marketer by profession, I was like, well, let me at least use this time to kind of like enhance my skill set. And so I started taking more digital marketing and advertising courses. And I was like, well, let me just apply this to Brooklyn League. You know, I have nothing but time at this point right now. Let's try it. So I was able to scale this brand that I was making, you know, on a good month, maybe like $4,000 or $5,000 or something like that. It really wasn't like a lot.
Yeah, but not bad.
But not bad. But like majority of the time it was like 600. But I was able to scale that brand to like over $10,000 within a month after start incorporating some of the things that I learned in that course. And so I was like, oh, this is like just extra income coming in. So I was just like, all right, so now I'm getting 10,000. Now I'm getting 20,000 a month. Now I'm getting 30,000 a month.
Nice.
And instead, and one of the biggest things that I didn't realize is when I made that shift to kind of turn it from a side gig to an actual, like, this is my career, this is my like job. I work for this my company now, is I didn't take into account the finance aspect of it. I was definitely using some of the money from that I was making from Brooklyn into my personal life and funding some of my personal life and things I wanted to do and trips. And like, you know, it was the pandemic, so like things were cheap, but still I was just like, well, I can still kind of travel a little bit and do things like that, you know, if, you know, those countries are open, and obviously if flights are allowing me to do so. And so that point was great. It was a really good ride until it was not, until I did not have money saved. And so what I was doing was taking a little money and kind of reinvesting it into my advertising so it can keep the machine running. But then there was a point when Apple made a decision to change their rules on how people are being tracked. Mm-hmm. And that literally changed the game of
iOS 17.
Yes.
It's the bane of our existence as well.
That changed everything. It dried up. And I had nothing really to show as far as savings from that company. And I was making so much money from that company. Mm-hmm. And, you know, luckily I did have like my money, my personal money saved, but it was just like, this is a complete disservice to my company that was really growing and thriving. And now that has dried up and I have to like reconfigure and think about how I'm going to get more customers in, because that change in iOS completely changed the whole algorithm for advertising. And so I had to go back to the drawing board, and I had to go back to doing when, you know, everything was open back up, pop-up shops and things that I haven't done in quite some time, because I kind of built enough of a base. And yet I still have my core customers who, you know, if I send an email, I would get sales in, but it just wasn't the same when I was having these ads kind of really help out. And so that was a big learning lesson. It's just that's why I'm also like, have reserve, save, make sure you're saving for it, because that really kind of opened my eye up of just like, oh, this is no longer a side gig. I don't have a 9-to-5 anymore. Right. This is it. This and like my agency, my marketing agency, those are my sources of income. So it changed of mindset.
Yeah. So in today's world, many of us who are entrepreneurs are very, very heavily lean into social media. So we've dealt with challenges with Apple as well, Facebook. Now those who have a huge presence on TikTok are going to have a struggle come up in the next couple of weeks. Mm-hmm. In hindsight, what would you have saved? How much more would you have saved to launch Brooklyn League than you maybe did?
Yeah, I mean, I think what I was doing was I was putting around, I think I was like 20%, about 10-20% back into advertising. I would have continued to do that, probably ended up a little bit more, but I've also would have put more to the side. I really wasn't saving. I mean, I was kind of just like, putting it back into that and maybe $1,000 or $2,000 a month, and then everything else was just going to like fueling lifestyle, or just like traveling and again, traveling and shopping and doing everything else like that. Again, I'm at home, you know, I'm shopping on other e-commerce sites. So I would probably put more money towards that percentage. I'm not sure right now what that would be, but definitely much more than that. So I would probably say at least like 40% or so towards it.
Yeah. Just 1 second, Fan. We'll be right back after this break.
Well, welcome back to Living Not So Fabulously. Today we're speaking with Fayon Spurlock about the challenges of being an entrepreneur. So Fayon, one of our friends actually has a saying up on she's an entrepreneur and she has a saying up on one of her boards, and it says, "Thou shalt invest thy earnings in growth." And I think that that's something that a lot of entrepreneurs forget is we think about, okay, we're making $5,000, $10,000, $15,000 a month. Yes, cha-ching, I can start funding the lifestyle that I've always dreamt that this business would, but we forget, where does that growth come from? And is it momentary growth, or is it self-sustaining growth? And how do we get it to the point where it's self-sustaining, and then we can start to pull money out?
Exactly.
Right?
I mean, I would definitely, in hindsight, just add to that is probably work with a financial advisor to help even just plan that part out, right? Because now that I'm no longer getting a steady income and I'm relying fully on my sales or my clients from our agency, it's just like, how do I manage my life? How do I keep my current lifestyle? Because I would like to keep it. Right? If I'm making them, I would like to keep it. But how do I manage that, right? And, I am of the mind now, if you are working a 9 to 5, I would not even touch the money. I would give it at least a year before even touching on it. I would just let the money accumulate, reinvest back into it, but just also accumulate a savings or a reserve from that as well. And so that's what I would do if I was working. Like if I didn't have a 9 to 5, I would definitely be a little bit more conservative on how much money I'm pulling from the company, because that also, if it was working while you were growing it, it can work more if you put more into it as well. Obviously things like the iOS change can, change things, but that is also one of the things you have to learn as an entrepreneur, to pivot as quickly as possible. And like my agency, Prototype Marketing, I actually was going to do more experiential marketing. And so I was going to leave, I left my 9 to 5 and I was like, oh, I'm going to do Brooklyn League and I'm going to do Prototype Marketing and experiential marketing. And I cannot do experiential marketing while in a pandemic, right? Exactly. And so I had to pivot. And so I pivoted and started working with e-commerce brands. And that actually helped that brand take off. So I think as an entrepreneur, you have to be able to be adaptable, as well as learning how to pivot. And, even in times of where, oh my gosh, my all the clients and customers I was getting, all of that stopped. How can I get more? What else can I do back? Let's dip back into my target audience sheet and look at that and see what I can do.
So for those of our listeners and viewers who are thinking about becoming an entrepreneur, how do you know if you're that nimble before getting into it, before you taking that risk?
Yeah, I mean, I think it'll be much easier if you have a job already, for sure. I mean, because I think you can take those risks without having to worry about being a financial mishap on your end for your personal life, which is, again, another reason why I advocate for is having that. Or if you're not having a 9 to 5, if you're having another gig or something else that also brings in some type of income, because it allows you to take those risks to see if that's something that you can do, if you can be nimble or not. That I would also encourage people to find someone else who's in your field, who's doing that work, who probably start off the same way that you're kind of starting off, and get their insight, get their thoughts, and let them tell you about the pain points, so you can very much see like, ooh, I'm not built for this. Yeah. Like,
and it's okay if you're not, right? Not everybody, this must be an entrepreneur, right?
Yeah. I thought at one point, I had moved to New York. I had 2 internships, Island Def Jam Music Group, where I was working in college promotions, and also had a theater internship. And I was like, ooh, I want to be an actor. And I'd done a couple of like shows. I did television. I did some other work. And I was like, I think I want to be an actor. And I got here and quickly realized I'm just not built for that. I didn't even want to go through the starving artist phase. I was just like, so I was like, not for me. But I'm happy I at least tried and got to the point to realizing that. So yeah.
So let's dive into some of the challenges. What's your top warning for early stage entrepreneurs?
Top warning.
Watch out for pandemics. No.
Yes. I would say don't allow yourself to stay in to stick to one solution. And I want to explain that. For example, I was sticking to the solution of, ads were working until they were not working, right? So it's still being adaptable, it's still being able to pivot, but also having that foresight, think about it ahead. It's like, okay, in worst case scenario, like a contingency plan, or an emergency contingency plan. In worst case scenario, if this dries up, what else can I do? How else can I bring customers or clients into my business? And so I would say be aware of that, not letting yourself just fall into something that it's going great. It's going, everything you thought it would be. What else? What are other avenues and ways and channels I can get people into my business?
Yeah. On a more optimistic note, how has being a gay man helped you become successful at entrepreneurship?
Yeah, I feel like within the community, and I can only really speak for where I live. I live in New York City, right? And we are here, and we are proud, and we're out. I think it's given me, as someone who's born and raised in the Deep South, a voice, and I think people read authentic, and they get authentic, and they get you're living your truth. And I think people want that, and they see that, and they embrace that. And so I feel like for me, it's helped me that way. Also, the community is very strong here. People love to support each other, and I definitely have a large group of friends who we all support each other in our businesses or in our endeavors. And also, I just think just overall, I think people just see me as someone who I don't know. Maybe it's because I'm gay, or maybe it's from the South or not, but just personable. And but I just feel like most people, especially in New York City, just like, oh yeah, you're cool. Like it's not a problem. It's not a thing. So I don't know. I think it helped me out overall just by the community that I have here. And I don't know if it would be the same, to be completely honest, if I was in a place that did not necessarily have at least a robust community of people you can like lean on, because things are good, but sometimes things are not good, and you need to have your community you can kind of lean on, and also just completely be vulnerable with. And I feel like sometimes sharing it with my brothers and sisters within the community, we can kind of do that.
So your story really says adaptability to me. I think that there's some aspects of comeback story here. There's some aspects of just facing challenges when they come up. Is this where you want to be? What's in the future for Phaon? Where is this the level of success that you want, or what's next?
Yeah. I feel like there's always what's next with me. There's always something else. There's always something like there. And so I have started a new venture. But what I've been really trying to do is kind of like, as I say, I start a new venture, I also want to be very thoughtful in the process. I am, being an entrepreneur back in that right now, I'm taking things slow with this kind of new business, just because I also dedicate a lot of my time to my job, and I actually love my job, and I love everything I do there. And so it's like more so building community with this new business. I launched the travel business called Drifter, while working on scaling everything else. But I am now smart enough to know that I need a team of people. And so luckily I do have people who are working on Brooklyn League, as well as working with prototype marketing, which also frees up my time to do my 9 to 5, as well as think about other ventures or investments that I have. But I feel like I am very happy on where I am, but I feel like there's much more to come with my endeavors.
Well,
awesome. Well, thank you for joining us.
Thank you. Thanks
so much. Good to see you.
Thank you. Likewise.
Wow, there was so much great information in that interview, and I really loved Phaon's answer to the first question, where he shared those 3 important points. 1, know your audience. The more you know your audience, the better you can speak to them. 2, just launch. There's no perfect launch. Don't sacrifice the good for the great. You can always iterate. And then 3, it always costs way more than you expect it to cost.
Yeah, it definitely does. Going back to that first point, I think it's really important for those of us as entrepreneurs to remember that idea of learning how to actually speak to your audience. For many of us as entrepreneurs, we want to try to speak to everyone because we think that that's our way to success, right? The more people we can talk to, the more likelihood we're going to have a successful business. But the problem with that, especially when it comes to our marketing, is that when we're trying to speak to everyone, we sometimes end up speaking to no one. So with targeted campaigns, we're actually able to speak to a small group of people who feel like they're being heard and will invest in our business, versus a large campaign that's speaking to everyone where no one feels heard and we don't make any money. So it actually can be a money saver to speak to a smaller community.
And a money maker.
Yes.
Thank you for joining us for another episode. Catch new episodes of Living Not So Fabulously every Wednesday at noon Eastern Time at yahoofinance.com, YouTube, and wherever you binge, listen to your favorite podcasts.
And remember to subscribe where you can, and set those notifications. And until next time, stay fabulous.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
What we were able to do with Dynatrace and with Grail was take, for the cost of the other platforms, strip that down by about 2/3 and still get the log management capability that we had before. So there's an immediate cost benefit there, but also the real advantage of being able to tie together the log data and the analytics you get from the log data along with the observability data and other event information means that you're much quicker to solve a problem.
All right, the question is, why are those in the Trump world floating so many different tariff ideas, and what are the implications for the market and for President-elect Trump? Joining us now to break it all down is our Washington correspondent, Ben Warshkol. And Ben, it's great to have you here. I guess, what is your assessment of these developments that we're getting on global tariffs and the possibility that we could see gradual implementation of them?
For sure, yeah. As you mentioned at the top, this is kind of the latest report here, and it's been kind of a choose your own adventure over the last 8 days. We've seen 3 different ideas that are floated. They're not in direct conflict with each other, but it's sort of evidence of a really rollicking debate going on inside Trump world right now. And to me, it's also evidence that there's no plan that can kind of span 2 competing impulses within Trump world. One side is Trump himself, who all evidence shows wants to go big on tariffs, wants to go heavy on tariffs and dramatic, even on day one. And he's given signs he's planning to do that. And then also these market reactions you're seeing. Today's report obviously is getting a more positive market reaction, but we had one last week of just a simple economic emergency, which had the opposite reaction. Another reaction this morning is from Signum. Andrew Bishop there at Signum had a good point, which is that this latest plan, this gradual tariffs, is kind of in the middle and perhaps unsatisfactory to both sides. It doesn't sort of accomplish the big dramatic move that Trump is clearly going to want. And as you noticed, it apparently hasn't been presented to Trump himself yet. So we'll see what he actually thinks of this idea. But on the other side, it does still have big tariffs coming in, just more slowly. So if you're a market, you're forward looking. Does this actually mitigate any of your concerns? That's all being sort of hashed out right now. And then with the X factor being Trump himself, who repeatedly talks again and again about how he wants tariffs for tariff's sake. He had a press conference last week where he talked about he didn't want tariffs as a negotiating point. He wanted them to bring manufacturing to the U.S. That's his position. And the one thing he's pushed back on in these reports is a report about paring back. He said, "I'm not paring back my tariffs. It's going to be big. That's wrong." So what he actually does, we'll see. All these competing pressures on him, but it's a lot of push and pull on either side for sure.
Yeah, Ben, it's so interesting. And even as you were mentioning, and the reminder that just a couple weeks ago, we were talking about the risk or reality that Trump might declare a national economic emergency in order to move forward with these tariffs. And we put the question to Stephanie Roth of Wolf Research, who essentially we asked, is there anything in the data right now that actually suggests that we're in an economic emergency outside of us going crazy over the price of eggs from time to time? Right. And she said, no, there's nothing in the data. This is more strategic right now. And so what do you best extrapolate from what we're hearing about the incoming administration about what the real strategy is and where, in which regions of the world it's set to rattle or ruffle the most feathers?
Yeah. So first off, on the kind of the economic emergency question, my sense from talking to experts as well is that an economic emergency is kind of in the eye of the beholder, and being the president specifically. So the way the law is written is that the president can declare an emergency and just say it's an emergency, and that is kind of the end of that question. And then there's possible legal challenges, but if the president says it's an emergency, it's kind of declared of that. In terms of where it's going to impact, we're also getting a lot of mixed signals of there. Going into the election, Canada tariffs was not a big topic of conversation, but it's something Trump returns to repeatedly again and again and again about going after tariffs. He recently talked about tariffing Greenland. The big one, obviously, I think that'll be throughout his term is China. He's promised 60% tariffs on China. He's threatened new tariffs since his election, and so that's going to be the big one that I think he'll return to again and again, even after day one.
Ben, just really quickly while we have you, the Department of Government Efficiency, it seems like they're also kind of backing off exactly how strict or how they can actually get towards some of the targets they've actually put forward here. And we've heard this from Elon Musk even saying this is going to be harder to do than they initially planned. What's kind of knocking around within the inner workings of the incoming administration on that front?
Yeah. So this is a subject I wrote about this morning in terms of kind of you see this with a lot of incoming presidents where the campaign trail rhetoric doesn't quite match up with what the reality they face. Trade is an example of this, and then DOGE, as you mentioned. During the campaign, Elon Musk promised at least $2 trillion in cuts. That raised a lot of eyebrows because the entire U.S. discretionary budget is $1.7 trillion. So we would have to be cutting into things like Medicaid and Social Security. But Musk is already backtracking on that and talking about how 2 trillion is the upper limit and 1 trillion may be more likely. This is a pattern we're seeing across a range of issues. The deficit, Ukraine is one. Trump promised to have a single phone call and end the Ukraine war. That war doesn't look to be ending anytime soon. And a range of issues like this, where the kind of actual reality is hitting Trump as it has most presidents when they come in.
Ben, thanks so much for taking the time here with us. Top of the
Good
show.
thing.
this
Good luck
morning.
to you guys.
Appreciate it.
News when you want it with Bloomberg News Now. I'm Amy Morris. Israel and Hamas have agreed to a ceasefire deal, bringing at least a temporary halt to the war in Gaza that has killed tens of thousands of people in the past 15 months and touched off broader turmoil across the Middle East. Bloomberg's Nick Wadhams.
There had been a last-minute snag where Hamas had allegedly put new demands on the table, including the complete evacuation of Israeli forces, but that now appears to have been resolved. And for the first time since November of 23, looks like we have a deal.
Details of the agreement are not clear. The fate of the hostages is so far unknown. A formal announcement is seen as imminent. U.S. consumer prices rose in December by less than forecast after months of faster underlying inflation persuaded the Fed to signal a pause in interest rate cuts. We get those numbers with Bloomberg's Michael McKee.
The CPI up 0.4 during the month of December. That's a tick higher than in November, and it is right on with the consensus. On a year-over-year basis, puts us at 2.9%, up 0.2 from November.
Bloomberg's Michael McKee. Wall Street breathed a sigh of relief after the surprise slowdown in inflation, spurring a stock